Hello, everybody. Good morning, good evening, good day, wherever you may be tuning in from around the world. We are back. We are back with building on Bitcoin. But this time, it's the halving edition. This is our virtual event. We're going to talk about everything that has been happening in the Bitcoin ecosystem. In just 4 short months here in 2024, we have seen more innovation across the Bitcoin ecosystem than we have in almost 15 years to date. But even more importantly, we also had a number of exciting innovations around institutions and the inflows around Bitcoin and ETFs. We also saw the 4th Bitcoin halving just happened short days ago. The introduction of runes, the Nakamoto release around stacks, and so many other technical upgrades, which we're going to break down for you here today. We are joined by a number of experts across the Bitcoin ecosystem and various networks and various layers as well to share their thoughts and insights with each and every one of you today of what's happening now and what's happening to come across the Bitcoin ecosystem. So take a seat, hang out, grab a coffee, grab a tea, and join us for today's discussion on all that is happening around building on Bitcoin. We're going to kick it off, but before we do, I'm your host today, Kyle Ellicott. We've got, again, an outstanding show for you today. With our very first panel, we're going to talk about how this halving, the 4th halving, is different from those before it. Ladies and gentlemen, please welcome up our very first panel. Natalie, the floor is yours.
Hi, everyone. I am Natalie Brunell. Hi, everyone. I'm Natalie Brunell. I'm the host of the Coin Stories podcast. First of all, I want to apologize for the voice I woke up with this morning, so I will try to turn it over to the panelists as quickly as possible. But I do host Coin Stories, which is a podcast dedicated to educating the general public about Bitcoin, how it's a powerful savings technology, and why everyone should have it in their portfolio. So with that, I want to introduce today's panel about why this halving is different. Maxim Balashevich of Santiment AG. He's the founder and CEO of Santiment, which is a data analytics platform. Reena Shah of Trust Machines. She is VP of Product and Operations. And Matthew Siegel of VanEck. He is the head of Digital Assets Research. So first of all, for those who might not be familiar with work, I just want to go around and maybe give just a couple of sentences each on what you do and why you're passionate about Bitcoin.
Hey everyone, Matthew Siegel. I run digital assets research at VanEck. We are a traditional asset manager with about 100 billion in assets under management, and we run close to 20 different digital asset strategies comprising about 1.5 billion in assets. We recently brought one of the spot Bitcoin ETFs to market. The ticker is on my hat, and we also run a couple of different actively managed liquid token strategies, one of which I manage, focused on L1s, L2s, dApps, and of course, Bitcoin.
Cool, thanks. I think I will hang, so to say, on your tail. In Sentiment, for over than 7 years, our passion have always been to collect, standardize, package properly, and deliver the data, which is relevant for doing, among others, research you might be doing. My own passion ever since I started was about behavior analytics. So try to understand underlying dynamics, why things happening, when they happening, what it means. And it includes a lot of on-chain data, social data, dev activity data, market data. It's a vast field, probably not as big as what you're doing, but in terms of data, maybe even bigger as we are providing data. And for whatever questions or topics we touch today, we will cover what we can. And of course, Bitcoin is the major trend identifier. You always know where's the market if you know what's going on with Bitcoin. but we'll see if we get to how detailed our conversation will get.
Hi, everyone. I'm Rena. I'm with Trust Machines. Trust Machines is a company that builds Bitcoin products for Bitcoiners and beyond. Notably, we have the Leather Wallet, a growing Bitcoin Web3 wallet that supports Bitcoin, runes, and other L2 type assets. And I've been pretty passionate about Bitcoin for a number of years. Ironically, I started mining Bitcoin in 2012 while working out in the oil rigs.
Wow, that is super impressive. I wish I knew about Bitcoin in 2012. Let's get right into the topic of the halving, because this one took place in a world that's very different from the one that Satoshi Nakamoto published the white paper in. We have institutional adoption now, thanks to the spot Bitcoin ETFs. We're no longer in that QE infinity zero interest rate policy environment, although we might be again in the future. We have very serious geopolitical conflicts happening around us that obviously affect the macro landscape. So I'd love to hear from each of you about the data that you're following, showing how this halving really is different and what market forces are at play.
So if you want, or I can
go for it, Maxim.
Yeah, it's a very good introduction summary. You mentioned all the points which are indeed different. And after mentioning it, it's quite obvious, as I've never been in this situation before. No one probably really knows what will happen in the next year. It's a kind of will be honest answer. Like there is no experience, past experience. And even though in investment anyway, basing your decision based on the past experience is the tricky way, you might be wrong too. But now in a situation we've never been before. And we've done quite a few cycles. So based on the data I'm observing, it's quite conflicting one. On one side, there've been typical signs of very topish formation, like everyone expecting 200, 300,000, and everyone is super excited. Which is normally exactly, okay, we arrived at the top, so time to go down on one side. Yeah. On the other side, the typical redistribution cycle, I know if we get to charts, I could show charts, I prepared some chart layouts, which normally takes those who have been lucky or smart or whatever enough to accumulate in the previous cycles, also bear market, they start part of them redistributing in the bull market. We are around 6 months in the process, not 1 year, as you might see if you look in the price now. The distribution process always starts later. People wait, or it starts. We are 6 months, and typically it's 12 months. So it's a good sign. We might have still at least 6 months of advancement in the price, but yeah, I will stop on this. Yeah, so it's just 2 major data points I'm observing. There are 3 or 4 more I prepared, but it's like 2 major ones. One is extreme excitement, and you see accumulation of very small participants, their volume growing or their holding growing. Another side, which is not probably that good. Big players accumulated before or around announcement of ETF, and they've been relatively quiet.
So Maxim, before Matthew and Rena weigh in, are you kind of saying that we're in the middle of maybe a bull run? Because I've heard other analysts, including Lynn Alden, say something similar. But for a lot of us, I would argue it doesn't even feel like the bull market has fully started yet.
Oh, no. Don't make a mistake. You remember, I don't know if you noticed, there was a huge activity around meme coins. And it means we're at least in the middle, when not beyond the middle. This kind of activity, when irrationality kicks in and people speculate, earn or lost, or participate in something which is beyond all fundamental models or anything, it's a sign we are beyond the middle. So rest assured, middle is already past.
Yeah, I agree with Maxim. I think it's still a bull market. I know the topic of this panel is what's different about this halving, but I just want to focus first on what's similar. And I think there's good reason to believe that Satoshi set the 4-year cycle to line up with the US election cycle. And should be noted that it's not just a US election cycle. This is a global phenomenon this year. A record percentage of the global population is going to vote in democratic, presidential, or national elections. And we've already seen in the elections that have taken place so far, three major ones: the pro-Bitcoin party, the pro-crypto party has won in every country, right, with kind of Argentina being perhaps the seminal event there. The second thing that's similar is the liquidity cycle. We may not see any large Fed interest rate cuts, but just general measures of liquidity like M2 is now on the cusp of growing again year over year. And during the Bitcoin bear market, liquidity was really shrinking. And then the third thing that I think is similar this time is just the trend of generally wider digital assets adoption. So in 2020, it was DeFi summer, which onboarded so many users into the Ethereum ecosystem. 2024, we have Bitcoin ETF and Bitcoin L2 summer. So those are some of the similarities. In terms of what's different, a lot of folks mentioning about the pre-halving all-time high for Bitcoin. Personally, I don't read too much into that because we've just had such higher levels of general inflation in the world over the last 3 years that if you inflation adjust Bitcoin's rise, it hasn't yet hit an all-time high. Another thing that's different, which we could note just today, is the immediate reaction of the blockchain to the halving. Noticed that Bitcoin mining difficulty rose yesterday to hit another all-time high. That's changed. So if you look at the difficulty adjustments immediately following previous halvings, they were always negative, the first two, sometimes significantly so. What's different this time is we have these new protocols on Bitcoin, Ordinals and runes, which are clearly catalyzing additional transaction fees that are accruing to the Bitcoin miners and maybe delaying some of the pain that generally takes place across the ecosystem as kind of higher cost Bitcoin miners have to grapple with their strategies going forward. So we're still quite optimistic and think that Q4 specifically with whichever of these candidates wins the US election, both of them are the most fiscally profligate presidents in the history of this country. We think that investors are going to look back at this period of time, 7% fiscal budget deficits in the US with full employment. It's absolute insanity. It's going to look just as crazy as 1% interest rates did in the year 2000. So, we're worried about kind of a disorderly fiscal situation in the US. The year after the election is typically the only time when political parties can get together and grapple on big issues like the bankruptcy of Social Security. Is that really going to happen? If not, could be too late. So that's where we see kind of asymmetric upside to Bitcoin as that narrative gains wider adoption.
You brought up some really good points, especially with regards to how much we're spending with the deficit. It's basically like we're already in a recession, but technically we're not. And you're right about the miners as well. Typically, right after a halving, a lot of them shut down because of that revenue shock. But here we're not seeing that, and fees are spiking and making up for it. So we'll see how that plays out. But Rena, how do you think this halving is different?
I think this has been the most fun halving that I've ever experienced. If you think about halving cycles, this is the first time it hit mainstream media. Everyone was talking about Bitcoin halving 4 years ago. Some people spoke about it 8 years ago, literally crickets. So to me, that was pretty exciting. And I think part of what makes it really exciting is just the new development and protocols built with Bitcoin. We've had Ordinals really kind of spurring the Bitcoin builders and cultural shift of, can we do more with Bitcoin? Is Bitcoin no longer just your pet rock? But then even going to this particular halving on this block, Runes dropped. Runes is a new protocol creating a different fungible standard on Bitcoin. If you looked at Runes before the halving, just in testnet, $1.2 billion in testnet activity pre the actual protocol launching. And since April 20th, miners have generated over 100 million in rewards. 80 million was just transaction fees. largely due to runes activity, because a lot of people are trying to create their first rune right after the halving. And so I thought this halving was a bit different because we've created new incentives for miners that didn't necessarily exist in other halving cycles. And then the other thing that stands out to me that you mentioned earlier is we're in a different geopolitical climate. With all of the, let's say, wars going on, we're in this demand cycle where energy is no longer able to flow correctly across different markets. So with a lot of the trade restrictions and sanctions, you can't move oil. So this mining, especially in America, has increased to be more than 50% using renewable energy because oil cannot flow. And that's pretty fascinating because in the past, predominantly all mining was done by fossil fuels. So this halving cycle, we're green.
I'm really glad you brought that up. I had the chance to bring some executives together from public mining companies in a halving special that I did, and they talked a lot about that, about how there's this massive shift toward renewable energy. There's so many misconceptions out there by the general public that Bitcoin uses too much energy and it's not green, when in fact it's the polar opposite, and miners are incentivized to find that cheap electricity, which is often stranded or wasted energy, which is really, really exciting to see where all of that will go. Well, we're running out of time. We only have about 6 minutes left, but I want to get from each of you just kind of why we haven't hit a new all-time high adjusted for inflation, or that 100K price that so many people are looking for, and what will it take to get there in this halving cycle if you believe it will still happen? Matt, I'll start with you.
I think the election is the biggest event of the year in the U.S., and a red wave would just remove a lot of negativity around how regulators are going to tackle adoption of Bitcoin and other digital assets. And so that's really the wall of worry that we need to climb. And I think the upside is greater, under a Republican victory. And the polls have been creeping in the other direction, and SEC has been dropping, enforcement actions on Uniswap, and then the typical kind of post-halving lull. So it's pretty common to have multiple 20 to 30% drawdowns post all-time highs. We're kind of in one of those right now, and as the institutional investors increase their adoption of these Bitcoin ETFs. And we think that's going to come. There's a story today about Morgan Stanley about to make these ETFs more available. A lot of our larger clients tend to be the regulated broker-owned asset managers, and they have not yet finished the macro models, these 60-40 models that we think are going to be more like 60-38 and 2. And as those drop, the Bitcoin flows should increase, and then the election will catalyze further price action. That's our take.
Maxim?
Few good points were mentioned. Remember that the way we are looking at sentiment when you do behavior analytics, it's a bit different angle. The main reason why we did not make a new all-time high is inside your question, because too many people expected it. And like really almost everyone, the moment we climbed to 70, 71, everyone believed, okay, now it's 100 next stop. And the market is the most complex game if you're playing it, and the most painful one, and it's supposed to be so. And it's by design, so it's never an easy one. So the moment the majority consensus crowd expect all-time high, it goes down. And as a condition, also when we make reports or investment decisions, the condition for market to make all-time high when the substantial or majority believe it will not happen. And you can see it on variety of metric. Small hodlers start selling, decreasing there, or you see the talks. There are many metrics we can say, okay, now there is a very substantial wall of war established. Then we can go. Yeah. So you actually should be wishing for wall of war. It's a very good condition environment when the market can go up. Yeah.
Well, I'm just happy that it's not 100 yet, so I can stack more, right? So, Rena.
It's another good way of looking at it. Yep.
I think it's only a matter of time until we get there. And what I predominantly look at or focus on and how we're going to get there is the increased demand for block space. We're getting to the point that all of the, let's say, degenerate activity on the L1 is going to break the L1 and it's going to cause speculation in Bitcoin price and such. And so as more and more builders come into the space of wanting to build Bitcoin products, we're going to be looking at Bitcoin L2 season. It's already at this point that, I don't know, 100 L2s have claimed to be launching this year, and more and more developer activity is going to spur kind of new innovation and creation on Bitcoin, where people are going to demand to transform Bitcoin from a passive asset to a productive asset. When Bitcoin is moved into that productive asset of Bitcoin DeFi, we're already in Bitcoin art, Bitcoin RWAs. That's where I think we're going to get to that 100,000 and beyond.
Well, and I've said this before, but I just think each halving really demonstrates how elegant and predictable this programmatic policy is, and the bear markets have been for building. And I can only imagine what we'll see over the next 4 years into 2028, because so many people have been working hard to spur adoption, to build companies in the space, encourage people to really get use out of Bitcoin, so it doesn't just sit there. And so many companies are doing amazing things. So thank you so much to the panelists. We are wrapping up. If anyone has just a final thought that they want to leave people with as they watch the rest of the presentations, I'll just go by each of you, and Rena, I'll start with you.
I think we're in this truly magical period of Bitcoin. This is very different than any other life cycle of being in Bitcoin. Innovation is occurring. People are actually thinking of new BIPs, which have not occurred in multitudes of years. And the creative energy is here. We want to transform Bitcoin. No longer your pet rock, productive asset time.
Maxim?
Remember to stick to your own analysis, and don't be afraid if need sometimes to be against the majority expectations. Both way, too good, you should be worried, not so good, and people think too bad. It's okay to be good. It's most of the time contrarian in crypto. It's a good strategy. Just need to apply it properly to you.
And Matt, 5 seconds.
Builders out there, be careful about your token economics. Please don't engineer them for short-term pumps and then long-term dumps as these huge supply unlocks come. Those aren't the kinds of tokens that we are interested in. But thank you for building. Have a great event, everybody.
Thank you.
Thank you so much for participating in this panel, to all the viewers and listeners, and we'll see you soon.
Thank you very much, Natalie and panelists, for talking to us about how this halving is different than those before it. Let's continue the conversation and go from the halving to talking about a common term that has been referenced around Bitcoin, and that's digital gold, and how Bitcoin is going from digital gold to the cloud casino. Will runes bring degens to Bitcoin? I don't know. Let's find out. Let's welcome up our next panel and the moderator, 0x Dima. The floor is yours.
Hey everyone, thanks so much for having me today. We're here to talk about runes and the digital casino, and as the creator Casey Rodmore likes to call it, artisanal shitcoining. Let's just start with myself. I'm OX Dima. I'm the CEO of SatScreener. It's the Bitcoin real-time token aggregator. Let's pass it around and introduce everyone, starting with Jason.
Hey Dima and everyone. I'm Jason. I'm Chief Innovation Officer at OKX.
Rap.
Hi, Dima. Good morning. I'm Rafael. I'm a staff software engineer at Hero Systems.
And Akshat.
Hey guys, I'm Akshat Vaidya. I'm head of investments for Arthur Hayes Family Office, Maelstrom.
Great. So runes. Preceding runes, let's just talk about meme coins in general. What I like to say is meme coin mania. How would you say the recent surge in meme coins across all chains has affected development specifically on Bitcoin and Bitcoin L2s? Yeah, we'll start with Jason again. Sorry.
All right, cool. Yeah, it certainly has been the meme coin season. I don't like the term, what was it? What did Cal say? Something about casino or something?
Yes,
Um,
cloud casino.
Cloud casino. Yeah, I'm not sure I'm personally a fan of that term. I think that implies that, the game is rigged against you and there's a house and they're, taking something away every time. But I do think the meme coin season has been at the very least fun, right? And here at OKX, as an exchange, as a platform, and providing, access to crypto broadly, that's what we do, right? We want to make sure that users have access, the ability to access whatever meme coin, whatever token really that they feel that is suitable for them. And we hope we can do that for them in a responsible way. That's what we're doing.
Fair. What about you, Raphael?
Yeah, I think meme coins are a very important cultural aspect for Bitcoin, especially because it's excuse me, it's when gaming sort of meets innovation in a lot of ways. So I've loved to see some of these degens, as we call it, actually build new applications and new ways to use Bitcoin, which is something that personally I hadn't seen before or in a very long time. So I think it's a great incentive alignment as well, because even though everybody knows it's a casino, right? And and that you're playing just to have fun and to experiment and to see what happens. It's also an idea that brings a lot of builders and a lot of people that are actually interested in creating new technology. So for me, that's the most important part.
Yeah, we're definitely going to touch on runes as utility tokens actually next, but let's push it to Akshat.
Yeah, no, I mean, I think it's easy for folks outside of the space to laugh off meme coins as why would people spend money on this? But in the same breath, they'll go and buy Nike stock and which sells a $4 shoe for $180. So I think it's fashion. It's why people have jewelry. And as Raphael pointed to, it's you could view it, if you need to take this kind of utility angle to it, you could view it as something that fosters infrastructure, because as more and more people need to trade these things, the existing infrastructure isn't quite scalable enough.
Right. Yeah, I agree with that. We've heard the terms, cultural or social consensus or attention economy. I think those all apply to meme coins, and it makes sense that now that we have them on Bitcoin, the attention is focused on digital gold. Okay, let's talk about token standards on Bitcoin in general. As we all know, runes is new, but there wasn't only runes, right? We had BRC20s, we had TAP, we have SRC20s, ARC20s. I just, maybe if each of you could pick your long-term bet or who you think is going to win the race, or just comment on each of the standards. Starting with Jason again.
Yeah, for us, look, we've seen, it's been over a year now where we've been playing with Ordinals and BRC20, and I think there was BRC20S, and you've listed a whole bunch of them. We've been working hard to see where our users are and try to meet them there, adding support for as many as we can into our Web3 wallet and into our marketplace. So today we do support runes that went live very recently. SRC20, ARC20, BRC20, we do support those. I think where we are headed though is there's still quite a lot of friction in understanding and using each of these, and actually all of this on Bitcoin. I think there's still a lot of iteration to be done. And that's where we are working hard to do, is try to smooth out some of these the learning curve. Really, it's still not easy to get into the space, especially when you're dealing with the Bitcoin block times and fees and things like that. And so there's a lot of work to be done. And before we get there, I mean, before we figure out which protocol wins, we still have all these little pieces to chip away first. So we'll see.
Yeah,
a lot of work to be done.
For sure. I also think, we could see somewhere down the line where there's an interoperability between these token standards. And at the end of the day, everyone just refers to them as tokens on Bitcoin. But, we can't really see the future. Raphael?
Yeah, one of the standards that I've been closest to in the past year is BRC20, because at Hero we are part of the oversight committee that works on the governance of this standard. And I was positively surprised to see that runes take some of the good aspects from BRC20, like, for example, free and fair mints. which is something that I think it's very important now in this space. And also that these protocols have really focused on simplicity. I think that's also very important because, I mean, as we all know, they rely on off-chain indexing to work. I mean, Bitcoin doesn't really know what's going on in that protocol, so it's up to developers and tool engineers to really move the standard forward and provide the the ability for people to see their holdings and trade the tokens on different websites. So yeah, I think that is in itself is a great innovation because it really makes things easier to build on top of, I think. So yeah, I'm really very excited to see these things. And I'm not sure which one will be the winner long term. I think there's a use case for all of them, really. It's more also about timing and developer access and things like that. But in general, I'm just excited to see all of this happening on Bitcoin, actually.
Right. Speaking of developer access, I just personally, as a developer, I think that how Runes is baked into Ord makes it very easy to trust the indexing, and that's just like its biggest initial draw. But BRC20 developers have been building for a long time, and the indexer is trusted. Everyone uses it, so that's still a good argument itself.
Just for on Raphael's point, the BRC20, we went through some pains to get here, right? It's been a year plus to get here, and we've worked as a community to make sure we have those tools and we have consensus, right? And so Runes is new, but it does have a good start. So we'll see.
Yep. Akshat?
Yeah, no, we're kind of standards agnostic here. We've backed only one project in the space called Oil. It's somewhat like a new wallet / swap protocol that's coming out soon. But I think for me, I'm very curious to hear how there's some rumors going around that BRC20 indexers might be able to compute EVM smart contract code, which would be interesting if they're able to make that kind of upgrade happen, kind of making them sort of more competitive with Runes, but we'll see. It's too early to say.
For sure. Yeah, that's I know that's in development. Okay, let's switch focus on what I was alluding to before. So meme coins are great, and we all love meme coins. We're talking about that, but specifically with Runes, personally, I felt that Runes is probably the best unlock for utility tokens on Bitcoin. Just to mention them, because they just announced yesterday, something like Ducat, which is a Bitcoin-backed stablecoin launching on Runes, which they just made an announcement. What are you guys' thoughts on utility tokens being directly on the L1, on Bitcoin L1, and if Runes is most suitable to that, or does it not matter which standard you do? And is the big unlock potentially with all these standards not meme coins, but actually utility tokens? Jason again.
Yeah, I mean, one man's utility token is another man's meme coin, right? Like utility can be defined in so many arbitrary ways. But yeah, it's good to see, back to Raphael's point, I think innovation, experimentation is ultimately what we want, right? And Runes being a more efficient protocol technically, I think leads it to be a little bit more well-positioned for the longer term, is my thinking, which allows people to try their hand at new use cases. And this expansion of the design space on layer 1 Bitcoin is just tremendously exciting for us. And here at OKX, we'd love to see these use cases come out and see how we can best support them when they do.
Yeah, I'm super excited just in general about utility tokens on Runes. Raphael?
Yeah, I think utility tokens are the logical step forward for a protocol such as Runes. It was interesting to me to listen to Casey a few days ago on one of his podcast episodes and warn about that he predicted these utility tokens will be popping up relatively quickly. But I don't think they're a bad thing on itself. I think they just need to go through certain different challenges that we've seen with other token standards or even tokens that live in smart contracts, like in chains such as Ethereum or Stacks or whatever. Because, for example, now you have to worry about the actual price of the UTXO in which your rune is sitting and how that plays into the value of the token that you're actually trading. If it's like a stable coin, for example, or a token that you can exchange for something in a game or whatever. So it creates a different set of problems. But again, I think these problems bring about a lot of innovation as well. And I don't think it will stop with just utility tokens. I mean, we'll see these runes be moved into layer 2s, traded in other channels. I mean, it's just, I'm really, really excited to see what's going to be, what we're going to be seeing in the next few months. I mean, it's just, we have no idea what's going on in the future. So I'm excited.
I would argue that it would be a lot easier to onboard masses if they didn't have to learn about UTXOs and splitting UTXOs. Even as a developer, like I find it super cool, and I love the way Bitcoin organizes its data. But you know, just to have someone that's using MetaMask to trade NFTs, circa 2021, I think if you explain to them that they had to split their UTXOs, they'd be pretty confused. Akshat.
Yeah, no, I think I agree that kind of pointing to some scalability limitations there, right? With network congestion, fees are astronomical for like most real utility token use cases. So someone here probably knows more than I do, because we're just starting to market map this from Maelstrom's side. What are the top scaling solutions? So we haven't quite figured that out yet. And how it's going to play out, but that's kind of mandatory for any of these to actually have real utility.
For sure. And that brings us directly to our next point. Do high fee environments on L1s make the case for L2s, right? Like the great stories that we've heard about millionaires with Dogecoin, they put $50 in. If you were to put $50 into a rune 2 days ago, you'd be spending 90% of that on fees, and you'd actually only be getting like a very small amount of that rune. So do we need L2s to have true meme coins? I would argue that you don't, because we've seen it play out with BRC20. But at the same time, like the idea of being able to buy $10 of something and kind of sitting on a dream, that is kind of the retail unlock. So do we need low fee environments and L2s for meme coins to really take off on Bitcoin? I'll start with Akshat here.
Well, I think it just inherently makes it a whale game, right? Which is okay. You're targeting a more premium segment, which maybe is not the worst thing in the world. There's already fucking meme coins everywhere, and Solana is killing it with kind of like it's instant and free essentially with kind of their meme coin season. So it's probably okay for now, especially in a bull market. That is for Bitcoin meme coins to be the premium, kind of like the pricey jewelry. Maybe that's okay, but I just don't see how that lasts beyond a bull cycle.
What do you think, Jason?
Yeah, I mean, having these on Bitcoin attaches a certain premium to it. Like Ashka said, block space is expensive. Transferring stuff is expensive on Bitcoin. But Raphael made a great point that these are UTXOs and they can be embedded into layer 2s, right? And I think that's what Runes potentially has it going for it. I'm not super technical into the details, but my understanding is you could even do things like Lightning or other L2s using the Runes UTXOs themselves, which makes it very compelling if your specific use case was cheap and low and fast transactions and all that. So maybe there is an option down the road for both the premium and the mass market meme coins. We'll see.
Yeah, to touch on that, we also know that when Runes launched, if you create a rune with a turbo flag, you're opting into any upgrades to the Rune protocol. And like you've said, potentially some of these upgrades might extend themselves well to L2s and making them more usable. Raphael?
Yeah, I think layer 2s are a natural next step for tokens on the layer 1. Especially because, I mean, we all expect and hope that high fee environments are going to be sustained in the future, because we all know about the worry on the security budget of Bitcoin, et cetera, et cetera. And it would be interesting also to see that since all of these tokens live in UTXOs, as we mentioned, who knows? I mean, fees might be so high that those UTXOs in the future could be essentially unspendable, or you would just spend the entire amount in fees when you try to actually use the token. So L2s make a perfect solution for this. but obviously these bridges not yet exist or they're under development still. So yeah, I think layer twos are going to be a great next innovation area on these protocols, and especially because you'll be able to then trade those tokens using smart contracts, and that will bring about new ideas around DeFi and all these different things. So yeah, I believe we're going in that direction.
Great. Just a few more minutes here. This is kind of the, maybe contentious topic that I've spoken about on Spaces a little bit. And as we know, pups, the BRC20 pups, which eventually became a pre-rune, it got bridged using the multi-bit bridge to Solana, and that caused it to absolutely just increase in trading volume because the friction on Solana is so low. It's very easy to trade. Kind of a fringe argument here, but can we look at something like that and look at a bridge that bridges it to Solana and argue to an extent that using Solana as a Bitcoin L2? And I know maybe that doesn't exactly make sense, but when you think a lot of the ways some of the new L2s that are springing up, they're essentially just bridges with multi-sigs, and why not do the extra leap socially in your brain to realize that maybe any layer that allows you to bridge to Bitcoin is almost a Bitcoin L2. What are your thoughts on Solana as a Bitcoin L2? Start with Jason.
I'm not sure the Solana community would like that, but it is an intriguing thought. I mean, at the end of the day, all these solutions, these potential L2s in quotes, however you want to define them, all these potential solutions that are coming up to market. I mean, the market will decide, right? I think they all have their little tweaks and quirks, and if people value the speed and the lower transaction fee, by all means, I actually don't think it necessarily even needs to be attached to Bitcoin, right? Let's just embrace that. If that's what you're going for, that's the use case. Deploy it, build it on a platform that supports that. If you want Bitcoin security and you want Bitcoin decentralization, all those characteristics that come with it, then you do it on Bitcoin, right? And obviously, even with the Bitcoin L2, there are trade-offs that you're making. So it's up to the project or the coin community to figure out what exactly works for them.
Yeah, I fully agree with that. Akshat.
Yeah. Honestly, it's an interesting concept and a thought. I think I can't speak at all to the technical limitations to that, but I think from a cultural standpoint, it's pretty interesting. It also speaks to something more broadly that we're excited about. This whole idea of DeFi on Bitcoin, and all of the infrastructure that's being built to enable that. That's something we're on the hunt for. So anyone building in that space, feel free to reach us out at Maelstrom Fund.
Yeah, for sure. We're just closing up here. So Raphael, closing thoughts, as well as Solana as a Bitcoin L2, or is that an absolute meme take?
I think it's a bridge is a use case of Solana. I don't believe it's an L2, especially because the entire chain is not focused on building on top of Bitcoin and Bitcoin finality and these things. But I mean, we'll see how the L2 space develops in the next few months.
For sure. All right, guys, thank you so much. Runes, meme coins. Let's keep going here. Thank you.
Thank you very much, ZeroX, Dima, and to the entire panel for talking to us about what could be or what couldn't be around memes, and could Solana be a Bitcoin L2 as well? Much more to discuss on that, but continuing today's discussion, let's talk about what can Bitcoin do better. We've seen the halving. We've got a ton of new technology that has recently been released across the Bitcoin ecosystem, but what can be done better? Does something need to be done better? That said, let's welcome up my panelists, and let's jump right into this topic. Meltem, Ryan, do I got you both?
You got us.
Right. Because both of you are OGs and well established in this community, I wanted to make sure you had welcome music to come on. So I hope that really got us started off here well. But nonetheless, Ryan of Messari, one of the best research, if not the best research groups in the game. Meltem, OGs of OGs, aspiring cult leader, as well as we discussed behind the green scenes. So much knowledge between the two of you and this entire space and its history as well. I want to start off and talk about post-halving and the last 4 months. We had the halving happen just about 4 days ago, 5 days ago now. We have seen mining fees the highest they have ever been across Bitcoin in 15 years. Runes went live. We've got 12 plus token experiments. Memes on Bitcoin are now a thing. We've got a brand new BIP that has just been proposed, and a ton more that has happened again in a simple 4 months. What is on both of your radars looking ahead at the next 3 to 6 months across the Bitcoin space? Ryan, let's start with you.
Well, thanks for having me. You know, it's exciting. I kind of feel like I was talking to one of our analysts earlier, and it almost feels like we finally arrived at a moment for Bitcoin that is 8 years after I mid-curved the Ethereum launch. And back then, my general thinking was the EVM was terrific, but why would you need a new native token, right? And so it was almost like the Bitcoin maximalist equivalent of blockchain, not Bitcoin, in terms of, you know, how do you extend functionality and get it, you know, more Turing complete system that would power a bunch of applications, but just use the Bitcoin network and use something like a side chain or, you know, a layer of Bitcoin. And that was at the time when we had the scaling wars. It's safe to say the Bitcoin code base was thoroughly ossified. And in the last year or so, we've really seen a resurgence driven, I think, more by the recognition that we're going to need a vibrant fee market and some other applications that will drive fees in order to make the core Bitcoin use of store of value sustainable, because we need mining to be sustainable and we need to be able to move away from the subsidy. So not overnight, but, you know, with each halving, I think the need gets more acute, and the realization, I think, starts to set in amongst the community that this is something that should be invested in and is going to need to happen for Bitcoin's long-term security model to work. And what we've seen, you know, post-halving is, I'm not sure if it's persisted, but at least, you know, there was something like 100 consecutive blocks where fees were greater than the subsidy. In the first quarter of the year, fees were about 6.5% of the subsidy, and obviously with the halving, that you can extrapolate that at least doubles. So you're now talking about fees being a sustainably higher percentage of the network level mining rewards. And when I think about the evolution of applications, and whether it's, you know, runes or, you know, lightning finally taking off, or stacks, you know, whatever it is there going to be value accrual in the Bitcoin ecosystem that's going to lead to fees that will go to the miners in order to sustain this proof of work operation that undergirds the entire apparatus? So I think that's the one that I'm keeping the closest eye on. And ideally, even if those fees are volatile, you'd expect them to smooth out over time. And as long as they're consistently higher, and it feels like there's some staying power there, I think that's the healthiest thing for the long term of the network, and probably the trend to keep the closest eye on.
Meltem.
Yeah, so I think Ryan kind of gave a great overview. Messari is, by the way, the best research platform in the space. I say this as an investor in Messari and a longtime co-conspirator of Ryan's. We started our crypto careers together at DCG. So Ryan and I have had many zesty arguments over the years, late nights, arguing about random Bitcoin stuff. And I think one of the interesting things, so I think Ryan gave a great synopsis of what's happening, the narrative unfolding within the Bitcoin ecosystem. But as we saw, I caught the tail end of the last panel where there's a great question, like, is Solana potentially Bitcoin L2, right? I think one of the things we're seeing as well, just kind of zooming out and looking at the broader crypto ecosystem, I'm not a Bitcoin maximalist per se, but I'm a Bitcoin believer, right? I don't know what you would call it. Like, Bitcoin is my first love. Bitcoin is my truest love. I think what we're starting to see that's really fascinating to me is as more and more people come into the crypto ecosystem, right? You have people who came in during the years of Bitcoin, which includes people like Ryan and myself. Like, we remember the block size wars, the scaling wars. Then you have the Ethereum sort of generation who came in during 2017, 2018, ICOs, enterprise Ethereum, like consortium kind of approaches. Then we had the DeFi, like script kiddies who came in, not to be pejorative, right? But there was a lot of copy pasta, and it was great. It brought a lot of people into the ecosystem. Now we have a whole new wave of people who are coming in, and their first interaction isn't with Bitcoin or Ethereum, it's with Solana or Sui or Aptos, and that's a totally different user experience. So it's been interesting to see as more people come into the crypto ecosystem via these various routes. One thing I've been fascinated by is how people all go through the same sort of learning cycle, where you get involved in a new ecosystem. Doesn't really matter what ecosystem it is. At the end of the day, all roads lead back to Bitcoin. There is something beautiful and pristine about Bitcoin, about the creation of Bitcoin, no pre-mine, the economics of Bitcoin, the thermodynamics, the physics of the Bitcoin network, and proof of work, which has been much maligned, but I think is just incredibly unique and incredibly potent and powerful in a world where we see these abstractions that kind of move us away from the world of atoms and energy, right? And so I think Bitcoin, in a way, is sort of having this resurgence of interest because as people create wealth in these other parts of the crypto ecosystem or go down this philosophical rabbit hole, they're sort of coming back to Bitcoin and how elegant and graceful Bitcoin is in its design, in its social scalability, just like all of these things about Bitcoin that are really powerful, really unique, and make it really, really it's the king of crypto, right? There's nothing like it. There will never be anything like Bitcoin in my view. And so what it does is it's creating this interesting dynamic where people are looking at Bitcoin. The question I ask myself, right, is, okay, if I were an AI agent, what currency would I want to earn? Well, I don't want dollars, right? Because the dollar is melting faster than an ice cube. So no, thank you. I don't want a centralized a cryptocurrency where the supply is sort of controlled and the issuance is driven by, you know, this oligopoly basically on chain. Bitcoin really, to me, is like the most logical currency that our AI overlords and our robot friends would want, because it's money backed by physics. And if you have all of the knowledge of, you know, the universe, all the catalog knowledge of I should say Earth, right? Not the universe, but if you have all of the knowledge of Earth, like cataloged, and you can access it, you would probably choose money that's backed by thermodynamics and physics. So to me, Bitcoin's having this really interesting resurgence, and it's so fun for me seeing people from outside the Bitcoin ecosystem who viewed, to Ryan's point, Bitcoin as an ossified protocol, Bitcoin as a space where there's no innovation, sort of circling back to Bitcoin and saying, wait a minute, there's something really unique here. And what we're starting to see now is, I think, specification. Different protocols are really good for different things. So Ryan's point around the fee subsidy, I'm not sure that the fee subsidy increasing is necessarily helpful to driving more use cases and more adoption of Bitcoin. But I think what it does is it starts to create an awareness that maybe, like some of the other protocols we're seeing, Bitcoin needs to evolve, where instead of being monolithic, right, it becomes more modular and more composable, where there's more specification as to what's happening on different layers of the protocol. And I think Stacks has really been ahead of the curve here. That's why I'm excited about, you know, being a part of the Stacks ecosystem and being on the board of the Stacks Foundation. Is we're starting to migrate kind of to this worldview and an emergent consensus that Bitcoin can and should become more modular. And I think that opens up a really exciting new design space. I know it's a contentious one, but I think there is growing awareness that Bitcoin becoming more modular does not detract from the value proposition of layer one Bitcoin. It doesn't in any way, you know, damage, I think, the incredible staying power and potency of Bitcoin layer one. What I think it does is it creates more ways for value accrual to happen and stay within the Bitcoin ecosystem versus leaking out to all of these other ecosystems. So I'm really excited about the fact that Bitcoiners and non-Bitcoiners alike are getting more excited about these new emergent use cases and these new modular approaches to building on top of Bitcoin. And the second thing I'll just quickly add is greed is the flywheel that fuels the crypto economy. And I know it's really controversial. A lot of people are like, oh, speculation is bad. Like, we're now going to do real use cases. No, speculation is the first use case. It is an incredible use case. It is the flywheel that has gotten us to where we are. We literally memed a global reserve currency into existence through human greed. Simple, beautiful, elegant. Bitcoiners want to have fun. Like, I want to speculate. I want to buy, I don't know, Wenko Menko or Pups or whatever it might. Like, it's fun to speculate with your friends in the Sky Casino. So while these things may feel silly and feel like toys, I think at their core, what they're revealing is the laser-eyed orange, like, maxi cult. It's very exclusive. There's purity tests all the time. It's ridiculous. People want to have fun. Like, the whole point of permissionless innovation is you should be able to do what you want. And right now, the world's kind of dark. If people want to buy shit coins on Bitcoin with their friends, let them. Like, just let them. It's a beautiful thing. So that's my take.
Ryan, anything to add? I got a question for Melton, but anything to add onto that? There was a ton of threads to go down there, but anything to add?
Greed, for lack of a better word, is good. I'm just literally reading and smiling the Gordon Gekko speech from Wall Street that Melton just articulated and re-summarized for the crypto generation. So, yeah, I think it's good. I think the only thing that I would add is, to be clear, I agree with Melton. I don't think that just because the subsidy gets cut in half that fees magically go up. You're pushing on a string if you think that's going to happen. I think it needs to be pulled. And my point, and I think Melton would agree with this, is that the need destroys some of those artificial constraints that have typically existed within the Bitcoin community, because now there is a need to evolve and there is a need to invest in infrastructure that will support a fee-based economy and applications around Bitcoin. So I think there's a little bit of nuance there. I don't want that comment to be perceived as like my version of the rainbow chart, where like, oh, the halving happens, so price doubles, right? Like that's not how this works, folks. But I do think that it wakes more people up that are serious builders in the Bitcoin community. That if we want to preserve this experiment and kind of keep this, really important societal innovation, even more so than a technical innovation, alive, and this social experiment alive and well, is going to need to be economically sustainable. And this is going to be the best way to drive that forward.
And with modularity, Melton, you mentioned this might be a little controversial around modularity coming to the Bitcoin technical stack and that it's necessary. Why so controversial, but also why do we need it as well?
Okay, so I think one of the challenges with monolithic architectures is they become very brittle. And we've seen this with Bitcoin Core, right? Like Bitcoin Core in some ways is very brittle and very hard to work on. As a result, I have pulled up, so I'm looking at the big screen, the good screen over here. I have pulled up the Electric Capital Developer Report, right? And they have done a great job. Maria Shen there, shout out to Maria. She's done a great job tracking activity in different GitHub repos. Bitcoin developer activity has been down, right? In Q4 of 2023, Bitcoin developer activity and active Bitcoin developers contributing to Bitcoin Core GitHub repo declined, I believe, by about 18%. Okay, that's not good. You need devs building on Bitcoin. And the issue is when people come and they bring their BIPs to Bitcoin, right? And today, actually, or yesterday, we have new BIP approvers for Bitcoin. Lalu is one of them, which like super excited about. Lalu, for those who don't know, is CTO of Lightning Labs, brilliant Bitcoin dev, really pushing the envelope, I think, of innovation on top of Bitcoin. Another one is Kanzer Brian, also like fantastic, has been in the Bitcoin ecosystem a long time. But again, like it's really, really difficult when devs can't build on top of Bitcoin and when there's a general culture that's anti-innovation. And I think what's exciting about modularity is it doesn't require any changes to the base protocol. What it does, it allows people to pursue different threads that are complementary to Bitcoin without relying on this dependence of getting BIPs through the BIP process, right? And even if BIPs do get to through the BIP process, like we saw with segue, like then you're dependent on businesses and miners to implement these upgrades. And sometimes they don't want to do that. So the politics of Bitcoin sometimes get in the way. And when you build kind of this monolithic architecture, there's not a lot of flexibility. So what I like about the modularity approach is like, let 1,000 flowers bloom, let people build, and then let Mr. Market decide what's actually valuable, right? And what's beautiful about Bitcoin is the way Mr. Market decides what's valuable is this beautiful balance between the economics of what miners are willing to support, the economics of what investors and people investing in sort of these upgrades are willing to pay for, right? And what the market ultimately decides is valuable. So I think it's really important. The other thing I'll just add is I also just think we're so early in this experiment. We can't really afford to have these sacred cows. So I'm just excited about seeing more developers coming into Bitcoin, feeling welcomed, but also being able to program in different languages, right? There's only one reference implementation for Bitcoin. Why is that? Like this inflexibility kind of needs to go. We can have it at one layer of the stack, but there's nothing preventing people from building around sort of Bitcoin base layer. So I'm excited. Again, I just think that stigma has been removed. And big shout out to Udi and Eric with what they did with Taproot Wizards and what they have been doing, sort of pushing the envelope and trying to make Bitcoin fun again. It's a big cultural shift. And I think that cultural shift has led to a resurgence of developers coming back to Bitcoin now and saying, okay, maybe it is okay to build here.
And it was the announcement.
There's another simple tailwind as well that I think is going to naturally help this process. Everything that we're talking about from an infrastructure standpoint above the core Bitcoin repo and these other layers, that's great, and I think that extends the ecosystem and is probably the primary development that most people have been talking about. But even when it comes to the core, the tailwind that I think might be most important right now is just that fake Satoshi, that son of a bitch, has been like intimidating devs for basically 6 years. He's been completely destroyed in the courts. And I'm not going to say his name mostly because I don't feel like we should give him the SEO anymore. I'm American, so I can call him fake Satoshi if I want to. But I think that having that out of the equation is going to let people like Lalu and Brian and folks that really were early come back in a more prominent way. And I would expect that to be the tip of the spear, right? Because people underestimate how damaging those lawsuits were and that campaign of fear and intimidation. And that is a massive, massive unlock as we think about ossifying, right? Like the Bitcoin, code base in a productive way, not in a way that makes it less stable, but one that just makes it a little bit more flexible because you have the best and some of the earliest minds back in the game without having this, fear of reprisal hanging over their head.
Yeah, that guy sucks.
And to Melton's point earlier too, this is an experiment right now. We are still so early. 15 years for a technical advancement and economy and platform that we've built as a collective here is a short amount of time. But even more so on the Bitcoin side, 4 months. 4 months, most of this innovation we're talking about today, we're talking about on this panel, has all come to light. That is a very short amount of time to see
I don't
things.
think 4 months is true. Hold on. I'm just going to throw like a caveat out there. People have been working on that for years and years, right? If I think back to what people are doing now, like Ryan, you and I, were making the rounds in Silicon Valley back in 2015. People were working on colored coins. People were working on smart contracts on Bitcoin. It is just like people talk about the culture war all the time, right? And woke culture. Bitcoin has a culture war problem. Bitcoin went through its own decade-long culture war that was really toxic, really wasted a ton of productive intellectual capital from really brilliant people. Like there's no room for that in tech, And this is why I think cults are so interesting. If you want to be in a cult and you belong to a religious sect, great. But at the end of the day, we have something called freedom of religion in this country and many countries around the world. Let the people decide, let the market decide. The one thing I will also add, this is what I'm riffing on now and excited about, is Bitcoin has had a tangible impact on the shape of our physical world. Bitcoin has birthed $100 billion dedicated hardware and data center industry. And I'm going to say something that I think is a little bit controversial, but I don't think the AI compute boom that we've seen would be as big as it has been and as prolific as it has been without many of the innovations we've seen coming from Bitcoin mining, sort of Bitcoin physical infrastructure space, and from the incredible amount of capital that has gone into physical infrastructure to support the Bitcoin network. A lot of the models.
It's going to be lovely and wild watching all of the AI boosters who are otherwise very green and and of a certain political persuasion suddenly dance and do a complete 180 on Bitcoin's energy consumption because they realize that AI is going to be an order of magnitude more of an energy hog. They're going to need that expertise from the Bitcoin miners, to Melton's point, to tackle some of these challenges. So I think, on the hardware side and the software side, it's crypto and AI are going to go hand in hand in more ways than one.
And Melton, what are you excited about in the physical space? I was reading some of your tweets about how the Bitcoin ecosystem is going to drive so much innovation, not just at the software level, but the physical level. You're talking about data centers. Paint us a picture. What does this look like? What are you excited about in the next 12 months and maybe further that we can expect from this?
Look, I think that the word of the decade is modularity. What I think is really exciting is these principles around modularity and composability that have emerged in the crypto space. And I have to give Ethereum its flowers, right? Like a lot of this has come from the Ethereum ecosystem and innovators there. So we have these approaches to make software modular and composable, which I think has created and fostered this incredibly rich and vibrant, primarily DeFi ecosystem. And now we're moving like to these other sort of categories. We've seen the same thing on the physical infrastructure side with Bitcoin. What we've seen is data centers becoming modular, right? So you have these containerized data centers that people are hauling out to different places where they can consume last mile power in places where there is no natural power consumer, but a lot of generation. You see this happening on the thermodynamics side, right? People are creating solutions that allow you to monetize the heat created from Bitcoin mining. We're seeing this in the way people are laying out and thinking of constructing data centers. We're even seeing this like on the battery and generation side, where we're keeping older facilities online longer, whether those are nuclear plants, thermo plants. We have a couple in Kentucky, there's a couple of hydro plants that have been able to stay online because people are pulling up literally containerized Bitcoin mining plants. They're now doing this with AI data centers. So this idea, right, that composable modular architecture is the future is now also moving into the physical infra space. And again, this is what I'm spending my time on. Now, the thing we're going to need is open source protocols and sort of like an OSINT architecture for how the physical infrastructure ties to like the operating systems and payment and settlement architecture. That is something that crypto protocols are uniquely enabled to do. Again, we don't necessarily need Bitcoin base layer for that. That's where, again, building more composable modular architecture around Bitcoin itself is also an incredible enabler to sort of bridging this gap between all of this physical infrastructure that needs to get built to power insatiable demand for computation and storage and connectivity, while also sort of balancing some of the unique economic constraints that exist. Like our government is bankrupt, right? We can't put enough transmission lines on the grid. It's simply too expensive. What people don't know is the electricity price you pay, over half of that today doesn't pay for generation. It pays for transmission and distribution. It's just not viable, right? Like the centralized, super modular, like archaic architecture for physical infrastructure is not sustainable. So this is where I think like borrowing from Bitcoin and the tremendous innovation we've seen on the physical infrastructure side, because in Bitcoin, electrons and atoms matter. Other protocols don't have like such a strong dependence on the laws of thermodynamics. So sorry, I'm nerding out here. I get very excited about this, but I think that's tremendously exciting. And then bringing physical infrastructure assets on chain, I think is what the next decade is going to be all about. That's what I'm focused on right now.
No, you have nothing to apologize about. You are with two other nerds on this panel who would probably nerd out for another hour with you about this if we had the time. So thank you, Melton. Ryan, come to you real quick on the L2 side, layer twos. There are now over 50 different L2s, and I'm underestimating that right now. And how they may define themselves, we'll get into. But really, from you and the Messari team, how are you looking at the Bitcoin L2 space as this has rapidly evolved over the last year and a half, going from the core 4, Lightning, Stacks, Rootstock, Liquid, to then about a dozen others to now seeing over 50. How are you guys looking at this space?
Well, I mean, honestly, I'd encourage people to follow Red on our team. If you're looking for really good Bitcoin research, particularly on the L2 and all these other projects, including Stacks, which he covers for our team as well. I think he's probably the expert here, and I'll essentially just plagiarize him. He gave a presentation earlier this week that I think is going to hold up pretty well. And his point is many of what people are calling layer twos are not actually layer twos because they don't enable unilateral exits. So Lightning is an L2, but maybe Stacks, Rootstock, Core, Liquid, et cetera, are not necessarily. But I think we're getting closer to seeing the ability to actually seamlessly move into different layers of Bitcoin and with some of the emerging projects. So for the nuances of that answer and kind of where the puck is going, I'll kind of defer a much longer answer to Red and some of the analysts that we have internally that have been looking deeply at this.
Awesome. Since I'm the host, I get to control a little bit of this time, so we're going to go over a little bit. It is Bitcoin season 2, as it has been defined across crypto Twitter. But to both of your comments, this development has been going on for more than 15 years, and we'll look to continue for that. As we enter into this next chapter of Bitcoin, what are you both very excited about looking ahead in the summer? We've got Nakamoto that will be released. Again, we've got upgrades that just came from Rootstock. We've got plenty of mainnets that are going to come on chain as well. What has you excited about Bitcoin season 2? Ryan, and then Melvin, I want to finish on you because I know you got something you're holding. Ryan, what are you excited about Bitcoin season 2?
I'm excited for how hated all of the applications that come out this year are going to be, because I think there's a lot of hype. And I think the infrastructure development is critical, as I mentioned in my first answer. But we're going to find out pretty quickly that compared to Ethereum and its roll-up centric design, compared to Solana, which has gone through its rolling pains, and some of the alt V1s, some of these applications are going to underperform, I think, pretty significantly. And you're going to see one of the most hated rallies and hype little mini hype cycles in the Bitcoin infrastructure space, I think, over the summer, where enthusiasm for the long-term thesis way out kicks the actual usefulness or performance of some of what's built on top. So that is to say, I expect, just like all the other hype cycles that have been overlapping in crypto, this to be no different, and you'll see a lot of crap, but ultimately, a dozen or so kind of core projects that really stand out and make it through whatever the next winter is, and ultimately come out the other side in 5-10 years being really important bits of the industry apparatus.
Elton.
Okay, so I shared this link in the chat. L2.watch, WATCH, is a great website sort of aggregating all of the different things happening on top of Bitcoin. Last summer, I was hanging out with Ida and Yago, who built Sovereign, which is a DeFi protocol on top of Bitcoin using Rootstock. And I think there were like 6 or 7 things we talked about in terms of Bitcoin innovation. Now this list is 70 things, and I feel like there's something new getting added every day. I have no idea what's going on, and I feel like I'm pretty plugged in. So yeah, kudos to Ryan's research analyst. Like, he's a very busy person. And you're lucky to have a great research analyst. I wish I had that. I will just pay for Messari instead. Pumping my bags here. Love to see it. But look, I think what's been really interesting to see is there's a ton of people building on Bitcoin. They have a new energy. They're not jaded. Some of them have been through a few cycles. Some of them haven't. A lot of this stuff won't ship for a while. It's like anything else. It's of dubious quality. Some stuff definitely looks and feels like vaporware, and some stuff is really technically robust, but I'm not sure how easy it will be to build an ecosystem around some of these protocols because they're complicated. Like, building on Bitcoin is kind of complicated, it's kind of tough. UX on Bitcoin is still really rough. I was trying to trade runes earlier this week, and I got a little pop-up message that was like, hey, you will lose all your money if you trade runes. And it's like, that's not great. So I think there's still a lot of work to be done. It's like very early, very nascent. But for me, what I get excited about, the reason I kind of refer to myself as an aspiring cult leader is like, at the end of the day, I think what makes crypto ecosystems successful is the energy and sort of like the human capital around them. And I think this is why I'm excited that there's so much more human capital coming to Bitcoin. There's attention, there's enthusiasm. Like people want to spend their time and energy building the Bitcoin ecosystem, which is something we haven't had in a long time. And it's not because of some like puritanical, dogmatic religious belief. It's because they're having fun. They see the potential for profit. And I think there are things they can build that are like innovative and unique in some capacity. And so I think Bitcoin culture is something I'm really like interested to see how it develops and evolves going forward. We talk a lot about like Eternal September, right? Which is the story of Usenet. Like every September, students go to college, have internet access at college campuses. So every September, there's like this resetting of cultural norms in the community. We always talk about Bitcoin's Eternal September moment, right? Like, I think it's about to happen again, big time, with all these new devs coming in who are like, rules, like F your rules. I'm going to just build things and ship things. So yeah, more power to the builders, power to the culture creators, and like make Bitcoin fun again. Give me memes, give me meme coins, give me silly toys. That's what excites people. We need an inherently optimistic vision, and like the vision of a digital gulag where only people who own Bitcoin are going to have any human rights. Like that's not inspiring. That is fundamentally nihilistic and like really fucked up. I don't want to live in that world. I don't want to live in a world where Michael Saylor tells me what I can and can't do because he has the most Bitcoins. Like that's weird. That's a weird vision for your utopia. It's not compelling. No, no disrespect to Saylor, but like, let's have a more optimistic vision for the future that's fun and inspiring, where people have like the ability to do things and build things and enjoy like freedoms that we have in the Western world, you know? So yeah, I just think Bitcoin culture's evolving, needs to evolve. And this whole really strange vision of the world where like Bitcoin is the only asset that and only whole people are like talking about how only whole coiners will be able to like afford a decent quality of life. I'm like, that is not how you bring people into your cult. That's like, that's weird. That's a weird thing to say. It's like a really strange elitist approach and is really off-putting. So I'm just happy that that's sort of dying out. They can go have their own little cult in the corner. But I want to make a big umbrella and I want everyone to come join. And I don't care what you think about Bitcoin. If you want to build on Bitcoin, if you want to build culture on Bitcoin, if you want to do weird shit on Bitcoin, like come hang. That's always been the beauty of crypto culture. And I just think like it's high time that Bitcoin goes that direction. I feel like that's coming back. It's exciting. Let's have a more exciting, compelling, inclusive vision for the future of Bitcoin.
I think to put this in chart form, you've got the current Bitcoin culture, which is at the top of the bell curve, and the screaming, crying Saylor maximalists. And again, no disrespect to Saylor. I wouldn't call him mid because he figured out a game to essentially borrow shitcoin dollars to load up his personal Bitcoin stash. But there is like an undercurrent of that maximalism that I think is very mid. And ultimately they're the underperformers versus the two outliers. So you've got monkeys and wizards and Udi's, camp and Eric Wall, who literally dress up as a wizard for conferences and say things that are more insightful and incisive than anyone that's writing a book on Bitcoin.
No more
70
Bitcoin.
And then yes. And then on the other hand, you've got the 130 IQ, plus developers that are coming back to Bitcoin Core that are building this infrastructure. So I agree that like the culture is the 70, the development at the other layers in the core repo is the 130. And, for the time being, I think those cultists have a role, but that's not ultimately where the puck is going if we want to get to the next level for Bitcoin adoption.
Agreed. And we're looking forward to your end of the year crypto thesis as well, that you and the entire Messari team put together and drop at the end of the year. So looking forward to December just for that. And to Meltem's point, let's make Bitcoin fun again and let's keep it that way as well. Meltem, Ryan, thank you both very much. Again, we could go on for another hour, but thank you for sharing the thoughts and insights today.
Thanks, Kyle.
All right, continuing this party and keeping Bitcoin fun again, let's talk about fighting fragmentation and why Bitcoin user experience needs a level up. Ladies and gentlemen, please welcome up our next moderator, Ren Cryptofish. The floor is yours.
Hi, I'm Ren. I'm an engineer at Electric Capital, and today we have 20 minutes to talk about fighting fragmentation and why Bitcoin UX needs a level up. There's a lot of frustration kind of within the crypto space around UX, around trading runes, but maybe as a way to start, we can have quick 30-second introductions going alphabetically. First Kevin, and then Nick, and then Mark.
Hey, how's it going? My name's Kevin Kim. I'm staff product manager at Phantom. I've been here for 2 years. We launched Bitcoin at the end of Bitcoin, Ordinals, and BRC20 support the end of last year. And yeah, we've learned a lot along the way. So excited to chat about Bitcoin UX.
I'm gonna give you a little troll. My N comes before M for Mark. No, I'm just kidding. But Nick Sonato, co-founder of Gamma.io. We're a creator launchpad and marketplace for Bitcoin and for stacks, primarily focused on art.
Hey all, I'm Mark Hendrickson. I'm the general manager of Leather. We were the original wallet for the Stacks ecosystem several years ago, and these days we're a general Bitcoin Web3 wallet supporting ordinals, stamps, runes, all sorts of things on the L1 side as well.
Great. Maybe a good place to start to ease folks into the conversation. What are some of the UX challenges of building in crypto broadly?
Yeah, I can jump in here. I think all of us in crypto have our eyes fundamentally on what's going on the protocol level. So what blockchain engineers are up to. And so if you're working on front-end applications like a wallet, you're trying to plan features so they can launch around the same time that protocol developments take place. We're all looking to leverage what's going on at the lower level as soon as possible. And I think that sort of rush to be out as with front-end user experiences as soon as protocols support new functionality creates a very central challenge because we're not giving ourselves a lot of time to really allow those protocol developments to mature before we actually ship our first, second, third version of functionality around them. So I think that's a great thing about crypto in the sense that we're very experimental, but I think there's such a draw towards shipping as soon as you can, as fast as you can in crypto. And I think UX details often take a backseat to that. And I think also because crypto is full of very technically savvy users, a lot of those UX challenges or sort of downsides, if you will, are sort of forgiven and not later prioritized.
Yeah, I can jump in next. I think like there's to piggyback off of something Mark said, like given there are a lot of technical people, in the space, and I think even some people who are maybe like on the edges and might not be as technical, but because they are interested in, maybe speculative assets or something, and there's like a profit potential, there's really like this additional motivation that kind of gives platforms and apps and whatnot like a little bit of a free pass to not focus on those things because people are like just willing to like do whatever it takes to achieve their end goal, and I think these users are probably also not the type to necessarily speak up about, hey, I'm having troubles with this, or and so there's maybe like a little bit less of the traditional like feedback cycle that you can use to inform product improvements and UX improvements. So I do think there's a little bit of the nature of that, just like by virtue of the audience and user base that we have, and I think that's like the exact reason why we as builders need to really like go above and beyond what we think is the bare minimum because we're probably not getting the same level of like feedback that you would normally get, in a product life cycle. So I think that's definitely like one piece. And then I think another, like, just to give a couple examples that I'm sure everyone is familiar of, the actual process of I'm glad there's two wallets up on stage that I can beg for some help on, like that initial process of setting up a wallet and hey, go in a dark corner and don't let anyone near you and write down these words and never share them with anyone ever and put them in a safe, and like if you lose them and all of your money is gone forever, like it's just like inherently a very scary thing, and it's kind of like the antithesis of the typical onboarding process for what you want to have onboarding to a new product of any kind. And then it doesn't just end at the wallet. After the wallet, now you actually need funds, and funds probably require going through maybe a centralized exchange that requires a multi-day KYC process, or transfers from your bank, which take time to settle, or maybe your bank just outright declines your ability to purchase crypto because they're against it from a principled perspective or something. So like I think these things are problems that like we all need to kind of rally around as a space and work through. And until we get through these things, I don't think we're going to be able to get to the billion users that are often talked about.
Yeah, and then I'll just add on to what Nick and Mark said. I thought they made great points. So yeah, I think the basic concepts of things like seed phrases, private keys, losing your account, obviously that's a big challenge for people entering Web3. I think the concepts of immutability, you can't reverse your transactions or contact support like you can on a bank or credit card, or the concept of network fees. I've actually had Web2 friends who I asked to make a send on my behalf Venmo me for the network fees. So that's kind of hard to grasp for some people. And at a high level, as a wallet, I think the trade-off of over explaining and over educating versus opting for a simpler, cleaner experience. Like how far down the rabbit hole do you go on, oh, I'm gonna have the best tooltips in all of crypto, or I'm gonna have the best help center articles on how to explain what crypto is in the entire industry. And I think focusing specifically on one that I've seen a lot working on a wallet, which is scams and spam. This could apply to tokens, it could apply to collectibles, it could apply to dApps. For the Bitcoin ecosystem, on one hand, it might not be as much of a problem yet as it is on other chains due to high network fees. On the other hand, innovations like recursive inscriptions make mass ordinal airdrops a lot cheaper. And on Solana, we have a huge problem of scammy NFTs that have that have like links to like malicious sites that might like drain your wallet or capture personal information in the metadata. And I think things like that are even more dangerous when you have a dApp ecosystem where features like transaction simulations, like what Phantom has or MetaMask has, are like not really available on Bitcoin currently. So yeah, I think there's a lot of challenges and um, yeah, a lot of challenges, a lot of like danger for users as well. And the risk is, if you get drained or if you get scammed out of your money, are you going to return to the ecosystem? So we have a big responsibility on our shoulders.
Yeah, thank you. Those are all great points. To dive into Bitcoin specifically, a lot of the infrastructure is quite nascent today with respect to UX. What are some unique UX challenges of building on Bitcoin specifically, and what are aspects of BTC that builders coming from the EVM or SVM side might not be familiar with at all?
Yeah, well, I think if you're building on Bitcoin as an L1, obviously Bitcoin doesn't have robust native smart contracts. And so you have to build functionality in lieu of those. And I think what we've seen with Ordinals in particular in the last year, and with Runes as well, is a reliance on off-chain indexers for the most part. And so as apps, you have to tap into these indexers to make sense of what's going on chain. And these indexers don't always line up. They're not always standardized. They lead to inconsistencies as far as the sort of UX that you're trying to deliver. And so I think that's an inherent just limitation to what's going on with the L1. And I think the reason why we have an interest in building on L2s like on stacks is because there are smart contracts, and we hope long term that that's going to provide the same sort of functional benefit as you find elsewhere on other L1s, but with the security of Bitcoin. And so basically close sort of the gap there. I also say that just the UTXO model, when it comes to Bitcoin, causes a lot of hand wringing and just a lot of detailed work where you have to make sure that you don't. I mean, with the UTXOs and things like ordinals, stamps, runes, there's this merging, if you will, of user funds, normal BTC user funds, with where you're trying to store data. You're trying to store inscriptions or other assets, and if you don't sort through that and make sure you're taking care of UTXOs in a very precise manner, very dire things can happen to user assets, and that's just something that's very unique to Bitcoin, given its UTXO model. And I think that's kind of the beautiful experimentational space that we've seen on Bitcoin as L1. That's why we've seen these new applications really come to life over the last year plus. But it's a very sort of strange way to actually build Web3, because you're combining things in a way that doesn't always stay consistent or error free.
Yeah, I'm glad you brought up the UTXO model, because just for those of you who aren't familiar, UTXO stands for unspent transaction output. And I think, like, in layman's terms, you can think of it as stacks of Bitcoin that you have that make up your total Bitcoin balance. So you can think of it kind of like dollar bills that you would have in your wallet, as compared to your bank account, or even Ethereum or Solana, which work on more of an account model where you're really just debiting and crediting amounts of Bitcoin to your balance. So because you have these stacks of Bitcoin, there are some like advantages to that. That's actually why we have something like Ordinals, because you're able to track which specific stacks of Bitcoin. And to Mark's point, then you have to be careful with them, but you can segregate those and keep track of those. But there's a downside to this model in terms of fees. And in a high fee environment, there are sort of like invisible issues that users can run into. And it's kind of hard to know when is best to educate somebody on that. So to give a small example of this, let's say you are a creator on Gamma, and you want to launch a very low cost collection, maybe like $1 or something per mint. So you're going to be receiving $1, and in this model, you're now receiving a bunch of dollar bills into your Bitcoin balance. Well, when fees are high, like right now, it might cost $4 to send that $1. And so you've actually like not really collected anything at all that is spendable. Or you have to wait until a low fee period where maybe it only costs a number of cents or $1 or something like that, in order to then send that maybe to a centralized exchange to go to fiat, or just to consolidate it into larger bills that are easier to manage in the future. So I think things like this are unique to Bitcoin, and are really a challenge for us to work through as apps and as wallets and whatnot, because like, at what point is the right time to educate somebody on that? It's hard to even know. If they've collected a bunch of them and they go to send that Bitcoin, they're just going to see that it costs $1,000 to send a transaction, and they're going to be like, why is this $1,000? I'm just trying to send $50. So yeah, I think I don't know that there's a perfect solution for that, but we'll have to work through it.
Yeah, a lot of great points again. I definitely agree on the UTXO point around UTXO management and UTXO splitting. As we can see from the Runes launch, it's such a abstract and confusing series of concepts to a new user. And wallets are either trying to abstract UTXOs away entirely, or being way too specific about how they're changing. And if you don't split your UTXO correctly, then you've missed out on minting as much of your Pepe rune as you could have and lost out on money. Definitely agree on the indexing as well. There's so many standards, whether it's like non-fungibles or fungibles on Bitcoin right now. And like you need to have amazing in-house on-chain indexing talent or ultra reliable third parties to do that for you, and the stakes are high. One error and you've burned a user's cartoon stick figure they've spent 50K on, and you're getting hammered on Twitter. So there's a lot at stake. But yeah, I mean, additional things I think include, longer confirmation times. Like for some of our users on Phantom, going from sub 1 second block times to waiting hours for your transaction to be entirely confirmed. That creates a lot of fear and uncertainty. On network fees, when I was trying to buy runes on the day of launch, I was seeing like $3,000 network fees just to bridge over. And yeah, bridging difficulty as well, lack of like amazing options that are cheap, efficient, and decentralized. I think a huge one also is Bitcoin address types. Like, what is nested SegWit versus native SegWit versus Taproot? Like, why does Cash App support some address types and Binance support others and Leather support others and Phantom support others? Why do they all look different? Can I send Bitcoin from one to the other? And do they all support inscriptions? Do they all support runes? I think there's just a lot of ambiguity there. And then, yeah, things like stat protection as well that I just kind of touched on with the indexing. Like, there's such high stakes to making sure certain rare and expensive satoshis of a user's Bitcoin, like protecting those over like other Bitcoin and making sure you're keeping track of them throughout the entire life cycle, and then also kind of hoping that the DApp is doing the same. Yeah, and I think maybe the final thing also is just even features that users consider pretty basic in the EVM or Solana world, like speed up and cancel, for example, when a transaction's already in flight to the mempool, is just a little more complicated to integrate within Bitcoin through things like the RBF protocol. So yeah, I think when the infrastructure is so different compared to some of these chains, these like faster and cheaper chains that have been popularized in this cycle and that people are using now, yeah, it creates a big jarring effect for users, and we're doing our best to work through that.
Yeah, Kevin, you brought up a great point around wallet address fragmentation, even just on the BTC L1 level. As more and more scaling solutions and L2s start to launch on BTC, how do we deal with this fragmentation, especially as this kind of like cross-chain modularity type of outcome and future of the world might be coming to Bitcoin over the coming like 6 to 12 months?
Yeah, I can take that first. So I think there's a lot of fragmentation within Bitcoin on address types. I feel like each wallet does things differently. So for example, some wallets have a notion of an address type like native SegWit to pay for an inscription, but you might receive it in your Taproot address, and those are the only settings the wallet allows. Like it's not more flexible. Then other wallets are super flexible and allow for any combination, but then sometimes it's even more confusing to the user because like they could start doing things like buying inscriptions on legacy. Marketplace A might support certain address types. Marketplace B might support every kind of address type. So yeah, I think we see a good amount of fragmentation there. Hopefully everyone will migrate to Taproot in the near future, and things like set protection and indexing and like different standards, like these things will like consolidate and settle down. I think within Bitcoin, yeah, there's quite a number of L2s, like Stacks, like Merlin, many being funded or launching. I think right now it's a little hard to bridge between these or to L1 Bitcoin in general without centralized exchanges. And yeah, like I think just within L1 Bitcoin alone, there's at least 10 fungible token standards besides BRC20s, and that makes it harder for wallets and dApps to keep up. So yeah, I think there is quite an amount of fragmentation. I don't think this is bad in the near term. As people are exploring, people are building, people are experimenting. We're seeing what resonates with users and what doesn't. I think, for example, if you look at general chain fragmentation right now across Web3, there's been so much growth in ecosystems like Solana, ecosystems like Cosmos IBC. The move-based chains are starting to grow. Company L2s like Base are thriving. Each ecosystem, I feel, it has its own focus and flavor and developer base. So fragmentation is not necessarily bad, but yeah, it is. It does make it a little difficult for the user to like understand what their opportunities are in terms of what they should buy, what they should own.
Got it.
I'll just
Thanks.
add, I think, just to sort of build on something Kevin said there, some of these difficulties, they exacerbate each other. So I totally agree with this question of fragmentation of Bitcoin address types. And you have to figure out as a provider of an application or a wallet, which ones to support, how to label them. At the same time, because the indexers are not the most reliable, on one hand, you want to combine user activity onto just one address type so that the user has simplicity. On the other hand, you don't want to do that because you don't want the possibility that an indexer doesn't tell you that a particular SAT has an asset, so you might misspend it. And so I think we need to work through these challenges kind of one by one, but as we do, hopefully they sort of help unravel the other ones. And something in the back of our minds too is that with Bitcoin, you can have many different addresses generated per type per account for privacy purposes. And we've kind of the last year just not really thought about that as an ecosystem or sort of a sub ecosystem. But if longer term our users do demand privacy per address, that's going to add another complication to this, but could also be a benefit to using Web3 built on Bitcoin.
Yeah, those are great points. I just want to end with a quick 30-second hot take on what UX pattern do you think exists today, but you think won't exist in the future, just to give the users out there kind of like an insight of the future to come.
I can jump in first to piggyback off something I said earlier. I think the idea of like seed phrases and like directly managing your private keys, I hope is something that gets abstracted away. I want to be very clear that doesn't mean I think we should move to a custodied solution, but there are really cool technologies like Web3 auth, for example, that use threshold signatures and really clever models of creating like a multi-factor essentially way of splitting up your private key so that even you as the user don't have to manage the key, but you still own your private key and you're really the only one that can recover it. So I think that's definitely what I hope to see.
Mark or Kevin?
Yeah, I think just going back to the question of UTXOs, I think we have to find a way to take the whole notion of UTXOs out of the user experience for the user. I just think that that's something that very early adopters will be willing to tolerate or even value when it comes to things like rare sats. But mainstream users are just going to trip themselves over this. So I think it's on us as wallet developers and app developers to find ways to accurately and gracefully manage UTXOs for the user and not have them encounter that as a concept.
Yeah, I think things that exist today but might not in the future. I think fragmentation of Bitcoin address types probably won't be as bad. Hopefully almost everyone is on Taproot or whatever the newest improvement is. And then I think also, right now we're seeing new standards and asset types being launched every month on Bitcoin L1. This will likely have settled down and consolidated. In terms of will still exist, I think there's going to be still a lot of L2s. I think there's just Bitcoin L2s. I think there's too many incentives, network fees. People are just going to be less tolerant of network fees as time passes, and Bitcoin has so much mind share.
Great, thank you so much for the time today and talking through how we might fight fragmentation on BTC and improve the UX for users.
Awesome. Thank you very much, Ren, Cryptofish, and the entire panel. Next up, let's continue the conversation about how Bitcoin can be built and designed and scaled for 1 billion users. Ladies and gentlemen, please welcome up our next speaker, Ilya of Near Protocol. The floor is yours.
Thank you. Hi, thank you. Great to be here. And it's really good kind of a continuation of a previous conversation on the fragmentation of user experience. So currently, I mean, not just Bitcoin, but the whole Web3 is highly fragmented, right? When you're launching application, when you're building for a specific kind of chain, you have a very limited addressable market, right? You're only targeting the audience of that chain, and you're kind of excluding the rest of the Web3 audience. The liquidity, user experience, even developer experience is highly fragmented. If you think from a user perspective, it's extremely hard to find applications and actually know that they're legit, because there's no way to kind of effectively finding what are the things to use and how they connect with the blockchain, if this is, the front end actually implemented correctly and it's not trying to steal your money. And kind of between all the allows and other current existing like experience vulnerabilities, it's a pretty gigantic problem. As a user now, you're managing dozens of wallets. I have I think 7 different applications. Each application has multiple different accounts in it. And so like this, sprawl is becoming unsustainable, and it's kind of highly complicated for the user. And exactly, we cannot expect that like a normal users who are coming for Web3 to use as a way to kind of use it for banking, use it for financial use cases, use it for especially like longer tail like social and gaming, that they're going to be figuring out all of the details and the complexity of this. And again, users really just looking for this economic opportunity that blockchain provides. They're looking for a cool applications that they can use, the ways to earn, the ways to engage with the community. And so we need to provide them with the tools and kind of experience that is really matching them where they are. And so we started this movement, we call it chain abstraction movement. And it's about really putting the user first and having the blockchain and kind of infrastructure on the back end serving the user instead of kind of the reverse we've been having in the blockchain space almost since the beginning. And so a lot of people who join this, we kind of have events now across side events across all the major events. And we're really trying to build this as a open kind of ask for everyone to think how they are participating in this versus just, here's a bunch of products that you should use. Now, on our side, we've been working across a variety of tooling to make sure that the security is unified. So if you think of it, we have a lot of different components in the blockchain space that have a very different security parameters. And so if you want to abstract it out, if you want to make sure that user doesn't need to think about it, you need to ensure that you have ideally uniform aggregated security, right? And so across, data availability, fast finality, ZK proving, as well as Near itself providing kind of scalable layer 1, there's have been kind of a lot of work in Ethereum and Near space and Cosmos space to unify this. Now, Near kind of focused a lot on onboarding users, and for us, the chain abstraction actually started from kind of when we started Near. We wanted to make the user experience and onboarding extremely easy, right? Most of the users of these applications, kind of across over 10 million monthly active users, don't actually know they're using blockchain for the most part, right? Until they want to withdraw, until they want to engage with, with centralized exchanges or want to engage with something else. They are using the applications, they're onboarded into them. They don't manage manually their private keys. And so Near became a home for consumer Web3 because of this. And kind of we have new applications launching. So Hot is actually a relatively new application that's 3 months old that grew from 0 users to 2.7 million because of the ease of onboarding and user experience. And now also kind of opening up its users to other chains. Now, how does this work? So Near itself is a blockchain. It has its own smart contracts and applications. but that's limiting because there's a lot more economy and things going on across Web3. And so what we've done, we added a new primitive that allows for any near account to actually transact on other chains, meaning there's an address or a set of addresses that associates with every account on every chain, right? Bitcoin, EVMs, Cosmos, Solana, Dodge, etc. And you're able to either programmatically through smart contract or through a wallet to transact on those chains without needing to kind of manually manage the keys, wallets, etc. And this is kind of extremely new primitive that allows to now abstract the user experience of using other chains, of using applications of other chains from the user. We partnered with EigenLayer as well as near validators as MPC providers. There's also more announcements coming on this side. But importantly, we're also removing the need for managing gas. In general, one of the biggest pain points is kind of how to pay gas on a new chain when you're starting to use application, when you just want to try it out and you don't even know kind of how these things work. And so the benefit of the architecture built is that you can have third-party relayers paying for your transaction fees on the other chain in whatever gas tokens are there, for example, to transact in Bitcoin, and you don't need to kind of care about this. You paying them in USDC, Near, or whatever other assets that you have. Now, this opens up a ton of new use cases, right? And so the biggest one is really kind of the multi-chain DeFi, especially for kind of smart contract chains, Bitcoin, Dodge, Litecoin, BitTensor, etc. And it really unifies the experience. So you have this liquidity interconnected between all chains. It removes the need for kind of explicit bridging, and you can have this kind of multi-chain account abstraction because near accounts are already abstracted. We have lots of different ways you can manage your account, from social recovery to FA to kind of multi-sig. And so you can have all that while controlling accounts on other chains. So to give you an example for the Bitcoin, so this is a smart contract on Near. You can provide a derivation, that derivation path. It generates you an address on Bitcoin, and now you can, for example, receive assets to it as well as send assets by signing a Near transaction. Now, to make it a little bit more fun, you can now deposit an ordinal to it that becomes an NFT on Near that you can now trade within kind of 1 second trade time with fraction of a cent. We have like 0.2 cent transaction fee, right? So in a way, this allows you to build Bitcoin layer 2s with extreme ease. It's just a smart contract, and you can build whatever logic and whatever economy you want on top of this. As well as you can withdraw it back, right, by sending it to a different Bitcoin address where it burns this NFT on Near and then sends the ordinal on the Bitcoin chain. So this is exciting technology. There's a lot of kind of development going on. There's a bunch of people building on Bitcoin and this, as well as various forks of this. So I invite you to check it out. But given we have a next session coming in around AI, I kind of want to prefix it with, we have built a very interesting world with Web3, where we have now users, we have technology, we're starting to abstract the experience. At the same time, if we look ahead, the AI is giving the big tech companies kind of an insane tool to continue deepening their moat. And I actually think if we don't solve the AI part, we actually will not be able to achieve our vision of Web3, where people are self-sovereign. And so it's a really case for user-owned AI, where we need to have AI that's on your side, on the person's side, and is able to kind of be incentivized with your behavior, with your financial success, with your kind of well-being, not maximizing profit for big companies. So I'll let Q in into the next session.
Thank you very much, Ilya, and to the Near protocol team and all that is being built there. Continuing the conversation as Ilya teed it up, let's talk about why Bitcoin matters in the era of artificial intelligence. Ladies and gentlemen, please welcome our next panel and their moderator, Charlie. The floor is yours.
Thanks, Kyle. Yeah, so I'm joined with a fantastic trio of guests here to talk about why Bitcoin matters in an AI era. AI, artificial intelligence, and Bitcoin has not really been two topics that are discussed very much in the Bitcoin community, but they are discussed a lot in the broader blockchain Bitcoin crypto space. So I'll let my guests introduce themselves really quickly. Ilya, Marguerite, and Brittany, welcome. And let's start with Ilya. Tell me a bit about yourself.
Hey, yeah, I mean, as I was just speaking, but I'm co-founder of Near Protocol, and previously I was actually an AI researcher. I worked at Google Research, leading a deep learning team around question answering, machine translation, and various other topics. And I am a co-author on the paper "Attention is All You Need," which introduced transformers-based technology for ChatGPT, Midjourney, and all the other kind of recent AI innovation.
All right. Brittany, you are executive director of Stacks. Tell me a bit about that. Oh, you're muted.
I'm not the chairman of the Stacks Foundation board, so I've served as the executive director, launching the Stacks Foundation, and have been a long time sort of looking at the intersection of new technologies' impact on blockchain. And the latest sort of deep dive has been on artificial intelligence and how it can be used to support things like DeFi and better consumer experiences.
Welcome, Marguerite.
Hey, everybody. So CEO of Blockade Labs. We use generative AI to create immersive worlds and immersive art. I previously started my career, I'd say my professional career really kicked off around 2013 I was a fine artist, a gallery director, and I stumbled into the world of Bitcoin. Family was mining Bitcoin. It started with GPUs, I think back in 2012 or 13. And then, they were moving up to ASICs, and I had to figure out what was going on with these decentralized networks of computers racing to solve cryptographic puzzles. And how would you creatively imagine what that looks like? And so I was one of the earliest creatives to combine art with actual blockchain technology that were essentially community challenges or treasure hunts, hiding Bitcoin private keys into the art medium itself. And with that career, I've hit up against all kinds of different bottlenecks in what's possible or what's difficult for a independent creator and then game studios. And what I found was generative AI really solved some of the content problems. It solves a lot of problems, but specifically for creatives or people who have really big, ambitious projects, content is the one that will really get you as far as expense goes, especially when you're trying to work with emergent technologies. So anyways, we pivoted from doing crypto type experiments in games to trying to solve these harder problems for the larger developer ecosystem.
Yeah, so welcome. There's a bunch of different ways we could go with this topic of AI, from AI agents to smart contract automation to the future of compute. We were talking a bit backstage about AI agents. I think that's a very interesting place to start. We've mostly imagined that artificial intelligence agents, we've mostly imagined humans interacting with these decentralized systems. But in a future where we have AI agents, this could look a little bit different. I'll open it up. What do we mean when we talk about AI agents interacting with blockchains? And then what might that actually look like?
Yeah, well, I think one way you can think about it is a simple example is thinking about machine-to-machine payments. So that's like your AI agent transacting on your behalf to do certain tasks for you. Right now, that would actually be pretty difficult to do, to sort of like send out an automation to be able to transact on the blockchain on your behalf. You'd have to give it your keys. You'd have to do some limits. Your agent right now can't go use your credit card. They're not like going and verifying things. There's a lot of checks in place to try and prevent bots from using other people's credit cards. So in a simple way, you can think about, blockchains have this, especially Bitcoin, it just has this ubiquitous financial system that no matter who you're transacting with, you could pay them Bitcoin, your agent can pay Bitcoin on behalf. They don't need a Stripe terminal. They don't need a certain currency exchange. It's sort of a universal standard in which you could use. And I think that's really interesting of just thinking about when you want to do a lot of tasks that are part of like almost like a recipe of steps, having an autonomous agent do that on behalf, make the transactions, even telling it how to negotiate and bid on certain services at certain price points, and then being able to limit the amount of currency that they may have in their wallet, so they're not necessarily just continuously spending on something. So I think it's interesting from a consumer perspective, but also when you think about things like DeFi or trading or being active in some of these networks, which requires a lot of attention and constantly being at the ready to pull the trigger on a transaction. I think that is really exciting to think about agents in that aspect.
Yeah, Marguerite,
Yeah, I would.
Oh yeah, go ahead, Ilya.
Yeah, I mean, I'll just expand on kind of the idea, right? In general, blockchain is a place where it doesn't matter who you are on the other side, right? If you have an address, you can be, a person, you can be anywhere in the world, you can be a cat, or you can be an AI. And so it's like we can actually have is where it really doesn't matter who you are, it matters what results you provide, right? And so you can imagine that future work will be less about, resumes and employment contracts, more about, here to be done, sats attached to it, and then somebody else goes and bids on it, does it, and somebody else verifies. That process, on the side, this can be like AIs and people bidding on it and providing to the kind of chain, and it doesn't really matter. As you get better, they'll start, some of the work for people like that. People can maybe, like generally speaking, right? Just
I'm losing you a bit, Ilya. You're breaking up a bit. I'm going to pause you, and I'm going to throw a question to Marguerite. Marguerite, you mentioned that you have some interesting thoughts on how AI agents might interact or integrate into gameplay and generate autonomous worlds. Can you expand on that for me and tell me where your head's at there?
So I think that the ability to have this sort of game director that can sit between an application layer and your resource layer, that such as assets that could be on Bitcoin, becomes really interesting when you're thinking about balancing gameplay and the ability for what should be available at different times and introduced into a game or application environment to keep the game exciting, and thinking about both the financial resources and also the game item resources. And we've seen various blockchain games attempt to do this, where it's a persistent game that is lasting over time. Persistent meaning the game state is always happening. And blockchain really supports that sort of 24/7 game evolution that can be occurring. And then you introduce the assets that can be dynamic, interacting with themselves, introduce AI agents that can be NPCs populating these worlds, tracking them, ledgers of what's happening with these histories of assets, and then the tradability factor. I think that the marketplace of these types of assets, one, they could probably be interoperable in various ways, but even in just an own autonomous universe becomes really interesting for the thing that's really beautiful about crypto is all these crypto assets and putting them to use and having the utility in the virtual experiences.
Yeah, so Margaret, you've also done a lot of work in the AI and NFT art. We might use the broad term metaverse creation here. One interesting thing that AI kind of superpowers is the process and timeline to go from an idea to executing that idea. In fact, maybe even automating that idea going forwards. Both Brittany and Marguerite, could you talk about how AI in the creative process can improve that flow and idea to execution, especially when it comes to creating digital media?
We're actually at Blockade working on something pretty neat, which is starting from any 2D arbitrary sized image, one that you could have created with Midjourney, or it could be the avatar of one of your favorite collectibles that you have, and being able to turn it into a 360 immersive art piece instantly, based off that initial 2D asset. And there's a lot of different ways you can do this, but or at least functions, but if once people can have just their own 360 world on demand based on content that they're excited about, I think you're going to see a lot more creators building experiences and communities involved, and the idea of UGC, user generated content, flowing from the technical concepts that your developers are creating, and then the content output of building with those pieces with the art that you're inspired by. So anyways, I'm excited about that because I'm directly in that space, and like we have this technology already working. Now it's a matter of just bringing it to product, and bringing it to product is always a little bit more of a challenge than it working locally.
Yeah, Brittany, I'll invite you to talk about that. I think you're muted.
Yeah, I think that this applies not only to NFTs, but even seeing code come to life. I don't know if you've played around with any tools like these models that are open source that are out there, or even things like OpenAI. If you have an idea of something you want to see to exist in the world, you can actually get coached by this model to help either write that code or experiment with different UX paradigms, or create like mock-ups. Like there's so many great tools that are out there. And I think this is fantastic for the blockchain space because we have so many developers who maybe have ideas, they want to experiment. It can be quite a heavy lift to learn different programming languages. Maybe they don't feel like they're ready, but by having these sort of AI tools to help coach them from idea to reality, we're going to get a lot more creative ideas out there. And I also think it'll help lower the barrier for people who want to create to at least be able to prototype very quickly. I don't think AI is going to like take creatives' jobs. I think if anything, it's just going to open up more creativity out into the world by powering with these tools.
Great. We've got Ilya back. Welcome back, Ilya. I remember, I think I caught you were headed towards talking, I imagine, a bit about smart contract automation and AI agent interaction with smart contracts. I hope your connection is back in good, but I know you and Near Protocol have looked into this. What are your thoughts on AI's role or integration with smart contract systems on these decentralized networks?
Yeah, I think there is actually a spectrum of potential use cases here. It starts with actually just simplifying the experience of interacting with smart contracts, because at the end, smart contracts are just a piece of logic and some state ownership. And the front end kind of interfaces we use right now are just one way to interact with them. And you can imagine that having actually a natural language interface or even on-the-fly generated user experience with which you can interact with one or multiple smart contracts is something that can unlock a lot of the additional use cases that people right now maybe would need to go and write a script or write custom logic to do, right? I mean, the kind of multi-sender smart contract that like multi-batch smart contracts were kind of an interesting unlock. And so we have like few projects that are doing that, pretty much providing a natural language interface, including, for example, for minting NFTs, where you can like right away go and describe like, hey, mint an NFT of this, and it goes, generates an image, uploads it, and then mints an NFT and returns you already NFT, right? So like that kind of whole experience end to end is just the one line of request. Now, moving further, you can have indeed agents that are interacting with smart contract as an economic agent, right? Being that they're trading, they are seeing opportunity, being liquidity providers, etc. And there's obviously a variety of how that works. Kind of for DeFi use cases, they can be using external information to make decisions, for example. But I think the most interesting, and we're probably furthest from this actually happening is how do we bring the agent fully kind of become autonomous, where you give them a mission and some resources, and now they're able to interact with kind of using these resources to pay now people and other agents to do work toward that mission, right? And the way I describe it is like toward the AI CEO or AI president is actually turning what decentralized autonomous organizations were trying to bring, like the idea that community is able to pull resources kind of around a mission and then being able to coordinate to achieve this, but actually putting AI into it as a way to coordinate that. And kind of my thesis here is that DAOs actually failed because at the end you still need a coordinator. You still need somebody who has the context and can provide kind of specific jobs and kind of contributions to different people. And kind of DAO doesn't have a slot for that, right? Like it's supposed to be like everybody's equal. And so having a decentralized kind of AI model that is doing that is actually very powerful, because you can have a transparent why it made this decision, how it made the decision. You can even give it feedback to like change its decision-making process by providing more training data. And you can have stakeholders, token holders to pretty much vote off and veto some decisions if they don't agree with kind of how model behaves. But I think so kind of zooming out, like the spectrum is wide. There's a lot of people experimenting with this as we kind of started. I know I was breaking up. There's a lot of people experimenting with like AI agents being financial agents that are interacting and paying each other, as Brittany mentioned. But I think we'll see kind of this transition interface to financial agent to kind of autonomous agent on chain, and as more use cases develop.
Yeah, and I'll throw a question to Brittany, kind of jumping off of that. Ilya, you mentioned this idea of DAOs or decentralized ways of organizing on chain. I know Brittany I think you've written a bit on this, where we can use an AI agent as a coordinator. Could you expand a little bit more on this topic and what you think that future might look like?
Yeah, I mean, I think these, AI agents can do things that we tell them to do. They can learn quickly. They're very cheap to hire. It isn't, you don't need to get them up to speed over weeks and months. They're available 24/7. I think there's a lot of advantages that in some ways, like people wish they could be that efficient with their learning and their time and bring things to market. And I think that these agents will provide a really great way to do that. Not only that, we can actually open source and crowdsource the training of these models. So to Ilya's point, it can be very transparent of what the model's logic is and what, if you put in the same output or the same input, are you getting the same output? And so I think being able to crowdsource better, models around how should we think about governance in the blockchain space. There might be some common models that lots of people could use to do that, all the way up to things like maybe that are more profitable around like what are the best trading strategies, or how should we be thinking about token distribution. Just coming from the foundation side at Stacks, it's like there's a lot of these decisions that we made over the course of bringing Stacks to market that peers in the crypto space are trying to figure out now. I would love to train models. Hey, here's everything that we've learned. How would you do things differently in the future? Or how could you take new inputs or new game theory and apply that? So it will kind of go hand in hand with like past experience, great research, and a lot of inputs to make agents like very powerful. So I'm very excited about, what can happen there. But I do think it's going to take a lot of trial and error. I think we're going to get a lot of bad responses before we get good responses. So I advise people just start playing around with it now, because the more that you can figure out how to prompt it and kind of get the outputs you want, the better long-term success we'll have in using these tools. Not when they're perfect, but starting out when they're iterative like this.
One last question, I'll throw it to Marguerite to close us out. Brittany, you mentioned a bit about token incentive and AI, and I believe I heard Marguerite touch on this topic with regards to AI compute. Marguerite, can you just very briefly, in under a minute, kind of talk about how token incentive could manage the AI compute and modeling challenge?
Absolutely. So actually something I've spent a bit of time designing and thinking about is how can we use this natural like DeFi space that we have in crypto, where users are doing all kinds of activities that may not be beneficial, like this user-driven behavior that may actually yield no fruits that are worthwhile. We can actually create design incentives where, for example, like at Blockade, curating our art data set from generations and have a rating system in which you're rewarded as a user for giving good data. This helps overall like improve our model and keep it evergreen while we do continue to create new data for the model. This just curation process helps with that feedback loop. And actually, and even thinking about AI hallucinations, AIs who imagine things incorrectly and then they think it's correct and then act accordingly terrifies me if I'm going to give an AI agent any sort of finances. So, and you have also instances of the Devin, if you've heard of Devin, this AI that is posting on like various forums, recruiting human users for work because it doesn't know how to do something. So it's going to go pay people instead to do work that it's been tasked with. I just think that we're a long way from having really smart, savvy, financial, economic AI agents doing things with real money in a way that we all feel comfortable about. But the feedback system, loop incentive programs that we can build into our crypto communities, I do think will be a future of DeFi that we'll see. And we'll actually see then, instead of this Ponzi-nomic schemes, a more healthy feedback loop.
All right. Thank you so much, Marguerite, Brittany, and Ilya. I'm Charlie Spears of Blockspace Media. I believe my colleague Will Foxley is actually probably on next. So thank you so much to the Sachs Foundation and the Building on Bitcoin live stream team. Talk to you later.
Thank you.
Thank you.
Thank you, Charlie, and to the entire panel. As we continue today's discussion, it's now time to talk about Bitcoiners and Bitcoiners to start thinking about interoperability and what that means, not just for the Bitcoin network, but also for the greater Bitcoin ecosystem as a whole. Ladies and gentlemen, please welcome up our next panelist and their moderator, Will Foxley. Will, the floor is yours.
Hey, Kyle, thanks for the introduction there. Yeah, we're talking about Bitcoin and interoperability. There's a ton of different chains out there, and people have tons of different assets on these chains. But I think we can all agree that Bitcoin is the mother chain. People want to use it for lots of different purposes, but mostly because of the liquidity involved with Bitcoin. It's the largest chain and asset valuation, has the best branding, I think, about any chain out there. And so a lot of people want to think about like how we can get the different assets onto Bitcoin or vice versa, bring Bitcoin onto other chains. In order to talk about this, we're going to bring up Ahmad Akbara of Rookstock Labs, Robinson Berkey of Wormhole Foundation, and Alex Miller of Hero. Welcome all to the show. Alex, I want to start with you, just talking about Hero and how you guys think about interoperability. I mean, even this morning you said that you were on a talk talking about like the TVL for some of these L2 multi-sig Bitcoin schemes that are popping up. But I'll give you the floor to talk about Hero first, and then let's delve into some of the new interoperability chains, whether it be Bitcoin L2s or different networks that are working with Bitcoin.
Yeah, so Hero is a dev tools company for building on Bitcoin. So we build tools both for the Bitcoin L1 and especially for L2s like stacks. So I think that interoperability in the Bitcoin world and how you think about chains built on top of Bitcoin is very different than a lot of other ecosystems, especially the Ethereum world where everything is built on top of EVM. And so you can just, build using EVM things, right? And most EVM L2s look pretty similar to each other, once you basically decide, is it a rollup or is it its own chain? There's only a couple real models that people are doing. Whereas if you look at the Bitcoin world, I mean, just look at the difference between like, the way Stacks is built versus the way that RSK is built, right? Ahmad, I'm sure could go into all kinds of technical depth about it that I can. But there's probably, I don't know, 10 different models between rollups, side chains, drive chains, merge mining. I literally can't even name all of them. So that gives a lot of different optionality in Bitcoin, which I'm also think, long term is also going to be really good for the security. Because it's going to let us test out a lot of different models, let users and experienced technical folks really poke at and figure out, hey, what is actually the best model for securing things with Bitcoin while providing that additional functionality that Bitcoin doesn't provide because it doesn't have compute in the L1 like something like Ethereum or Solana does.
Yeah, to that point, Ahmad, I want to bring you up and talk about Rootstock Labs, what you guys are doing. Rootstock is one of the older Bitcoin L2 schemes. I don't even know if you guys would define yourselves as a Bitcoin L2 necessarily. Can you walk out what Rootstock is, how you guys see yourselves being an asset within Bitcoin itself, and how you guys fit into like the scheme of all these different L2s or meta protocols on top of Bitcoin?
Yeah, absolutely. Yeah, good to be here. At Rootstock Labs, we're building infrastructure that extends the capabilities of Bitcoin. Our mission is to provide developers with the tools to build on Bitcoin, support the growth of the Rootstock ecosystem, as well as expand the frontiers of decentralized technology. So we've been thinking about interoperability and developing and executing on bridges and integrations for a very long time. We do take a foundational or a first principles approach to bridging, and this is to echo what Alex mentioned. There's no one bridge to rule them all. There's going to be multiple flavors. It's like you're getting to a city. There's going to be the highway. There's going to be side streets. There's going to be rural areas, and really depends on your persona in that space. And each persona has different expectations from a UX, from speed, from trust, from assets, from availability, from tech savviness. So with that, we are building like a framework for all these types of bridges and swaps. The native one, which is the PowPeg bridge, is I'd say the oldest Bitcoin bridge so far since 2018. It's highly secure. It's based on the two-way peg protocol that the Rootstock Labs team has put, and other contributors has put a lot of efforts around it to ensure the multi-layered system of defense. It's highly secure, ultra secure. It ensures the consistent peg, which is one RBTC to one Bitcoin. And RBTC is obviously the Rootstock's native token to transact. And then we started adding complementary layers on top of it. One is what we call the flyover protocol, which is a faster kind of complementary protocol to the PowPeg for trust minimized Bitcoin transfers in and out of Rootstock. The protocol and the SDK is live and currently being integrated to applications that we're developing and others in the ecosystem as well. We're also working on interoperability with the Lightning Network via bolts. So we realized that Bitcoiners may come in from different areas, right? From the Bitcoin main chain, from the Lightning as well. So we want to position Rootstock as bolts as a means for users to come in through Lightning. We're also looking at different cross chains and bridges. So Uniswap, Oku, Symbiosis, others that are being integrated, and some we're in discussions with as well as ongoing efforts with Runes, Taproot Asset Bridge. So if you look at it, I mean, there's different flavors, and this is what's great about this space. It's the diversity of the assets, the users, the funnels, inflows, and but at the primary thing, security is very embedded in the development at Rootstock Labs, and we have high security expectations as well with the partners we work with.
Robinson, I want to boot it over to you. Tell us a little bit about what Wormhole is up to in terms of Bitcoin. I think most people think of you guys in terms of like Ethereum and Solana networks. So for Bitcoin, how are you guys thinking about interoperability at the foundation?
Yeah, absolutely. So like you said, Will, Wormhole today connects, Ethereum and Solana networks. We actually connect over 30 blockchains today. I think that an important way to think about Wormhole as well, just kind of like a high level mental model for folks, is there's more or less two layers, right? There's this kind of messaging layer. Some people call it connectivity, transport, whatever. That we can use the highway analogies that we talked about really just sharing state from machine to machine. And then up on top of that, we like to think about it in layers in this space, of course. But on top of that, you kind of have this asset layer, which is where 80% of the use cases are still today. So it's important to kind of really focus on that. And then a lot of people think about interoperability through that lens. But I think it's important to think about the messaging layer is just as important, if not more. When we think about Bitcoin and Bitcoin L2s, it's definitely an area of focus. I think there's maybe a few points to make here. Number one, I think Bitcoin as an asset, which is no surprise to anyone listening, but is extremely in extreme high demand and is extremely trusted. And so what I mean by that is when we think about all of DeFi, let's say outside of the Bitcoin land, if you will, all these DeFi applications want to figure out a way to how do we get BTC in some form, some derivative form, to our application, whether it's using it as like a base asset in their AMM, a collateral asset in their borrow lend. And so there's this kind of like one use case of bringing that asset into, let's call it like the Ethereum, Move, Cosm, Wasm worlds, and having it kind of like proliferate within DeFi. Users today want some sort of yield or to use their assets somehow. So that's like one bucket where Wormhole comes in and helps a lot. And now the other I'd say is actually connecting the users on these other networks, so Ethereum, these Move networks, Cosm, Wasm, to this kind of like growing Bitcoin stack space, if you will. And I think it's extremely important for, obviously there's a ton of liquidity within BTC itself, but there's a lot of users and there's a lot of liquidity outside these networks too. So, the simplest way is to think about liquidity coming out and liquidity coming in, and we see it as our job to help with both of that. A few of the like bigger blockers, I think, are virtual machines, right? As we kind of use different virtual machines, those are hard for bridges or interoperability protocols to keep up with. If we think about like the interop space outside of, let's say, Bitcoin land, Wormhole today, I think spans the most virtual machines. I think it's 5. Well, actually, I know it's 5. When we think about other interop protocols, it's much less. So I think it's important to keep that top of mind when designing your stack. Like, how do you connect to the broader DeFi ecosystem? And then I think we're already starting to see some use cases.
Okay, I think we lost Robinson for a moment, so I'm going to throw it over to Alex. Alex, tell me a little bit about how you think about demand for certain protocols at the moment. I mean, Hero, since you guys are more of like a tech house, if I can kind of say it that way, and feel free to correct me. You guys work on a lot of different projects and protocols. Where are you seeing the demand at the moment? We just had the Runes launch. We just had the Halving. Ordinals, BRC20 is our thing of the last year, but there's still high demand there. Lots of L2s launching. Where are you kind of seeing like the trends move for demand and building at the moment?
Yeah, so there's obviously, as I think there will be until the end of time, there is insatiable demand for meme coins. People absolutely love them, obviously. You saw the Runes launch. BRC20s were already huge before that. On Stacks, they're back in December, kicked off STX 20s and Stacks RCs, like just SRCs. People just cannot get enough of meme coins. And I think actually, while meme coins are sort of like a very fun and silly thing, it actually reflects the greater desire to both, well, A, gamble, and B, transact. I think it goes to the exact same motivation that is like the reason, the only thing that's the number one thing that's found really good product market fit in crypto is stable coins, right? People just want to be able to transact back and forth. So I think long term, there's like amazing potential around larger smart contracts. And, especially the thing I always talk about is like, I'm here for the global borderless legal and financial system. And I think that's still where we're fundamentally going. But like the thing that apparently is going to get us there is meme coins and JPEGs on it. I think the thing that's also been really heavily in demand right now is the provenance of Bitcoin. Like that is the reason that people are back here and building and excited about building in the Bitcoin world, is that Bitcoin, as you said, is the mother chain, the OG chain, whatever, it is the thing where everyone knows it, they trust it, it's got more holders, it got more asset value, it's the thing your weird uncle asks you about at Thanksgiving dinner, like it is the thing that everyone knows. And so having the provenance of your things tying back to that really just makes them more valuable and more desirable than I think on any other chain. The question is, how do we provide as good a development experience as, say Solana has, right? Solana's got like a way better developer experience than Bitcoin today, if only because, it's really aggravating if you're trying to deploy a contract and see if it works, having to wait somewhere between 10 minutes and an hour and a half for it to deploy out because your chain is linked to Bitcoin blocks. Like that's a big reason that the Stacks ecosystem is in the middle of the Nakamoto launch right now, which moves from being 1-to-1 with Bitcoin blocks to being 10-second blocks, because we just saw this demand from people who are like, look, I want to be building in Bitcoin, but there needs to be a stronger, better developer experience so that people can actually build these apps that will bring over users and get them building it out.
Love that. Ahmad, I actually just want to throw that right to you and maybe get a response to what Alex is talking about there. From a rootstock perspective, the things that you guys have been working on for years at this point, how have you seen the developer space unfold, whether that be stuff outside of rootstock or stuff you guys are building within the company?
Wow, yeah. The one thing I love about this space is the diversity of the ideas and mindset. I like how Alex talked about that meme coins. I mean, this is great. It gives, especially in the early stages, the ideas and how we can test out different bridging and interoperability and use cases, and to have our platforms be battle tested and what the appropriate tooling is. So one thing that we've been investing on in the past year or so is around of course, tightening and ensuring that bridge security is top notch, because we see like you alluded, I mean, we see a lot of hacks that have been happening and unfortunately continue to happen to bridges. And for us, the user experience and the security are something that we invest in a lot, from mindshare research and security perspective. The other thing that we've been focusing on is around developer tools. So how do we make it easy for new developers to join the Bitcoin development ecosystem? And what are the tooling? And since we are an EVM compatible chain, so we're able to leverage different EVM tooling that's already out there, battle tested, Ethereum and other ecosystems as well, to deploy at rootstock, so that developers can deploy their applications from 0 to 1 in extremely less time, very efficient and very effectively in tools that they are familiar with, already tested, etc. And then with the bridging as well, one thing that we are now recently been focused on is around the BitVM initiatives. So I'm sure this is one of the hot things that has been popping up. And just recently, just yesterday, we announced the BitVMX initiative proposal. We have a website already available there, bitvmx.org. And we're planning to announce that. Sergio's our chief scientist, is going to talk about it in the Bitcoin Plus conference next week in Austin, as well as publish the white paper. So this is very exciting for not only rootstock, but also the entire L2 ecosystem, because this is going to be chain agnostic and it's going to be open source, getting mindshare from across different developers, cryptographers, researchers in this space.
Love it. Robinson, welcome back. We want to boot it over to you to talk about demand really quickly, since you guys sort of sit in the middle of all these different chain ecosystems. For Bitcoin specifically, where are you seeing demand? Is it from Solana network? Is it from the Ethereum network? Are you seeing like people come from different camps? Or is it within Bitcoin itself? Maybe even like new users. So I'll let you take that where it is, but where's demand coming for interoperability on Bitcoin?
Yeah, absolutely. Sorry about that. I definitely was probably talking at the wall here for 30 seconds. So appreciate you all being patient. But yeah, and I just want to round out on what I was saying before, and it will tee into demand. But we do see ourselves as kind of this highway going both ways, which I think is important. And it's important to just let that happen and be as permissionless as possible. Some people want try and get more TVL, which is fine. But I think case in point, and Ahmad mentioned this earlier around Uniswap, obviously coming to rootstock, and how you need some sort of way to share state between where Uniswap's home chain is and governance votes that's happened there, its remote deployments. So we're already seeing kind of this cross pollination, and our role is really to like abstract the kind of like chain to chain stuff as much as possible and make it easier for the user. But when it comes to demand, I think we're seeing demand on both sides. I can say very specifically like chains top of mind that we've spoken with many times about. Hey, we're really interested in getting Bitcoin, here as part of the AMM, or like I said, for their borrow lend, etc. Those chains are Cosmos chains. I know Osmosis is really focused on this. Solana is really focused on this. There are L2s that want BTC, whether it's perpdex or AMM, etc. So I would say actually, we're seeing demand everywhere, but specifically Solana, L2s, and Cosmos chains for the most part on our end. So yeah, I think I think we'll continue to see that. However, it'll be interesting to see how it flows back to the chains, right? Users today only really have a few options when it comes to BTC and in DeFi, right? There's a few decentralized solutions which are great, and then there's kind of BitGo, and a lot of people, BitGo's great. Some people say BitGo kind of goes against their ethos of why they hold Bitcoin in the first place. That's an opinion for the user. But I think just having those options is important. But I think we'll start to see a lot of the flow go back as these chains come live within the kind of Bitcoin ecosystem, because these chains want the TVL for themselves too. And we're starting to already see that. I know there's a few chains that have points programs incentivizing like more Bitcoin on their chains, etc. So there's going to be kind of a push and pull both ways. So it'll be interesting to see where it ends up.
Awesome. Okay, so we only have about 2 minutes left here. We're going to do a fast round, so 15, 20 seconds each for your answer. Alex, to you first. What should Bitcoiners prioritize when they're building out these systems? What's the first thing that comes to mind, whether it be from infrastructure to the ethics of building these systems out? How would you encourage people to build out these systems?
Yeah, decentralization and security. That's the whole thing that has underpinned Bitcoin from the beginning. If you're going to build Bitcoin assets, if you're going to build Bitcoin bridges, like that is the thing that matters and will be accepted by the user base.
Ahmad, same question to you.
Yeah, I have to echo what Alex said, decentralization, security, and there's no cutting corners here. There's no shortcuts. We have to get it right.
And Robinson, I'll give you the last word so you get a few more seconds here.
Well, I can't not say decentralization and security at this point. So I'll just say that yes, but I think it's important to understand like what are the end goals for what you're building. And then for instance, if those end goals lead you into kind of cross-pollinating with the broader on-chain ecosystem, if you will, what does it look like to gain quick adoption there? Like, and I mean that at like an infrastructure level, like how are you working with oracles? How are you working with bridges? Thinking about what their like hurdles may be in order to integrate with you, because this will all affect go-to-market. So keeping that stuff top of mind is important.
Awesome. So that was thinking about interoperability on Bitcoin. Alex, Ahmad, Robinson, thank you so much for joining us. We'll have more content in just a bit. Just a quick break. We'll throw it to Kyle, and then more on Build on Bitcoin. Thanks, guys.
Thank you, everyone.
Thank you so much, Will, and to the entire panel, bringing us the conversation around interoperability. And now I want to welcome up my panelists, Muneeb and Alexi, to continue the conversation, but looking broadly at the L2 landscape, the layer 2 landscape in Bitcoin. As we discussed earlier today, Bitcoin's ecosystem has exploded over the last year and a half, and more aggressively over the last 4 months. But as both Ryan and Meltem and I spoke about earlier, people have been developing in the Bitcoin ecosystem for well over a decade, and many milestones have been achieved since. But when it comes to Bitcoin L2s, according to L2 Watch, as we looked at earlier, there's over 70 different new Bitcoin L2s. This landscape has evolved aggressively. And so, Muneeb, Alexi, welcome both of you to today's panel and to Building on Bitcoin, the Halving edition. Let's talk about the Bitcoin L2 landscape. The Halving was 4 days ago, April 20th. How has the Halving interplayed into this evolving Bitcoin L2 landscape? Muneeb, we'll start with you.
Hey, everyone. Good to be here. Hi, Kyle. Hi, Alexi. So I think this is a very, very exciting time. Like the way I look at the halving, yes, it has an economic impact and sort of like, traditionally it has marked like the start of different cycles. But I think the other interesting thing the halving sort of does is that at this point it's more like a Super Bowl for crypto. Like it's the big event where, if you've been working on a project, like you want to launch it around this time when there's a lot of spotlight on Bitcoin. And I think we saw that effect. We saw that with Runes, we saw that with Stacks Nakamoto, that people were sort of like rushing towards making their launches like on or around the Bitcoin halving. And I think that's a very exciting thing, like just from a community and culture perspective, that this is a time when developers like sort of like showcase what they've been building. And I think that was the part that sort of like stood out for me.
Alexi.
Well, I can fully echo that. I think we've seen, lots of excitement and lots of build-up about runes, about layer twos, upgrades. The halving is a very nice state. Lots of attention on Bitcoin, lots of reporting around Bitcoin. So naturally, lots of teams picked the halving to go live. Same for us, or like within the halving. So for us, it's next week. And the other thing that we saw, I believe, is there was quite a lot of media attention from outside of the usual Bitcoin kind of ecosystem. The halving is like the time when everybody reports on Bitcoin every 4 years. Also traditional media talk about Bitcoin, and I think the anticipation was we'll see more eyes and more people looking at Bitcoin again. Oh, last time I checked was 4 years ago. It was a pet rock not doing much. What's going on now? And oh wow, there's so much stuff. There's assets, there's NFTs, there's L2s now at Bitcoin. And I think, we definitely saw some more attention coming in. And I do think we'll see more activity over the next couple of weeks.
I have to agree on the attention. This was discussed earlier on a few other panels of the amount of attention that came from not just mainstream media, but in general around the world towards the halving. Rena Shah, who's a part of the Trust Machines, mentioned this on the very first panel of just how much magnification came because of the halving around Bitcoin as an asset and as a network, which then empowered those that are building on Bitcoin. And Alexia, I want to ask you, I mean, you and the team and Bob are preparing for an upcoming mainnet launch. Stacks went mainnet almost 3 years ago, and I'll ask Maniv a little bit of his lessons learned during that and what's to come. But talk to us about your mainnet. This is a big, exciting time for the L2 space. You as a rising Bitcoin L2, what does this mainnet mean for you guys?
Well, it means we have to deliver. So we've been building up for a while, and yeah, I mean it's obviously very exciting to coordinate with quite a few teams, and let's imagine with like more than 15 teams that's supposed to go live at the same time. At least that's the ones that we know of, and then there's teams that are just telling us, "Oh, we're going to deploy on day one." I'm like, "Oh, great! Do you need any help?" "No, we're all good." But then you need to coordinate with multiple hundreds of people to get everything right. So it's very exciting, and we can't wait to see DeFi, runes, NFTs all go live on Bob and actually start getting ETH users into the Bitcoin ecosystem.
I love it. And Maniv, to you, I mean, talking about the landscape of Bitcoin L2s, you have been building in the ecosystem of Bitcoin for a number of years. Stacks went mainnet 3 years ago in 2021. Nakamoto's large upgrade just started to begin its rollout. What are some of the lessons learned? But more importantly, what does the landscape look like having been a part of the foundation that was Bitcoin L2s that now has evolved?
Yeah, I think in terms of building these large, complicated systems, I think our lessons have been these things are harder than you think they are. They take more time and resources than you think they would, right? So people who are signing up for building these things, I think the biggest lesson is you have to be committed to the long term, right? Like you're gonna build through multiple sort of like bear market cycles, and you have to kind of like learn, iterate, and have that sort of like passion for what you're doing. Because if you're not like actually mission driven, at some point you're going to run out of energy, right? At some point you're going to run out of enthusiasm, and you like move on. And I think if you look at the people who are sort of like stuck around, they're really driven by the passion that they believe in Bitcoin. They believe that this is good for society, this is good for humans, and they want to see it work. right? And I think Bitcoin is actually very high on that. And that's why I'm really excited about more developer energy coming to Bitcoin, that when, these mission-driven developers who maybe at heart were Bitcoiners, but, there was more activity going outside of the Bitcoin ecosystem at that time. And there were sometimes maybe stuck in some ecosystems that really didn't even want to be in. And I think now there's a clear pathway. There are clear opportunities where a lot more capital is coming in. A lot of intellectual capital is coming back to Bitcoin as well. Like in terms of other more specific lessons to stacks, I think when we did our mainnet, coming from the Bitcoin culture, we were really optimizing for decentralization and security. So a stacks block would occur every time a Bitcoin block would occur. And I think maybe we didn't give enough importance to UX, because users are getting used to much faster speeds, and they have different expectations for how they want a L2 to behave. And I think those have been like some of the bigger lessons, that the Nakamoto upgrade, I feel, is much more focused on the expectations of the end user and putting the end user first, and trying to see that, hey, can we give them the best user experience of actually using Bitcoin? And I think that has been a pretty important lesson. And obviously then that trickles down into the infrastructure and all the different design decisions that you're making.
And there's a lot of discussion around L2 or layer twos, and specifically in Bitcoin, because how many of these protocols have begun to redefine maybe what L2 looks like as we knew it once before in Ethereum. But when we look at the L2 landscape for Bitcoin, what will they enable, both respectively Stacks, Bob, but all the others as well? What is the hope that they enable, and what they can provide for the future when it comes to the modularity and the development of technical stacks on Bitcoin? Alexi, we'll start with you.
So, I mean, I think this whole terminology bingo with, like, oh, it's an L2, it's a rollup, it's a sidechain. Previously, everything was a sidechain. Now everything is at layer 2. I'm personally not a big fan of being very strict about, oh, you should not call it X, you should call it Y. I'm more of a fan of, okay, well, you can say it's an L2, but, where does it get security from? How to get Bitcoin into the system, and, just giving users a bit more clarity. And that's why I've actually helped on the advisory side create Bitcoin layers, which is a version of L2B, but for Bitcoin L2s. And when we talk about what these L2s should enable, I think there's a wide range of applications, but the ones that I'm most excited about right now is making access for Bitcoin into DeFi as simple as one click. We've seen that there is demand with WBTC. There's been $10 billion worth of Bitcoin in WBTC for a long time that is used, and that liquidity is sticky. So you see people actually want to use it, but that's just a tiny fraction of what Bitcoin actually is available on the Bitcoin main chain and of the Bitcoin that sits in centralized exchanges. And I think in the last cycle, we all realized, and a lot of us got burned by the misdoings and mischief nature of some of these centralized exchanges. And now I think, with, making Bitcoin DeFi a thing, we can actually get much more liquidity, much more users to start doing things with the Bitcoin. And from Bob's perspective, we're positioned as a hybrid. So we embrace like the innovation that has been created on Ethereum. We try to be connected to that ecosystem. We onboard some of the leading DeFi projects from Ethereum, and then work on the infrastructure side to make it super easy for users to deploy their Bitcoin into these DeFi products. So if they want to just trade their Bitcoin, if they want to borrow against it, if they want to go more sophisticated and create some form of staking products. And the goal here is make it as accessible as possible, get to a point where the UX is not only as good, but actually better than on Binance. And I think that what we've seen in the last years, that centralized exchanges have dominated the Bitcoin space for so long that the UX is actually not always that good. And there are ways to improve, there are ways to make it easier, and specifically composability of DeFi is a major selling point. Instead of you having to have accounts with 5 different exchanges to go through KYC with all of them, you go to DeFi, you can use all sorts of DEXs and lending protocols within a single wallet. And I think bigger exchanges have realized that and they started to launch their own Web3 wallets, which is perfect because now suddenly you can get access to Binance's, to OKX's users, to Coinbase's users through their wallets. And that's super exciting because you have DeFi users who have been used to using DeFi apps, AMMs, DEXs, lending pools, perpetuals, like depending on really how you can go as complicated as you like, and they all have Bitcoin, right? 99% of them got into crypto through Bitcoin. They have BTC lying on centralized exchanges on the ledgers somewhere, and activating that group of users and is very important. I think you'll be surprised how much Bitcoin they actually account for versus the Bitcoin that we see in Lightning and the Bitcoin that, you know, a lot of the more like Bitcoin only community and more like strict community in terms of everything else is bad will account for on like day-to-day basis. And that I think is a massive opportunity. And of course, the Bitcoin ETF being approved just opened the floodgates. You already have 90% of people in crypto getting like into crypto through Bitcoin, but with Bitcoin layer 2s, you actually have a net, right? You can catch them before they leave Bitcoin and go to other ecosystems. And if you think about it, when media reports about blockchains, media reports about crypto, they report about Bitcoin first. And I think this is a unique opportunity for Bitcoin L2s to not only capture the existing user base on Ethereum, which you already see happening, right? There's lots of projects cross-deploying to Bitcoin projects, but also, and not only, you know, access the current Bitcoin user base, but actually capture the millions of users that will be entering the market over the next years and become the main place for these users to actually, you know, use stablecoins, borrow stables against Bitcoin, trade Bitcoin against USD, and experiment with new products.
Manib, why now? Why are we seeing so much momentum suddenly? Again, a ton of development has been happening for years, but why all of a sudden now are we seeing this monumentous momentum happening across the Bitcoin L2 space?
I think there are a couple of factors here. One of them is definitely Ordinals. So I think Casey deserves a lot of credit for Ordinals. Like there was something about Ordinals, something about putting the image directly, so like on chain on Bitcoin, that gave people the aha moment that, oh, look, my NFT is actually now going to live forever because Bitcoin is the most durable chain out there. And I think that directly resulted in not only developers coming in, but also the Bitcoin fees going up. And I think when the Bitcoin fees go up, like now L2s are no longer sort of like this optional thing that you know people are building and you may never use. They're become like a medicine to a pain point that everyone is feeling, right? Like whenever you go to mempool.space and you see like 200 sats of fees and they are in red, you go like, I'm not paying a $40 transaction fee on a $100 Bitcoin transfer, right? So I think suddenly Bitcoin L2s become like a pain point, like a solution to a pain point that people are feeling right now. So and it makes it just very, very real. So I think that was definitely one. I do want to give credit to a lot of people in the Stacks community. Because one thing that they did, like before that, what I call the dark ages between 2017 and 2022, developers were actually not very welcome in a lot of the Bitcoin circles. If you have any idea that's outside of Lightning, you would, you'll actually face a lot of hostility and so on. So one of the things that people in the Stacks community were doing, they were creating alternate communities, like alternate developer communities, alternate developer conferences. Like, for example, we did the building on Bitcoin Builders Conference with Bitcoin Miami. Rootstock was there. Some of the Lightning people like Lightspark, like they showed up. And then you start getting a sense of like developer community and momentum around Bitcoin. So now if you're a new developer and you come here, like you at least have a subset of the community that is very open to developers. They welcome them. They walk them through the landscape. They help them out. And I think that was very important. So the basic foundational stuff was there. Same with like, wallets and API providers. Like I know Xverse and Leather, they were originally sort of like Stacks L2 wallets, but when Ordinals started, they went in. They were one of the first to actually embrace Ordinals and help sort of like the user base over there. And same for API providers. I know Alex from Hero was speaking here earlier. Like they went in, they were already providing API for the L2s, and they sort of like started doing that for Ordinals as well. So I think that's base level support was there. So when new devs were coming in, they actually saw momentum. They saw like the basic infrastructure in place, and then they started building on top. And I think that was sort of like the two things where I would also go back to the point of using the terminology of Bitcoin L2. I completely agree with Alexei over here that using the term in a broad way is the way to go, because this is not the time to sort of like have more infighting that, oh, you're not an L2, you're not an L2. Whatever term is working in the market for average people to understand what these things are sort of works. Obviously, there are going to be some almost like borderline frauds, right? Who are trying to pretend to be an L2, but that happens with any technology, right? That doesn't mean that you need to like change your terminology. Like, but if you're an honest project and you're actually trying to build something interesting, you might even be federated. But as long as you're upfront about it, that hey, this is a federated network, this is a federated L2, so to speak, I think from my perspective that's fine. So I think having that common terminology and collapsing a lot of these projects that otherwise might look like, going in different directions, and putting them in the same category, that all of this is progress towards Bitcoin L2s, and here are all these different sort of like solutions that are being tried out. And finally, one last thing I would mention is innovations around things like BitVM that open a pathway to having sort of like more expressive sort of contracts on the Bitcoin L1, which could result in more trustless bridges and so on, is also very important. Because even if it's not perfect right now and more R&D is needed, at least it opens up a pathway or doorway where people can see that these L2s might be launching right now, but there's heavy R&D going for how to even reduce trust assumptions and so on. And I think that was a very sort of like a interesting big breakthrough almost that helped sort of like kickstart the Bitcoin L2 space.
Well, and one additional question around that, and in terms of scalability, there's always a discussion, and specifically now around the halving, of how scaling Bitcoin may impact miners and the entire mining culture that is. Would love to hear both of your opinions on how L2s or the L2 environment benefits the current Bitcoin miner communities. Maybe we'll start with you and then Alexei.
Yeah, so I think in general, I would say that Bitcoin has approximately like a 8-year runway from now to figure out, high gas fees or high transaction fees, because the Coinbase rewards are going to keep going down, and they do become almost negligible, even with Bitcoin at $1 million or so at some point, right? So that's the runway. And I don't think I'm definitely not a Bitcoiner that likes to be complacent and be like, hey, Bitcoin has been working fine for 10 years and it's going to continue to work fine. No, we know that the Coinbase rewards are actually going down and something has to change. We would need to see more network activity and people willing to pay like high fees. And I think things like Ordinals, Runes, Bitcoin L2s are definitely helping here, especially with Bitcoin L2s. I expect to see a lot of traffic that is the in between L1 and L2 traffic, right? Like people are moving their BTC from the L1 to L2. I almost view the L1 as a cold storage. L2 is like sort of your hot wallet. Yes, you're taking a little bit more risk, but things are cheaper, faster over there. But you don't move your savings into the hot wallet, right? Like you're keeping bulk of your holdings in your cold storage on the L1. And the L1 is also the settlement layer, right? So the Stacks Nakamoto, for example, all the transactions that are happening, they're directly settling on the L1, benefiting from 100% of Bitcoin finality. And I think this traffic inflow could be very helpful because because there are not just 1 or 2 L2s, right? There are so many of them launching. So the aggregate effect of all of that on the L1 would be that the Bitcoin block space is becoming even more sort of like valuable. It's increasing the demand for BTC, and it's increasing sort of like the value of Bitcoin, and that's really good. And for miners, not only that, I think this new traffic would help sort of like direct revenue and fees at the L1. I think these miners are actually in a very ideal condition because they're infrastructure providers and they optimize running infrastructure. They can get into some of the running of the infrastructure of the L2s as well. It's a pretty natural sort of like next step for them, that if you're an L1 miner, you can start looking into mining some of these L2s as well and try to see how to maximize your profits that way.
Alexei, anything to add?
Well, I mean, I think it's very important to remember that, Bitcoin security budget is ultimately what makes the whole thing work. And you've had concerns around fragmentation since the early days. I mean, Satoshi Nakamoto himself created something something called merge mining. And the idea there was, right, prevent fragmentation of hash rate, but also allow people to experiment in a synergetic way to Bitcoin. So not, create altcoins that, vampire mining power of Bitcoin and then reduce overall security, because now, think of it this way, if everybody has like a fraction of the hash rate, it becomes easier to attack. And I feel like there's very few layer twos out there that actually are keeping this in mind, that are building aligned with the core ecosystem. I feel right now you have lots of projects jumping on this orange tsunami, which is great because we have more builders and more developers and more ecosystem projects entering the ecosystem. But it's a similar issue that you see with Ethereum as well, where you have Celestia moving in to take over the DA space, and suddenly fees are no longer flowing to ETH. Which defeats the purpose of a layer 2. And you have the whole debate, well, you're not on Ethereum, that you're not on L2 if you actually don't post data to Ethereum. And I do feel that we should have a discussion about this in the Bitcoin space. Like if you're building a project that is only Bitcoin in name, and you don't even have ambitions to plug into Bitcoin in the future, well, then are you really a Bitcoin layer 2? And then, maybe the tech we can debate and so on, but the alignment and the economic alignment, I think, is very important. And that's why on Bob, we're working with almost all the major mining players to integrate merge mining. So Bob, on day one, we're launching without Bitcoin security, and working in parallel, we already have it on testnet, and working with almost all the large mining pools to actually add merge mining. And we've developed a new form of merge mining that allows us to keep the fast block times and marry the best of both worlds. So fast block times, but also Bitcoin security, and at the same time still being connected to the Ethereum space, being able to import liquidity, and then getting all the ETH users who now, they have to choose across 40 ETH L2s. Somewhere there's one that does Bitcoin, that gives them access to runes, ordinals, BRC20s, Bitcoin yield, different Bitcoin products. They go there, they start using the Bitcoin, they generate fees, and these fees actually partially flow back to the Bitcoin miners, which contributes to Bitcoin security budget. And I think, we've had the halving last week. We'll have the next one in 4 years. The next one is going to be interesting because we can always speculate and hope that the Bitcoin price will keep doubling and doubling, but it's not really a good, operational security bet that, I hope the Bitcoin price keeps doubling, otherwise I'll go out of business. And we see that. Like we're working very close with Marathon Digital, for example, who, as an example, went beyond just mining. So you actually see this having this effect where miners go beyond their normal business, from mining and merge mining to, okay, we start now building relays to accept non-standard transactions. Now we actually cater to the use case, and that's what Marathon did with Slipstream, and you have that F2 pool now following up, and you'll see all miners do the same. And then with Marathon Digital, we're working on Enduro and specifically Alice, which is a Bitcoin sidechain that will be merge mined and is targeted towards institutions, where Marathon is using their brand and their kind of the product line and their teams to onboard institutional players onto Bitcoin. And I feel that this is a unique kind of development. We've never seen this before. Previously, miners would always focus on mining, and suddenly we have this change in narrative and shift where miners actually start building tech and participate in, okay, let's build on Bitcoin, let's get more users so we actually can sustain Bitcoin security budget. And I think initially during this initial hype cycle, people will not care as much, but as time progresses, you'll see the L2s that align with Bitcoin miners just outpace everybody else. Because again, if you're building in an ecosystem and you're aligned with it, you're just going to get more support, things become easier. And that's a problem that Lightning actually had, because it was not aligned with miners and would basically, take away all the fees, which long term, we always have this debate, what happens then.
Awesome. Well, gentlemen, last question. We are coming into the beginning of Bitcoin season 2. There's a ton of projects that are racing for TVL. We've got new consensus mechanisms. We've got new ways of thinking, new ways of doing things. Looking ahead to the summer, aside from Nakamoto and aside from Bob's mainnet, what are you most excited about around the Bitcoin L2 space as things evolve here in the next 6 months? Alexi, I'll let you start.
So I think there's a technical and there's a product one, kind of, or ecosystem. Like technical, really excited for B2B MV2. Spent some time already working on it, and There are still a few quirks to work out. There's been lots of FUD, but that's good. There's lots of new versions coming out. The innovation harpy is accelerating. We went from idea to, okay, we actually know how to build a bridge. We just need to spec it out, and we're starting to build prototypes within months. And I'm really excited to see first prototypes, hopefully, coming out towards the summer. Maybe not, but I'm very optimistic that we'll see first things that we can actually play around with. And then on the ecosystem side, what I'm really, really excited about is to see Bitcoin layer 2s start challenging and beating some of the top ETH2s in terms of not only TVL, right? Because that's a temporary metric that can come and go, but actually in terms of developers, active users, and community building. And I think we'll start seeing first signals of that in the summer. And once we start, rising the ranks, and then you suddenly see more Bitcoin L2s on DeFi Lab on L2 with basically being ahead of everybody else, that's when I think the hype will break loose. Because to end kind of this, from my side, this interview, this panel, on one thing, 90% of alt L1s and L2s started with a value prop. You cannot do this thing on Bitcoin, so I'm going to build a chain on which you can do it. Now imagine if you suddenly can do everything on Bitcoin. I think it's going to be a very interesting couple of years where instead of alt L1s going to become Ethereum L2s, they will start to become Bitcoin L2s. And we've seen first of them already make moves, and I think it's just going to get much, much more.
Thank you, Alexei. Manib, quick ending thoughts as well.
Yeah, I think I'm pretty excited. I mentioned before, but I'm pretty excited about BitVM as well, and not just the main R&D branch through Robin, but also other very intelligent minds are also working on it. I think just a couple of days ago, Sergio from worked on Rootstock before, probably one of the people who's thought more about security of bridges than anyone in the Bitcoin ecosystem. He came up with BitVMX, like sort of like a other version of like how to do similar things. And I haven't read the paper yet, but I'm excited about such stuff, right? Like, because I think some alteration of this is really going to work. And I think that's going to be very, very impactful. One other thing, like I am excited about a lot of stuff, but I can only pick one more. So I think on the ecosystem side, I would say I would personally be super interested in seeing Bitcoin-backed stablecoins. Because if you look at Ethereum or Solana and other systems, one point of centralization that people don't really, I think that much about is that if there's a contentious hard fork, companies like Circle or Tether can actually decide the fork if they want to, right? Because they're that powerful. If Circle says that we are only going to support this fork and not the other one, there's like billions of dollars of USDC supply on Ethereum. So I think for our industry to grow, as much as I like these options, I think they will exist and they will continue to serve like a purpose. I do think we need a fully decentralized Bitcoin-backed stablecoin. And I think there's no better place to build that than on Bitcoin L2s, because you are the closest to BTC over here. And I think Bitcoin is the pristine capital, it's the most decentralized asset. And I think if you use that as collateral for building stablecoins, like that is an application that I'm very, very excited about.
Awesome. Manib, Alexei, thank you both very much. Exciting to see what becomes of not just Bitcoin season 2, but also layer 2 or L2 summer as we're making waves here in the Bitcoin ecosystem. Thank you both very much. As we continue on with today's discussion, want to welcome up our next panel as we begin to move further up the technical stack, looking at rollups and specifically Bitcoin semantics. And talking about rollups, ladies and gentlemen, please welcome up our next speaker, Jonas, to the stage. The floor is yours.
Awesome. Hey, everybody. Really excited to be here and excited to talk a little bit about Bitcoin semantics and things related to rollups. My name's Giannis, and yeah, let's dive straight into it. The first thing I do want to cover before I dive into the semantic session that we're about to have is that privacy is completely normal. I don't think privacy devs should be thrown in jail for developing really strong privacy tools. And I think if people think this situation is isolated to things like Tornado Cash and Samurai Wallet, I think people are mistaken. And I think we need to advocate and support the people that are building privacy tools in public, independent if they're on top of Bitcoin. So I would really implore everyone who's watching today to go out and support privacy developers. And yeah, before we get into like the semantics of this entire thing, I want to kind of share some resources that are going to be a lot better technical resources than probably what my talk's probably going to dive into. So check out Celestia to learn more about sovereign rollups. Check out ethereum.org to learn more about smart contract rollups, and bitcoinrollups.org and bitcoinrollups.io to learn more about how these implementations could be built on top of Bitcoin. So rollups. What are rollups? What are these things that everyone's now developing on top of Bitcoin, and why are we using this word? Well, the traditional definition of a rollup is essentially a trustless sidechain. It's another blockchain that uses a parent blockchain for data availability and typically would have a trustless or trust minimized two-way peg validating bridge between it and the sidechain. So it's another execution environment. It would provide more throughput potentially than the layer one protocol. And that's why people built these things. They want to have trustless sidechains that inherit the security properties of the L1 itself and not have another consensus mechanism. But now we're using all these words, like, and when we talk about rollups, we're like throwing out like MEV and sequencers, and we're talking about provers and other types of L2s that are validiums and volitions, and everyone's like getting really, really confused. And it's like, oh man, like that's really complicated. Let's not call these things rollups or validiums or validia chains. Let's just call them L2s, because L2s is like this really easy thing that everyone understands, and we'll settle on that, right? But the problem is when we have these definitions and like talk about kind of protocols and not really dive into their various security properties, is you have someone like Alice here. Like, she's great, right? Super stoked to have some Bitcoin. Alice owns some Bitcoin. She's loving life. And then she hears about this thing called a rollup, and she thinks because everything's an L2, that's an L2, and it has like this trustless validating bridge. And then she takes her Bitcoin and she puts it into the bridge, and then it spits out this like other version of Bitcoin that lives on this rollup or side chain. And she can do a lot of cool things now. She can do like Ethereum-like transactions. So DeFi, she can, do things like buy NFT. She can use privacy applications like Railgun. She's loving it. It's great. But then everything goes bad. The bridge gets hacked. It wasn't as trust minimized or as trustless as people talked and said it was. And it wasn't as secure, and it didn't actually inherit the security of the layer one protocol. And that's kind of the situation that we're finding ourselves in today with all of these new layer twos coming to market, or things that claim to be layer twos. And when you look at Alice, she's really, really sad about this because she bought into the hype on Bitcoin Twitter and she lost all of her Bitcoin because the bridge was hacked. And these things exist, right? Bitcoin exists, Ethereum exists in alternative execution environments and application layers that can be built alongside Bitcoin and provide more utility to BTC, the asset exists. But kind of framing it as this trust minimized or trustless application layer, I think is not quite where we are. But like, again, semantics, right? Like, what are actually rollups? What are rollups, right? Rollups are blockchains or sidechains that use a parent blockchain for data availability. So what that means is that the rollup blockchain stores a state root and at least enough transaction data to recompute the current state from Genesis based on the data that is stored in the parent blockchain. So in relationship to Bitcoin, what that means is that a rollup or a sidechain would take potentially something like a zero knowledge proof, and it would post that into Bitcoin as like a Bitcoin transaction. And then the rollup could eventually go, if it needed to, could go into Bitcoin and reconstruct the entire state of the blockchain based on the data that they could retrieve that data from Bitcoin full nodes. So when we talk about these things, rollups aren't necessarily L2s. And all of the current implementations of rollups on Bitcoin are not L2s. And this is where it gets really confusing because people kind of use these terms together, and this is where it gets really weird. Because remember, Alice is really upset and she's sad because she went into this rollup that was supposed to have like this really trustless bridge and like the ones in Ethereum do, and it didn't quite have that, and she lost all of her. A rollup is, remember, a rollup. It is an alternative blockchain. It is a side chain that uses a parent blockchain for data availability, thus inheriting the consensus how we define L2. So projects where a user will lock funds into, let's say, a bridge contract or some type of multi-sig, and then they would be able to enter the L2, do a bunch of transactions there, and only use a Bitcoin L1 transaction to exit the L2 and not have to rely on any other consensus mechanism. So we're currently, right, tons of semantics, tons of definitions, and it's like, what the heck is going on? This is where we're at. Rollups are blockchains that post enough data to reconstruct their state based on the data that lives in Bitcoin. Bitcoin rollups are currently not L2s, and Alice is really upset because everyone told her it was an L2. And it's just like, what is actually going on here, right? This is insanity. And the issue is that we have these things of like comprehensive Bitcoin layer 2 solution lists, right? And everyone wants to be a part of this like new scaling ecosystem. And the problem is that we're putting things like rollups, even though they can exist today technically, we're grouping them into other groups of a generalized like framework for scaling solutions, and we're not really analyzing the trust properties and isolation of each other. So like, where is this coming from? Like, why are people talking about rollups? Back in 2022, a team called Rollkit from the Celestia ecosystem basically figured out how to inscribe a zero knowledge proof into Bitcoin, thus being able to use Bitcoin for data availability. So what this means is they now can basically separate the Bitcoin blockchain and have an execution layer that kind of operates autonomously from Bitcoin, but it stores, its transaction data, pays fees to Bitcoin miners, and is able to verify the transactions based on some mechanism based on the data that's put in Bitcoin. So how this works in practice is that the sovereign rollup will execute a bunch of transactions. Let's say it's an EVM rollup and it has like NFTs and DeFi and smart contracts and whatever, executes a bunch of transactions. It posts that transaction data to Bitcoin. And then a group of rollup nodes will then read the data that's inside of Bitcoin, and they will verify that the execution of the rollup was done correctly. This is starkly different from how these things happen in Ethereum, as the Ethereum smart contract and the validators on Ethereum would be able to be the ones that would be able to verify this thing called a state transition, which is what the zero knowledge proof is. And now what's happening is this is not technically the best way to explain this, but we're basically replacing the role of the rollup light nodes with something like BitVM. So we're using an off-chain mechanism where Bitcoin full nodes can participate in a bridge program to verify the state transition and secure a two-way peg between the rollup and the Bitcoin blockchain. So we have the BitVM rollup, execute a bunch of transactions, send that to approver, who would then post that zero knowledge proof onto Bitcoin. And then the BitVM bridge program would be responsible for verifying if the execution of that state transition was done correctly. And if it needed to, can permit user withdrawals based on the state transition that's living in Bitcoin. So the reason like people are loving this stuff, because it's like, it's a new economic opportunity and people are really excited about the way that we can build on Bitcoin with these new execution layers, and the way that we're researching new ways to potentially add more trust minimize bridging protocols that people have been mentioning in previous talks. Super exciting time. So again, to finish the talk and finish the semantic session, Bitcoin rollups are blockchains that put a bunch of data on Bitcoin, and they may have a validating bridge, but that is not a requirement to be a rollup on top of Bitcoin. And they're not trustless yet, and they're not L2s yet. What would make it an L2 is a trustless validating bridge. Need a couple soft forks to do that. What would make it trust minimized is something like BitVM, and that's a super cool development that we might see in like the next, I would say, 12 to 18 months. And then we also have these other execution layers like Stacks, Meso, and other protocols like Bitcoin sidechains, who are blockchains that have an enshrined two-way peg with Bitcoin. They're not necessarily trustless, but they can really do a lot of interesting things to be more trust minimized, and they're still really cool. I think the way that we need to look at these things when we talk about L2s and talk about this like general framework of looking at Bitcoin scaling is being bullish, but also skeptical, and analyzing each of these implementations in isolation so users can clearly understand the risks associated with all of these different protocols. That's all I have for you guys today. I'm super bullish on Bitcoin rollups. I think they're really cool, and I'm also really interested in other Bitcoin application layers, and just think we're in a really interesting time right now. So yeah, that's my talk.
Thank you very much, Giannis. And let's continue the conversation around rollups. And now moving into our next panel about rollups and sidechains. What's the difference? That's what this panel is going to talk about, ladies and gentlemen. Please welcome up the next panel. And Andre, the floor is yours.
All right, good afternoon, everybody, and welcome back to the Building on Bitcoin virtual event. My name is Andre Serrano. I work at product at Stacks Foundation. I'm joined here by Elena Herald, who leads product marketing at Hero Systems, and Janus, who is the founder of the Bitcoin Layers project, as well as the creator of Bitcoin rollups.io. We just heard his talk on some of the basics of rollups and Bitcoin L2s. And today, this panel is going to go a little bit deeper to explore some of the topics that he already started to talk about. We'll be going over the different Bitcoin layers categories. We'll explore some of the trade-offs and the approaches that some of these projects are taking, and how you, as the user of this technology, should really start to evaluate some of these Bitcoin layers. So with that said, let's go ahead and dive right in. Elena, I'm going to come over to you for this first question. I'd love if we can kick things off just at a high level. So why are Bitcoin layers needed, and why do you think that people are so excited to build on Bitcoin L2s right now?
Thanks, Andre. Happy to be here. So yeah, why are Bitcoin layers needed? There's two main properties that people look for in Bitcoin layers. One is increased functionality and increased scalability. But if you wanted increased functionality, increased scalability, you could just go to a separate blockchain. So the second element of Bitcoin layers is having a place that gives you increased functionality and increased scalability while inheriting those amazing security and liquidity properties that Bitcoin has. So that's essentially why Bitcoin layers are needed. And then the reason why people are really jazzed about it right now, I think we've heard about that all day today. So there were two main innovations in the past 24 months that have gotten people really excited about new ways that you can use the Bitcoin L1. Ordinals was a really playful and engaging and super successful demonstration of how meta protocols can bring fungible and non-fungible tokens onto the Bitcoin L1. And then BitVM, which Janus was talking about quite a bit in his presentation. So it's a clever way of minimizing trust and getting the Bitcoin L1 to kind of verify off-chain claims.
All right, and Janus, anything to add to that?
No, I would just echo that it's a really exciting time, and I think there's a lot of interesting technological approaches. I am also interested in protocols that, you know, don't necessarily want to be like quote unquote a Bitcoin rollup and are looking at other designs, whether it be, you know, building on Ethereum and having, you know, some bridge protocol between the execution layer and Bitcoin, or building, you know, like a new Tendermint like Cosmos chain, and again having like that bridge protocol with Bitcoin, but having like some way that BTC, the asset, can act as like a security mechanism for the chain. So I think like rollups are really cool. I've obviously been looking at them for like the last couple of years, but also I think these new execution layers and strategies that are coming to market are also super interesting, and think people should be open-minded about the entire thing. So I think it's a really exciting time.
Yeah, definitely. So we have all of these new use cases that are coming back to Bitcoin. I think that people are also starting to realize just the large market opportunity that exists with this asset class. So we're dealing with a $1.2 trillion asset class that has still very little on-chain uses, very little existing applications, and yet there is just a blue ocean of opportunities that we can start to explore to make Bitcoin a more productive asset. And so I think that's really starting to generate a lot of this enthusiasm that we're seeing. Now, Janus, I want to come over to you next. So you've been looking across the Bitcoin layers ecosystem and really starting to classify dozens of projects that we've been seeing pop up over the past year or so. And so how do you classify the current state of Bitcoin layers?
Yeah, so I think you have, you know, there's a lot of different implementations. You have things from like CSV protocols, you have state chains, Lightning, you have federated applications like Fedimint and eCash, like Cashew. So you have this like wide array of solutions that are very focused on like solving the payments side of things that I think are very interesting and worthwhile, like are worth discussion, right? This new wave of like, you know, Bitcoin scaling solutions are trying to model something similar to what Ethereum is. So but I think they do something a little bit different than Ethereum. Like if you look at the rollups on top of Ethereum that have some of the most users and some of the most like TVL, they're basically replicating the applications that already exist on the Ethereum L1. What's different about Bitcoin is that these new execution layers are providing, Ethereum-like or Solana-like execution environments for users of BTC, the asset, right? So it's kind of, taking the scaling roadmaps from Ethereum and Celestia and trying to like blend that in with Bitcoin, providing more use cases for BTC. I would say the implementations of those designs are broken down into a couple of different things. Like you have things called sidechains, which are other consensus protocols, can be more integrated or unintegrated with Bitcoin depending on the implementation. And you typically have a two-way peg enshrined in the protocol that is securing the BTC. You have rollups, which are posting data to Bitcoin, which I just talked about, and additionally can have a trust minimized validating bridge. You also have these side chains that are specifically acting as settlement layers. So if you look at something like Side Protocol, their thesis is that we're going to be a settlement layer for rollups, and we're going to be the layer that integrates with Bitcoin in some form of fashion. And we're going to give the rollups and the applications the freedom to design their chains as like pseudo layer threes, if you want to call them that. I'm not sure if they're layer threes, but you have that type of implementation as well. And then you also have chains that are focused on being more like application layers, so things developing on Ethereum or Tendermint, and they're also looking to implement this trust minimized validating bridge or trust minimized bridge for the Bitcoin asset and Bitcoin assets more generally. But yeah, they're using a different protocol for different security trade-offs versus something that would be more, I would say, directly integrated with Bitcoin per se.
Got it. So we're seeing a variety of projects launching, and it sounds like they're just making a range of different trade-offs in their design. Some that are essentially focusing more on scalability or maybe throughput improvements, whereas some we're seeing that are really focused on reducing those trust assumptions. And there's almost like a trade-off that you have to make in terms of how you are evaluating these sorts of protocols. Elena, I'd love to go over to you next. I know in the Stacks ecosystem, we are looking really closely at a lot of these projects that are launching and really trying to understand how we can just look at some of the most innovative technologies that are happening in the Bitcoin layer space and really kind of trying to figure out, what is the long-term roadmap for Stacks going to look like, and which of these technologies do we really want to invest more?
Yeah, I think so. To answer the current state of Bitcoin layers, Janus was talking about all the innovations that are in the market today. Something that I also am thinking on Bitcoin layers in general. But then in terms of like the trade-offs, it's the double-edged sword between what's the additional functionality that you're giving, and then what are the trust assumptions, or what are the additional trust assumptions that you're including into the equation. So yeah, we in the Stacks ecosystem think a lot about the trade-offs. I'm happy to talk about a few of the different types of layers and a few of the different innovations and how those trade-offs might impact user experience or developer experience, or a combination of all of those things.
Yeah, no, you raise an interesting point about how a lot of these developments are happening at a time where we just saw the Bitcoin halving and the Coinbase subsidy continuing to decline. And so a lot of these Bitcoin L2s are contributing fees directly back to Bitcoin miners that help to actually secure the network and contribute to the stability of Bitcoin's long-term network health. So really interesting point there. I'd love to just drill into a couple of things that you guys have talked about. I know like through this conversation, we've heard terms like trust minimized bridging, and Yana, you talked before about terms like unilateral exit. Can you just help people really understand what we mean by these terms, and are there any other features that you think are important for Bitcoin L2s?
Yeah, so it's still a bit of a gray area, right? I wouldn't say that we've completely solved what this implementation of a trust minimized bridge is going to look like. I would say my understanding of BitVM2 is that anybody who's anybody can participate as a verifier in the program. So anybody can initiate if the operator is acting maliciously. anybody can then go and challenge the operator and act as a verifier. This is very similar to like a fraud proof scheme that exists in something like Optimism or not Optimism, sorry, they're adding fraud proofs, but something like Arbitrum today, so like in Ethereum. And projects like Optimism are going to be adding fraud proofs here soon. So that I would say, as long as the role of acting, being able to initiate the challenge or submit the fraud proof is permissionless, I would say that that's pretty trust minimized. The other direction you might have is like having a consensus protocol manage like the two-way peg. So something similar to like issuing a token and having that token have enough value to where that value, if I'm an operator of this two-way peg and I'm acting maliciously, then my stake in this token will be slashed. And if the token is worth enough and is economically incentivizing me to act good, then I think those like mechanisms are also like kind of interesting. And I know people have been talking about that a little bit more lately. So those are like a couple of things like with regards to like trust minimized bridging. What we're really talking about with unilateral exit though, is that like in both of those models, like there is some trust with the operator of the bridge protocol. I think, things like permissionless verification are really interesting because you're really minimizing that trust to a broader set of participants. But things like, for example, like unilateral exit, what that means is that if I lock my asset into the layer 2, that all I need to do is initiate an L1 transaction to exit the protocol. So when we talk about that, there's a couple of nuances there. Like, well, one, right now it can be pretty expensive to do an L1 transaction, but I still think having that property and giving people that optionality is still important. But I think it also bodes to the fact that we also need to consider like what Ethereum is looking at right now, how to like decentralize block producers and decentralize provers, and make sure that there's decentralization and we're mitigating the risk for censorship and liveness failures in those systems. So, and even when we're looking at layer 2s and Bitcoin or sidechains or application layers, we need to think about how we decentralize trust to where we're not relying on single parties or small groups of people to permit withdrawals, to include transactions of blocks, etc.
Yeah. Oh, go ahead, Elena.
If I can jump in, yeah, I just want to go back to Alice from Jonas's presentation a few minutes ago. So in very plain, like simple terms, if Alice wants to drive on this magical bridge to Web3 land and she wants to take her Bitcoin with her, unilateral exit implies that she doesn't need anybody's permission to get off the bridge if something bad happens. In most of these designs, when we say things like sequencers or block proposers or bridges, what's happening in a decentralized system is that you have independent nodes, computer programs, protocols that are kind of like gating or running when different transactions happen. And so if you have all your trust in a bridge or in an L2, you're not inheriting the security of the L1. But if you can unilaterally exit, meaning you can just send a transaction to the Bitcoin L1 and get off the bridge and back to safety, that's a property that's really, really exciting for a lot of people. The flip side is just it's really hard to build. And so I think that's where a lot of the trade-offs are, is helping users understand what's possible in theory, what's in active development, and then what's actually on mainnet. The other kind of flip side with trust minimized bridging or kind of understanding risks and trust assumptions, and shout out to the Bitcoin Layers project. They have done a great job so far, kind of adding to the general knowledge base of like these universally understood terms. But the flip side is like, if you have a sufficiently decentralized sidechain, then when you're talking about trust assumptions, it's true, you have to trust a different set of operators or a different set of nodes and validators on another chain. But you might have, just as good decentralized trust assumptions because those operators are sufficiently decentralized. So it's a lot of moving pieces. And I think, yeah, that's why using Alice and the bridge metaphor is really helpful. It's just unilateral exit means getting off the bridge and back to safety without having to ask for permission. And kind of how that bridge is constructed is part of that.
Yeah, I think that's a really clear way to explain that, Elena. And just to like double click on one thing, I think that one of the limitations of building on Bitcoin right now is that it doesn't have smart contracts, right? It doesn't have a way to verify those L2 state transitions the way that Ethereum can, for example. So from your perspective, or maybe Janu's, do you think that Bitcoin needs an upgrade or needs future upgrades to the Bitcoin L1 in order to actually see some of these L2s develop in the way that you have described?
Yeah, I would say, I would point to a recent article from Shinobi in Bitcoin Magazine on CatVM and also the Bitcoin rollups.org white paper to talk about two upgrades, like a recursive covenant and something like an OP snark verify. So a verifier in the L1 that could, verify like ZK snarks. I think things like that are interesting and worth discussing.
Awesome. Okay, and we're just about coming up on time here, so I want to give you both an opportunity to just share any concluding thoughts that you have, or maybe some ideas for where things might be headed in the future for Bitcoin layers. Let's start with you, Janus, and we'll let Elena close things out.
Yeah, I think ultimately, right, I think we're in an extremely new design space. And I think even when you look at places like Ethereum that have been working on these things for like, a number of years, there are still all these arguments around definitions and the most secure implementation of an L2, et cetera. And I would just say like there are a lot of really like these types of activities and exercises are really good to get the information out. But I think what's even more valuable is there are a lot of communities out there, via Telegram, Discord, other Signal, other chat communities where people are actively discussing these things in the open and not acting like everyone has it all figured out. So being able to enter these communities and really enter a mode of discovery and kind of try to realize what's possible and how to analyze all these different these implementations in isolation of each other. So I think things like that are really interesting. I would definitely recommend, the BitVM Builders Telegram group, rollups on Bitcoin. And then additionally, we're hosting a Telegram group called Documenting Bitcoin Layers, where teams are very active in trying to figure out what these different designs and trust assumptions are. And yeah, and if keep everything open source as well, because if we might, get something wrong. And if we do, just, correct us on it. So those are my thoughts. Pass it over to Elena.
Yeah, +1, echo everything that Janu said, particularly building an open source. One of the coolest things about this industry, and particularly about Bitcoin, is that we can build our values into the technology itself. And, we talk about all these definitions, like who really cares? Does it actually make a difference to the end user? I think it's like the car metaphor a lot. People really want faster cars. They didn't really ask for seatbelts. And having really thoughtful and engaging discussions and debates around like what are adequate trust assumptions for the next generation of the world's financial rails. I think it's exciting. It's kind of nerdy and it definitely gets into the weeds, but that's what I'm most excited about, is us continuing to build these values into this technology that's so exciting.
All right, I completely agree. Well, thank you both. I'll just add that it's great to see all this experimentation and creativity in Bitcoin. And it's important to remind, I think, myself sometimes that this really is a 10-year time horizon that we're building for. A lot of these technologies in the Bitcoin L2 space are still very early, and we don't know exactly what is going to stick yet, but just seeing all the brain drain of people coming to solve really hard problems in the Bitcoin space has been really exciting to see this past year. So looking forward to seeing where that goes. And I think with that, we're out of time. So thank you, everyone.
Thank you very much, Andre, and to the entire panel. Next up, continuing today's discussion, let's take a bird's eye view on a very special upgrade that has just begun and is important not just to its network, the Stacks network, but into the greater Bitcoin L2 landscape. The next panel will talk about a bird's eye view on Nakamoto. Ladies and gentlemen, please welcome up our panel. And Andre, the floor is yours.
Okay, hi everyone. It's great to be back for another session here at the Building on Bitcoin virtual event. Again, my name is Andre Serrano. I work on product at the Stacks Foundation. And this time I'm joined by Kenny Rogers, the developer advocate at the Stacks Foundation. Today, we're going to be doing a deep dive on Nakamoto, laying out everything that you all need to know about this upcoming network upgrade to the Stacks network, what it means for users and developers alike, and what are some of the key technical changes that are introduced as part of this. So, Kenny, welcome. I'd love if we could just start off at a high level. Can you talk about what exactly is the Nakamoto upgrade and what are some of the key changes that are introduced?
Yeah, so the Nakamoto upgrade is the upcoming and one of the biggest upgrades that's happened to the Stacks chain so far. And there's really two key changes that it brings, and that's fast blocks and Bitcoin finality. So when I say fast blocks, right now the timing of Stacks blocks is tied to the timing of Bitcoin blocks, and that just makes for a really slow transaction confirmation time, really slow user experience. We've talked about other chains on this event so far, like Ethereum and Solana and some of these smaller alt chains as well that have really fast, snappy transaction times. And so what Nakamoto does is it'll bring that transaction confirmation time down from whatever time it takes for that Bitcoin block to confirm down to the order of like several seconds. And so fast blocks is one of two key technical changes. And then the second is Bitcoin finality. And what we mean when we say Bitcoin finality, the way that I like to describe it is it's the point at which you can consider a Stacks transaction as secure and as hard to reverse as a Bitcoin transaction. So those are really the two key changes that Nakamoto brings are the fast blocks and the Bitcoin finality.
Yeah, fast, secure, programmable Bitcoin. That's the way that I like to think about it in a sentence. Okay, Kenny, I'd like to go just a level deeper on some of these changes to really understand the how all this works. So can you just help us understand how does the Nakamoto upgrade really improve the functionality and performance of the Stacks network?
Yeah, so those two key changes are kind of brought about by a couple of key technical modifications that are happening to the chain. And then the first one is that as Stacks stands before Nakamoto, miners are cryptographically selected to mine a new Stacks block, and they do that in lockstep 1-to-1 with Bitcoin blocks. Whereas after Nakamoto, what's going to happen is miners are still going to be cryptographically selected, but what they're going to be selected for is to mine for a specified tenure, and that tenure is going to correspond to a Bitcoin block time. But within that tenure, they're going to be mining several Stacks blocks very, very rapidly. But then the other half of that equation is, whereas before miners were responsible for both proposing the content of the blocks and broadcasting them out to the chain, what's going to happen now is that stackers in the ecosystem will take on the additional role of becoming what are called signers. And so miners have the first step of the new block creation, and that's to propose new blocks. But that's all they do in this case is they propose the new content of the blocks. Then what happens is those blocks get sent over to signers, and those signers are the ones who are in charge of validating the blocks and agreeing upon the validation of those blocks, and then they're the ones that actually then will broadcast that new block out to the other nodes. And only when these signers have reached a 70% agreement that the block should be included will it then get broadcasted and picked up by the other nodes. So it introduces a little bit of a cooperative relationship, and this new tenure-based structure is how miners are able to create blocks really, really quickly. And then how we can tie that same change in roles to the Bitcoin finality side of things is the additional role that these signers will take on outside of just validating the blocks themselves and pushing them up to the other nodes, is they're actually going to make sure that the miner is building on top of the correct Stacks chain tip. So the way that Stacks works before Nakamoto, what you can call the security budget or the amount of money that it would cost to change the history on the Stacks transaction chain, that was separate from the Bitcoin security budget. So let's say, for example, I, as a malicious miner, wanted to change the history of the last 5 Stacks blocks. Well, that would only cost me as much as it would cost to mine 6 Stacks blocks, basically. It's like an N+1 type formula. I didn't actually have to override any of Bitcoin security budget. And the reason for that is that because I, as a new miner, I could orphan recently confirmed transactions and basically fork the chain and create what I wanted to be the canonical version of the chain now. So what's going to happen now in Nakamoto is that forking is not going to be allowed anymore because as part of a miner starting their tenure, they have to confirm the previously agreed upon block and they have to build on top of it. And if they don't, then the signers will reject that block. And the miner's not going to be able to build on it. They're not going to be able to get their Coinbase reward. And so it forces the miner to build up on top of the canonical chain tip. And then what happens is every tenure, when the miner switches to the next miner's tenure, the signers will initiate a tenure change transaction. And part of that is that last block that was mined. And that all gets written to the Bitcoin chain every tenure change. And so once 2 tenure changes have passed, a Stacks transaction can be considered settled to Bitcoin and will have the same security, same finality, same cost to reverse that transaction as to reverse a Bitcoin transaction in the same block. So that's kind of the technical overview of how all of that works. And so, yeah, I think that about covers it. The important part I think the important thing to know there is that there's now this cooperative relationship between miners and stackers, and that's really what's going to allow both of these things to happen, so that they both only get their economic incentive if they faithfully fulfill these roles that they have now.
Yeah, no, I think that's a very clear explanation. And I know it's a little bit technical, but you did a really good job of sort of breaking down a lot of the main changes that we're going to see as part of this Nakamoto upgrade. And it really is a fundamental upgrade to the way that the Stacks network operates, and mainly by separating the role of block production so that signers take on this additional cooperative relationship with miners in order to advance the chain. So, Kenny, with that said, I'd love to switch gears a little bit to talk a little bit more about the developer and user experience and what people should expect when transacting on Stacks Nakamoto. So, from a developer's perspective, why do you think Nakamoto is so exciting, and how exactly does it impact the developer experience?
Yeah, I think it goes back to those two core changes, the fast blocks and the Bitcoin finality. So if you are a developer that has had to deploy and test on a test net that has slow transaction confirmation times, then you know how much of a pain it can be. You have your local development environment, sure, but then once it's time to deploy it to testnet and start experimenting and testing things in a live environment, when you have to sit there and wait 10, 20, 30 some minutes, sometimes up to an hour for a test transaction to confirm, it really slows down your development process and can be extremely frustrating. And so one of the things that I'm most excited about as a developer are those fast block times, because you have a significantly faster feedback loop for you to be able to test your application. And it's just a much more enjoyable developer experience. And all these things are going to be wrapped up in the local developer tools as well. And so you'll get those benefits everywhere. But then at a more deeper, almost philosophical level, the Bitcoin finality is anybody that's building in this ecosystem is building because they want to build towards a better financial and economic system. And so just knowing that you're building on something that has that Bitcoin finality, I think makes a big difference. And, we heard some people earlier talk about how you kind of have to have a mission focused mindset to build in this space. Otherwise, you're going to get burned out. And so just knowing that you're building on a chain that is being built to be as secure and decentralized as possible, I think really helps to just know that you're building on the right thing when you're building for the right reasons. And so that's kind of where I see developers coming in. But the flip side of this equation that I would like to hear your perspective on is kind of how you think this is going to affect the user experience.
Yeah, absolutely. And I think it impacts the end user in a lot of the ways that you described it impacting the developer experience. But just to go like another level on that, I think fast blocks and the overall scalability of the Stacks network under Nakamoto will see a significant UX improvement. I think the rest of the crypto industry has gotten used to really fast block times, and we found ways to solve this sort of scalability issue. But when transacting on the Bitcoin L1, transactions are still taking 10 to 20 minutes. It can take up to an hour for those transactions to finalize. And since Stacks blocks are currently produced one-to-one with Bitcoin blocks, we're seeing a lot of those same issues happening on the Stacks network. And so I think users are going to experience a significant improvement in the ways that they can transact with Bitcoin that should provide much better experiences overall for the end user. And I think the same thing, as you started to allude to, with the overall security on the Stacks network. And so the fact that Stacks transactions will settle down to Bitcoin through the proof of transfer consensus method, while also being able to ensure that those transactions are receiving the same level of security as the Bitcoin L1, means that those transactions can't be dropped or reorged, which should be an improvement in how most end users are interacting with the protocol. The last thing that I want to mention is just this impact to stackers, because I think this is really significant, because basically stacking is one of the products in the Stacks ecosystem that I think has clear product market fit, right? Like users love to be able to earn a Bitcoin yield as part of stacking. I think we've seen that through all sorts of market cycles. And basically with this upgrade, it means that stackers are going to need to do some additional work in order to get that Bitcoin yield by taking on these additional responsibilities. And those responsibilities help to ensure the liveness of the Stacks network, and eventually they'll even be responsible for validating SBTC deposit and withdrawal transactions. So I know we'll get to that a little bit later, but that's a big change to currently how some users experience stacking. And while that's been a useful way to bootstrap the chain in the first couple of years on mainnet, I think moving forward, there are some significant changes to what users should expect. So on that topic of the stack signer, Kenny, could you give us just a quick overview of what running a stack signer should actually entails, and what should signers expect when they're getting started with that?
Yeah, so there's really two main things that you need to do as a signer in the Stacks ecosystem, and that's that you need to run a signer node that's running the signing software, and then you need to conduct your stacking operations. So earlier when I was talking about the new technical changes that are enabling Nakamoto, the stackers are the ones that are fulfilling this signing role, and so they have this now additional responsibility, and basically fulfilling the role of stacking and signing. That's now going to be compensated by the miners, and they're going to be distributed with that Bitcoin yield. And so what it looks like to actually fulfill that role and take on that responsibility is you need to run the signer software, and you need to run that alongside a Stacks node and a Bitcoin node. Now you can connect to a hosted Bitcoin node if that's easier, but we do recommend running your own just because you have more control over how everything's working. It's easier to troubleshoot that way. But the main thing is running the signer software. And what the signer software is going to do is it's going to continually pull the chain and look for new blocks that are being proposed. And it's going to run the functions that need to be run in order to validate that block and make sure that it is following the rules of the chain. And if it's not, then your signer software is not going to generate the signature to validate that block and agree that it should be proposed to the chain. And so really what happens here is you're doing two things at once. You're running that signer software, and then you're conducting stacking operations. And usually the best way to do this is each of these things are going to be associated with their own Stacks account. So you have a Stacks account associated with your signer, and then you'll have a Stacks account where you're conducting your stacking operations. And on the signer side of things, what's going to be happening is you're actually going to be generating a signature using that signer, that Stacks account associated with your signer. And you're going to be using that to sign the new blocks that are coming in. And when I say you, the signer software is going to be doing this automatically. So it's not like you have to sit there and manually check and make sure all these blocks are validated coming in. The software is going to conduct these operations automatically. But then the flip side of that is you need to also fulfill your stacking role. And there's a few different ways that this can happen. The simplest way is as a solo stacker. So if you have enough to meet the stacking threshold minimum, you can operate as a solo stacker. And what this now means is that you'll have to run a signer and also conduct your normal stacking operations. And the main change on the stacking side of things is that you now have to pass in a valid signer signature into your stacking transactions. And so basically, in order to stack now, you have to do one of two things. You either have to be running your own signer, or you have to work with a signer that has agreed to allow you to stack on their behalf. And in that case, what they'll do is they'll provide you with their signer signature that then you can go and pass into these stacking transactions. And the flow looks a little bit different if you're either delegating as a stacker or if you're operating a pool. So if you're a stacker that normally delegates your stacks to a pool operator, you don't now need to go and run your own signer also. So this is, I think, where the majority of people in the stacking ecosystem currently are, is they're participating in a pool and they're delegating their stacks to the pool operator to stack on their behalf. In this case, it's the pool operator's responsibility to run that signer. So what's going to happen is I, as a stacker, I'm going to delegate my stacks to the pool, give my permission to delegate my stacks to the pool. That pool operator is then going to say, okay, yes, I'm delegating this. And then they're going to aggregate all that, commit it as a single stacking transaction. And when they do that is when they're passing in their signer signature. So depending on exactly how you want to stack and run a signer, there's a couple different arrangements of what you can do. But that's the general overview of how that actually works. And we have a bunch of documentation. If you just go to docs.stacks.co, if you're interested in filling any one of these roles, if you want to be a signer, solo stacker, pool operator, or a delegator, you can go and see exactly how all that works and what exactly your role is, what actions you need to take to kind of fill that out. So that's how the process works and kind of what signing and stacking looks like from an actual logistical technical perspective. But I kind of want to get your perspective and move into talking a little bit about from the ecosystem perspective. So there's been a ton of effort that's gone into kind of bootstrapping what we want to be a robust signer ecosystem. And you've been really kind of leading the way on a lot of those efforts. So I kind of want to hear from you on what that experience has been like and what you guys have learned along that path.
Yeah, definitely. So really, we've spent the past 6 months or so really developing a robust validator ecosystem. And so I'm happy to share that as of today, we really have a best-in-class group of validators that are participating in becoming a Stacks signer. This includes both institutional stacking providers as well as more retail community-focused stacking pools. And so we've been working with validators that can bring a lot of new capabilities to the Stacks ecosystem. That includes everyone from Bitcoin miners to validators that are bringing new use cases to the Stacks ecosystem, or even unlocking new geographic regions and helping us activate communities in different areas. So it's been great to see that level of engagement with getting set up with running a Stacks validator. And there's a few things that I've learned throughout this process. I think first is that it's important to select validators that are going to be in the trenches with you, frankly. I think that the validators that we have are responsive, they are proactive, and they've really been working with us over the past several months to update documentation and catch bugs early. And I'm sure that it's been a lot of this really proactive testing that has helped ensure that the 2.5 upgrade that went out earlier this week really was smooth through all the testing and proactive measures that these validators have taken. I think the second thing is really just the importance of good communication with these validators. So onboarding a network of 20 plus validators requires a lot of coordination, and we've been really trying to provide a white glove service in how we really onboard these validators, helping to troubleshoot, make sure that we're logging that sort of feedback and sending it back to the Stacks core engineers. And so really having the good communication with our validators and selecting for folks that are going to really be proactive in how they're working with us as we go from DevNet to testnet to mainnet, I think has been a really important thing to select for. And obviously becoming a Stacks validator is completely open and permissionless, and anyone can choose to run a Stacks validator. But those are just some of the things that we've noticed in terms of actually getting this ecosystem up and running. Kenny, on that note, I'd love to transition a little bit to talk about what people should expect next as far as the Nakamoto rollout plan. So phase 1 was just completed this week. Could you talk a little bit about what exactly was included in this release and what should everyone expect for phase 2 when that comes out?
Yeah, so the Nakamoto rollout plan has been pretty carefully and intentionally designed to be this 2-phase process. And the reason for that goes back to how I was describing the technical setup earlier, where these signers and stackers, their role is now going to be consensus critical in Nakamoto, and they're going to have 2 different roles that they have to fulfill in the signing and the stacking. So what phase 1 did is it activated the new POX4 contract, which includes the new stacking rules. So what this means is that now, during phase 1, all of the stackers that were previously stacking before and any new stackers that want to go online, they now have this time during phase 1 to get their signers up and running and make sure that that process is running smoothly and making sure that they have everything working the way that it needs to be before it becomes consensus critical in phase 2. And so the main reason behind rolling it out in 2 phases like this was to provide that buffer to make sure that all of the effort that's gone into building this signer validator ecosystem that you're talking about, that we can actually get that up and running and rolling smoothly in the new environment before it becomes consensus critical in phase 2. And then when that happens in the activation phase, that's when we'll see these new things that we've been talking about that are going to be more apparent to users and developers, like the fast blocks and the Bitcoin finality.
Yeah, that's right. And I guess it's probably worth calling out here that as of the 2.5 upgrade on Monday, everyone's STX has been unlocked. And so it's important to, if you want to continue earning that Bitcoin yield, make sure you go ahead and restack. We've already been working with all the major stacking pools in the ecosystem to get ready for that. So you can go to Stacking DAO, you can go to Fastpool and make sure to restack and continue earning that Bitcoin yield. So I know we're coming up on time, Kenny, but maybe we can start to wrap up here and just talk a little bit about what's coming next after Nakamoto and any other concluding thoughts that you want to share with the community.
Yeah, so I think the 2 big things that are coming after Nakamoto that Nakamoto was necessary to enable that I'm really excited about are SBTC and Clarity WASM. And so SBTC, we've talked a lot about, people have heard a lot about it. We've been talking about this concept of two-way bridges that are as trust minimized as possible. And so SBTC is Stacks' version of that two-way trust minimized bridge to bridge your Bitcoin back and forth between the L1 and the L2. That's been in the works and in development, and has a ton of thought and effort has gone into the best way to design that. And so I'm excited for that to continue to be worked on, to have a lot of the effort that's been focused on Nakamoto be able to shift into making that a reality. And then the other big one is Clarity WASM, which is really going to add even more speed to the chain and to how fast transactions are processed. And we won't go into the details, the technical details of how that works, but basically it means that Clarity transactions are going to be able to be executed significantly faster than they are right now. So we've got the first speed increase with Nakamoto fast blocks, then we'll have an additional speed increase when Clarity WASM comes out. So those are the two big things that I'm really excited about. And then as far as, especially developers can get involved, there's really two places I'd probably send people. The first is just to the docs. It's docs.stacks.co. This is going to take you to a Start Here page, which is going to direct you wherever you need to go, learn about how Nakamoto works, how you can get started building on it. And the second place is something I'm really excited about. We just partnered with Learn Web3, who's a huge educational player in the Web3 space. And they just kickstarted their Stacks developer degree, which is going to be 4 courses going super in depth into how to build on Stacks. And so they just released the first course, Intro to Stacks. And so I highly recommend any developers interested in building on Stacks, go check that out. Their domain is learnweb3.io.
Okay, thank you, Kenny. Well, everyone, this pretty much concludes our panel. There you have it on everything you need to know about the Nakamoto upgrade coming this spring and really kicking off Bitcoin L2 summer. So I think now's the time to start building on Bitcoin, go visit the docs, and yeah, thank you.
Thanks.
Thank you, Andre and Kenny. Next up, continuing the conversation, let's shift from the Nakamoto upgrade to smart contracts. Build, test, and integrate with the Hero platform. Ladies and gentlemen, please welcome up our next speaker, Leah from Hero. The floor is yours.
Hey everyone, super happy to be here. I'm Leah, I'm a software engineer at Hero, and I'm really excited to be able to talk about some developer tools today. So in this session, we're going to be diving into the process of writing and testing a Stacks smart contract, and then we'll take a peek at how we would start to integrate our smart contract with some application code we are developing. We're going to be getting a little hands-on here with some live coding, but it will be totally beginner friendly. So even if you've never written a smart contract before, I hope you stick with me. Today, we're specifically going to be working on smart contracts on Stacks, a layer 2 chain on Bitcoin, which enables smart contracts anchored by Bitcoin. Okay, web development is hard. You've got to master a bunch of different technologies and adapt constantly to new tools and standards. The JavaScript ecosystem is quite honestly a bit of a Frankenstein monster. Tools and frameworks come and go, and it can feel like trying to build a sandcastle with the tide rolling in. And then take Web3 development. You have all the same challenges of web app development in general, and then add on the decentralization aspect. It's a totally different paradigm of thinking about data storage and software maintenance. There are new protocols and tools emerging constantly, and it's kind of the Wild West in terms of standards and best practices. How do you develop against the blockchain locally? What is the blockchain? What blockchain are we even talking about? You can't update your smart contract after you deploy it. Yes, it's immutable. You ship something to the blockchain and you can never, ever, ever change it. It's there forever. No rollbacks, no migrations, nothing. It's completely transparent and public. So anything you put on there, anyone can read it forever. It can be really overwhelming just to get started. Today, I hope to simplify the process for you and introduce you to some tools in your toolbox. At Hero, we focus on developer tools for Stacks. Let's first take a look at kind of a high-level view of a decentralized application architecture. This is, of course, just a simplified concept. There are lots of different ways you could arrange these moving parts. There's a lot of other parts you could use, but take this concept. So a dApp built on Stacks might have some familiar parts for web devs, like a front end, a back end, a database. It'll also use a wallet browser extension to let users make secure and authenticated transactions on the Stacks blockchain. And your application, as well as your users through their wallets, will be interacting with the Stacks blockchain via calling functions in your smart contract, which is really the heart of your dApp. Smart contracts on the Stacks blockchain are written in a language called Clarity, and they store critical data and set the ground rules for your app's business logic. And they can also transact and hold Stacks tokens. Of course, every great app has to start with an idea, and the example we'll be getting started with today is going to be a decentralized crowdfunding application. So think Kickstarter, but decentralized and trustless. I think this is a really good use case to consider because it involves sending and receiving funds with a particular set of rules. You want your transactions to be secure and transparent. You want to have confidence in what's going to happen with your money, and you don't want to have to trust a third party to handle your money. Okay, so let's get started. This is the Hero platform, which I kind of alluded to before, but it's a tool to help guide you through creating Stack smart contracts. So in here, you can keep your projects organized and access a hosted, full-featured development environment for you to build and test your smart contracts. So let's get started by creating a project. And you can choose from a few different templates we have, but I'll start with just a blank project. So here the platform is spinning up a hosted development environment, installing everything I need to develop smart contracts. I'll also mention in the Hero platform, you can also access our hosted chain hooks service, which allows you to set up custom event streams for Bitcoin layers and trigger actions based on those events. And you can also generate and manage API keys to interact with Hero APIs, such as the Stacks blockchain API, the Ordinals API, and the metadata API. I'm actually going to go ahead and generate one of these right now because it's going to come into play later on in our process. So I'm going to call our application fundraiser dApp, and I'll give it a short description, and I'll generate an API key for that. Okay, let's go back over into our project. So I've created this blank project. First thing I'm going to do is add a contract. Let's call it campaign funding. So we are then going to be given a blank template for our smart contract. And again, smart contracts in Stacks are written in a language called Clarity. And let's just go ahead and dive into it with some code. The first thing I'm going to do is I want to store my campaigns in some kind of data structure. So I'm going to use a map to do that. I'll just paste that in here. This is a data structure to store campaigns. And really quick, as we go through this, if you feel like the syntax is a little crazy, it is. If you don't have experience with like Lisp-like languages, there's a lot of parentheses. But once you get the hang of it, it's pretty simple because it's completely decidable and it's interpreted rather than compiled. So that means it's really self-evident. Like the code is 100% descriptive of the contract's behavior, which is a really nice feature to have when it comes to something like smart contracts. At the end of the talk, I'll send you to some resources to learn more about the syntax, but we'll just skim over some basics here. So this is a data structure to store our campaigns. It's a map where the key is an unsigned integer, which is going to be our ID for our campaigns. And then the value contains the campaign's owner, its title, the funding goal, the current funding amount. And then this end block height is going to store basically the duration of our campaign, which will be finished once the chain reaches that block height. Okay, so next, so we have our data structure, but how do we set data in it and pull data out? Let's start with a function to actually read a campaign out of our map. So this is going to be a read-only function. So we'll put it under this little comment. And these are just for help organizing. They're not, you don't have to follow them if you don't want to. You can just delete it and start from scratch, but just to keep your contract a little organized. So this is going to retrieve a campaign given an ID. And if the campaign is not found, it will return this error, which we actually have to define in a constant. So I'll go ahead and do that up here under my constants. And this is just a way to kind of set some ground rules for what errors the caller of your contract can expect to receive if something goes wrong. And then it will return our campaign if it's found. So finally, let's add a function to add a campaign into our map. This one's going to be a little bit more complicated. And this is not going to be a read-only function because we actually want to be storing data on chain. So this is going to be a public function. So I'll paste this in here. And then I'm also going to need to define a couple of constants as well, a new type of error. And then we are also going to be using a nonce to help generate our campaign IDs. So yeah, let's walk through this bit of code here. So again, notice that this function is a public function. Our other function's a read-only function. This is exactly what it sounds like. Read-only functions can read data from the chain, and public functions can change data on the chain. Public function calls always will create a transaction that needs to be paid for by someone with a gas fee, and then it needs to be mined and confirmed on chain. Whereas read-only functions respond instantly and they don't create a transaction. So this function sets a value in our campaigns map, and it uses these three function arguments to set the title, the goal, and the expiration block height by adding the current chain block height with the desired duration that the caller of this function wants. And it also initializes the total funding amount to 0. At the end, it increments the ID nonce so that we can use it for next time, so that every campaign has a unique ID. And then it returns the ID of our newly created campaign. And if anything goes wrong, it just returns an error. Okay, so now we have a very simple but functional smart contract, which allows us to add campaigns and retrieve their data from the chain. So now let's think about what we want to do next. We would want to test our contract, make sure it's working the way we expect. If I hover over a function, I see this prompt to call that function. So I'll click on it and I'm prompted to start up a DevNet, which I'll go ahead and do. Let's talk about DevNet. So in order to call a function in a smart contract, the contract has to first be deployed on a blockchain environment. The contract code itself just defines the interface for the rules of interaction on the blockchain. But in order to actually make those interactions, to store data and make transactions, a blockchain needs to exist. And DevNet is your own personal sandbox blockchain. No one else can see it, and you don't have to worry about breaking it. You can tear it down, you can spin it up, you can deploy garbage code to it, you can deploy good code to it, whatever you want. You might also be familiar with the terms testnet and mainnet. And yeah, you can think of DevNet as your own local computer, whereas testnet is a public staging environment and mainnet is production, where the money is real. So in order to test our newly created contract, we're going to start up a DevNet, and then our contract that we're working on here will be deployed to our DevNet. And a bunch of test wallets that are pre-funded with Stacks tokens will be automatically generated for us to play around with. Because DevNet is like your own sandbox blockchain environment, it's a great place to quickly make changes and iterate on your smart contract in the early stages of development. You can also run a DevNet locally, but the Hero platform can run a fully hosted DevNet for you to make it a little bit easier so you don't need to run Docker locally. This is especially useful if you're concerned about like memory usage on your machine. Okay, so I'm not sure why it's not started. Let's refresh and see if it's able to connect here. Sometimes our tools don't always work the way we want during a demo. Okay, awesome. So our DevNet is up and running. So let's go ahead and go back to calling a function. Okay, so you'll see this little message just for a couple blocks because the DevNet has to actually deploy my contract first. Okay, and there it went away. So now we're able to call our functions in our DevNet. So first we're going to call get campaign. We know we don't actually have any campaigns yet, so I'll expect this to return an error, but I'm just going to call it anyway. Okay, yep. So there it returns our not found error, which we defined as this unsigned integer of 2. So now let's call add campaign. And then again, because this is a public function, it's going to create a transaction on chain. So we need to call it as a specific wallet because someone's got to pay for the gas, right? So this call function as is a list of our automatically generated wallets for testing. So let's go ahead and just choose wallet 1. And now we can enter some values for our function arguments. Let's start a campaign to create the world's biggest pizza. How much is that going to cost in microstacks? I don't know. I'll just put a big number in there. And let's say that we want our campaign to run for 200 blocks. I'll click submit and I'll see that my transaction was submitted. I don't actually immediately see the result of my function call because my transaction needs to be mined and confirmed in a block first. So let's click to view our DevNet activity. Here, what we're seeing is a visual representation of the blocks in our DevNet. And because this is just my own little sandbox blockchain that I just started a couple minutes ago, there are only 6 blocks that have ever been mined in it. I can see that usually block 4, I can see that my campaign funding contract was actually deployed in my DevNet like we expected. And I can actually click on this to view the full Stacks Explorer view against my personal DevNet. So I can see this contract deploy was confirmed. I can scroll down and see that my source code here is what I expect it to be. And yeah, so I can see everything in here. I can poke around in here if I don't want to use the view in the Hero platform. Oh, and there we can see my function call just went through. But let's go ahead and check it out here in the platform. So here's my add campaign transaction, and I can expand this to view the details of my function call here. It looks like it was successful. My campaign was added. It returned the ID of my newly created campaign, which is 1. So awesome. Let's go back to call get campaign again and just see if my function works as expected. I can put in the ID, call it, and then I will get back my campaign data. So we've now confirmed that setting and retrieving data is working as expected on chain with our smart contract. Okay, so what now? Let's take the next step. Obviously, if we were really building a real production ready app, we would probably want to add some more functionality to this, but just for the sake of time, let's take a view at the whole stack here. So let's take the next step and start to integrate this contract with some application code. So here I've created a really simple Next.js app just locally, and I'm currently running it here on port 3000. So I'll open it up here. It's like just the most boilerplate of Next.js apps you can imagine. So let's skim through the overall structure of our app code. It's very simple. There are really only 2 pages. One page here where you can view the campaign details. And there's a page to allow users to add a new campaign. And then there's this component connect wallet, which is a button to allow users to connect their wallets to the web front end. And then finally, there's this file in utils called Stacks API, which has this constant Stacks API root URL. And this stores the root URL of our Stacks blockchain instance that we're developing our app against. So to start with, I don't want to develop my app against Baynet. I want to develop my app against my DevNet. So how do I do that? I can actually go into the Hero platform, go into my DevNet details, and open up this interaction console to grab the Stacks instance URL. And then I can just paste it right in here and save it. So if I want to develop my app against testnet, I would use the testnet API URL and so on. Okay, so next, let's take a look at the very simple functionality of the app. So on this page, campaign/1, you can view campaign info by ID. So we know that we have my pizza campaign that I just made on my DevNet right now. So on this page, what I'm seeing is the details for my pizza campaign. Obviously, this UX could use some work, but what we're doing here is my application is calling my read-only get campaign function on my DevNet to retrieve on-chain data and display it to the user. Let's talk about how this is actually working in the code. If we open up the campaign details page here, the magic is happening here in the call to call read-only function. This is an imported function from the Stacks.js transactions library, and we simply pass it some options. So the contract name, the function name, the arguments that we want to call the function with, and we get the response back. Then we wrap it in this helper function CV to JSON, which converts a clarity value to a more friendly, format JSON. And that is also imported from a Stacks.js transactions library. And then we're able to get the campaign data from the chain and simply display it to the user in our view. So now let's talk about allowing users to submit transactions in your app. This is where the connect wallet flow comes into place. So if I go to campaign/new in my little test app, I see a connect wallet button, and I'm prompted to first connect a wallet to be able to add a campaign. The first thing to do here is I need to set up my wallet to be ready to use with my DevNet with one of my test wallets. So let's close out of this and go back to the platform with my DevNet interaction pane. I can go and view my wallets, and I can view details for any of these test wallets. And don't get too excited about being able to see these secret keys because this is all fake money. I'm going to be using the Leather wallet, and I'm going to be using my wallet 1. So I'm going to go ahead and click Connect Wallet again. I'm going to restore a wallet from an existing key and paste that in. And then this doesn't really matter because it's just for testing purposes. So once this is connected, I can see that my funds show $0. But what I'm expecting to see is, 100 million stacks. So what's going on there? I actually still have one more step to do, which is I need to add my custom network into the wallet. And then I'll be able to access my fake pre-funded wallet. So I can again go into my DevNet and copy the URL where it's living at. And then I can add a network in here and call it, fundraiser DevNet, add the network. And now I'm able to see my funds that I expect. Again, don't get too excited here. I also wish this was real, but it is not. Let's go back to my test app now. Okay, so now that I'm connected to my wallet, I can go through the whole flow here. I can choose the account that I want to connect to, and then the form to add a new campaign will display. So then I can fill out this form. Let's say I want to write a crypto poetry book, and I'm going to need at least 5,000 stacks to do that. And I want this campaign to run for 1,000 blocks. Okay, so when I click submit, I am prompted to approve this transaction with my connected wallet. Many of you have probably seen this view before. Once I approve it, I can see here that my transaction was submitted and I've got my transaction ID there. Obviously, this UX needs a bit of work, but it serves the purpose. So now we're waiting for our transaction to be mined so that our new campaign will be created. We know that we expect this campaign to have the ID of 2, but it doesn't exist yet because we're still waiting for it to be mined. So let's peek into our DevNet in the platform here. We can see the transaction hasn't yet been confirmed in the latest block. And we know from looking at our app that we don't see anything here. This is another really interesting limitation of Web3 development, and there are lots of different strategies to handle this to create a smooth UX. I'll just mention this briefly, but I won't have time to dive into it too deep. But one strategy that I've personally found really useful is using chain hooks to have your app notified when new blocks are confirmed so you can keep your application updated appropriately and just have full control over the user experience. Perfect timing. This transaction was submitted. here in block 15. And my second campaign, well, let's see if it worked. Yep, my second campaign was created. So if we go back into our app and we refresh this page, we now see the campaign details. Okay, so now let's take a look at the code that makes this happen. Let's open up the new page. You'll see it renders this connect wallet button. Let's go into there. This button, the magic again here is in Stacks.js. So it imports the show connect function from Stacks.js connect library. And this is where it's being called. You can pass it some details about your app, and then you get access to a couple of callbacks that let you handle the flow of what should happen after the user connects their wallet. And then through the user session here, which is also imported from Stacks.js, I can access the connected user Stacks address, but it's completely secure. So my application obviously never has any access to the user's sensitive data. In this component, I've wrapped the data about the connected wallet in a React context to allow the state to be accessible globally in my app code. So let's go back to the new page. This page renders that form you saw where the user can type in details about their campaign. You'll see a bunch of labels and inputs. And then let's take a look at how the transaction to create the campaign is being sent to the user for approval. Again, Stacks.js, we just keep going back there. So if you look at open contract call, this function is imported from the connect library. And when I call open contract call, I pass it some configuration about the contract call that I want to make. The contract, the function arguments, and of course, the network, so that it knows that I want to call this function in my DevNet. And then I pass callbacks to handle what should happen in my app once the transaction is submitted. Here in this on finish callback, I can actually have access to the transaction ID and then do whatever I want with it. In this little test app, I'm just plopping it down at the bottom of the screen, but you can imagine some very useful things you could do with it. Okay, so you've now seen a little slice across the stack of the process of building a decentralized app on Stacks. We wrote a functional smart contract, and we integrated some front-end application code with our DevNet to make calls to that smart contract to fetch data and submit transactions. So what would our next steps be if we wanted this app to actually be real and production ready? So first, we'd need to finish out the functionality of the contract. There's a lot of missing functionality if we wanted to build a real crowdfunding app. We'd want to create functions to let users make contributions to campaigns, transfer Stacks tokens from the contributors into the smart contract, add some logic to release the funds to the campaign owners when a campaign is finished. And again, that's an area where chain hooks might be really useful as well, things like that. Next, we might consider adding some unit tests for our smart contract to enhance maintainability and give us extra confidence. There's another hero tool called the Clarinet SDK, which makes it really easy to write and run unit tests for smart contracts. There's actually a YouTube video, I think I am the one talking in it, about Clarinet SDK and building unit tests for your smart contracts in the Hero platform as well. So if you're interested in that, you can look that up. And then, if you're used to writing unit tests in like JavaScript, you'll be very comfortable writing and running these unit tests for your smart contracts with the Clarinet SDK. And then, of course, we'd want to build a whole front end and make it look nice. I obviously need some help from a UX designer to do that. And then there would probably be more application data that we'd want to store besides just what is stored on the blockchain. Remember that like storing data on the blockchain is expensive, and again, it lasts forever. So there are other strategies to store application data. You can even do it in a fairly decentralized way despite it not existing on the blockchain. So there's different strategies for that. So in this case, it might be something like we would want to allow campaign creators to upload an image or add a project website to their campaign. That stuff isn't necessarily critical to live on the blockchain, but it's important for our app experience. So we might consider adding a database to store things like that. And then once our application is fully working, we're done developing it, or at least we feel pretty confident, we would then just deploy our smart contracts to the Stacks testnet as a staging environment. And in testnet, you can use a faucet to get fake Stacks tokens to test your app with. And then mainnet is the real deal, where the money is real. So yeah. And the Hero platform can help you do all of that with the deploying your contracts with a feature called deployment plans. All right, so that's what I've got for you today. You can find some references and links at hero.so/cheat sheet. And that includes the smart contract code that we worked on today, along with some more full-featured application code for our app idea. Again, my name is Leah, and we always want to hear about your experiences with our tools, so please reach out on the Stacks Discord to chat. Myself, I and my team members hang out on the Hero platform channel in the Stacks Discord all the time, so if you ever have any questions or suggestions, please come and find us there. So yeah, thank you so much, and happy building.
Thank you very much, Leah. And continuing the conversation of building, we've talked about every corner of the Bitcoin ecosystem today, except Bitcoin DeFi properly, and what it means, having just recently had the halving and its impact on Bitcoin DeFi today and in the future. That said, let's welcome up our next panel and their moderator, Tycho of Zest Protocol and Stacking DAO. Tycho, the floor is yours.
Awesome. Thank you very much for that, Kyle. And I think we're on. So welcome everybody. This is the most exciting panel of all, right? So you definitely are in the right place, right time, because we're going to talk all about Bitcoin finance and decentralized finance. So yeah, what the halving means for Bitcoin DeFi. I mean, we have here Dylan from Bitflow, the stable swap on Stacks/Dex aggregator / Runes Dex coming up, which is also very relevant with the halving. Then Hadan Espridiao from Alex, right? The, I guess, Bitcoin finance layer and juggernaut in the space. And Jacob Schillinger from Hermetica, structured products for BTC on Stacks, and more, I think, announcements coming soon on what to build on top of that. Yeah, and I'm Tycho Onash, your host, or I guess we'll sort of do maybe a bit of a freestyle here between us. But yeah, I'm the founder of Zest Protocol, lending protocol built for Bitcoin, also contributor at Stacking DAO, which is the LST, liquid staking on Stacks, and also co-host of the Stacks DeFi show together with Hadan as well, where every Tuesday 10 a.m. Eastern time we talk about Stacks DeFi and Bitcoin DeFi more broadly. But yeah, so the halving has just happened, right? Bitcoin fees or Bitcoin block reward has been cut in half. So miners need more transaction fees, right, to secure the network, and those transaction fees are coming in big ways, right? I mean, they were provided in big ways at the moment of the halving by people who build applications and people who use applications, right? So it's really great to be here and chat about that. But maybe just like before diving into anything, we just want to maybe hear everyone's take, like what does the halving mean for Bitcoin DeFi, right? Maybe Jacob, you wanna take that first?
Yeah, for sure. Thanks for having us. I think for me, the most important thing about the halving is to see that the Bitcoin protocol is functioning as intended, in that the halving really enforces the most important feature of the protocol, the 21 million cap. By halving every 4 years, we asymptotically approach the 21 million Bitcoin cap in 2140. And so seeing that this protocol, the couple lines of C++ code in Bitcoin Core that define and execute the Bitcoin subsidy halving, execute flawlessly for the fourth time, can give all of us building and using Bitcoin a lot more confidence in the protocol. And really the whole world is watching us, right? And so seeing that everything functions exactly like it needs to function, and the most important feature is enforced, can give everybody watching Bitcoin the confidence that this is the foundational layer that we need to build Bitcoin DeFi on top of.
No, very good points there. Very good points there. Hadan, Dylan, anything that comes to mind in your thoughts as you're thinking about this panel, right? What does the halving mean for Bitcoin DeFi? Maybe Hadan, you wanna take it next?
Sure. Yeah, so I think particularly with this halving, we've seen, I think, the progression of the narrative of Bitcoin transforming from a money layer increasingly to a data layer. Arguably, we saw this begin in January of 2023 with the Ordinals protocol, to be followed in March with Domo's release of the BRC20 protocol and the mass popularity that brought along. And with this halving cycle, it coincided with the release of Rune's protocol by Casey, and all the excitement that occurred there, where we have another iteration of Bitcoin as an information layer, where people are trading Bitcoin at very high premiums, very high fees, for the data that is inscribed upon it, rather than necessarily just for these satoshis as a monetary unit. And I think for Bitcoin DeFi, this really signifies that evolution that we're seeing, where Bitcoin becomes the base layer, not just for the transfer of money and value, but for information as well. And it sets really the basis on which the most valuable data in the world, really financial transactions, the settlement of financial transactions, increasingly the tokenization of real world assets will occur on Bitcoin. And as those assets then look to transact trustlessly, transact securely and efficiently, they will come to Bitcoin DeFi as well. So I think it's a very smooth and a very exciting progression of that narrative. And there couldn't be a better time to be building, I think, Bitcoin DeFi than at the present moment.
Very interesting. So yeah, what the halving means for Bitcoin DeFi, I guess we have security and being a secure base layer. The other one, what Hadan mentioned, is being that data layer and evolving into a data layer. Dylan, anything to add there, perhaps on the Rune side of things, or any other thoughts you might have?
Yeah, sure. I think I mean, this for me personally is the most excited I've been for a Bitcoin halving. I think we have a first here where, usually if you look at the past 3 cycles, it sort of, signifies like the beginning of, the early stage of a bull run. But I think we had, Bitcoin recently hit an all-time high before the halving for the first time ever. So definitely will be interesting to watch how that plays out. Like it or not, people get excited for number go up and the casino of it all. And it seems like with runes, the crypto casino has returned to Bitcoin in a major way. The block rewards get cut in half, but miners are making 3 times as much. So I'm sure they're very happy right now. I think the Epic sat sold, I saw today, for 33 BTC. So congrats to the miners there. But yeah, I think hopefully with all this excitement, right, people and when they're cashing out of this crypto casino, this degen activity, right, they're cashing out in Bitcoin, which is very different, from other DeFi activity where you're cashing out in ETH or Sol, right? So I think that hopefully people stick around for the sound money properties of Bitcoin as well. And of course, with high fees, I think this also drives the need for L2s, right? And I think the conversation is no longer if we need layer 2s, but which layer 2s, and the ones that have spent the previous bear market, I think, building out this infrastructure, dev tooling, attracting liquidity, those are the ones that are going to win.
Yeah, no, I think that's a very good point, and maybe if we need to jump into a little bit here as well, right? I think this halving is very different from ones we've seen before. I mean, because there are many more use cases of Bitcoin 01 than have been there before. And those use cases want that expressiveness, right? Like they want to, like runes or BRC20s or ordinals, right? Like to really leverage the power, then they need to move somewhere where they can become more programmable, right? So I guess that's where, you know, a lot of this drive towards, you know, Bitcoin L2s comes from. And then once you have things that are more programmable, then, you know, you have more ways to express rules and contracts, and then, you know, you have Bitcoin DeFi, right? So that's a really, really exciting kind of cadence to sort of, you know, witness there. And yeah, I mean, Jacob, you've been running around in this space for quite a while. You know, you're building on stacks, right? I guess like all of us, so we're building on stacks and on Bitcoin O1 kind of at the same time. How do you sort of like, you know, view the trade-offs of like, you know, some DeFi happens on Bitcoin L1, but like most of it kind of happens on L2s, right? How do you view those trade-offs when building Hermetica? Are there those trade-offs maybe even to begin with?
Yeah, I think there's a very significant trade-off between the main chain and L2s, be it stacks or other ones that are coming online now. I see it as the L2 is really the settlement layer for the financial system, and there's going to be significant transactions that need to happen on L1. They're going to have significant amount of value, and only those will make sense to happen on Bitcoin L1. Also, obviously, and that's the most important part for me as a builder, the user experience of L1 is subpar if you compare it even to the traditional financial system. And as a builder, you always need to build something that is 10x better, at least what people say, right, in order to displace a incumbent. And so we're simply not able to build a UI UX on L1 that is able to be 10x better as the incumbent that we're facing. And so that's where L2s come in. And the trade-off is essentially we give up some of the security. There's definitely a less strong security assumption on an L2, but we gain, and now this is becoming more relevant for stacks with Nakamoto, we're gaining a much better UI UX. So that's what I'm really excited about. We're gaining faster transactions, we're gaining cheaper transaction, but most importantly also the expressibility of smart contracts, which allows us to express all the applications that we want to build that we see maybe in other ecosystems on the mother chain.
Mm-hmm. No, very clearly. So I mean, both, you know, Hadan and Dylan, you guys have worked both on Alex and Bitflow, you know, quite extensively with L1, and now with the Runes launch, I saw some very interesting announcements, you know, coming from your end. Maybe Hadan, to pass the question first to you, like how do you see this interaction between L1 and L2 develop, you know, as Bitcoin DeFi further matures?
Absolutely. I would say, you know, to build on what Jacob said, that having a friendly user interface and having really a seamless connection between Bitcoin layers is really fundamental for mass adoption. And when Alex has the point of view or describing ourselves as building a DeFi layer on Bitcoin, the idea is that we enable users to bring L1 assets. We began with BRC20s that could be bridged to the stacks L2 on Alex through the Xlink bridge. Just recently, we've put into place the Runes bridge, both the peg out and the peg in. And so Runes can be bridged to the Alex L2, where they can be put into AMM dexes. They can be swapped for other SIP10 tokens or for tokens that are bridged to other layers. And the importance there is really because when users come and they mint a rune and they want to trade it, they'll find that if you do it directly on the L1 through a partially signed Bitcoin transaction, it's relatively technically involved. And there has to be a counterparty that takes the trade. Whereas with an AMM DEX, at any time of day, there's an instantly quotable price. And this isn't a functionality that you can do directly on the L1. It requires scalability. And so that's why we see ourselves in bridging those assets over, and in the process really being liquidity aggregators, where now, say, projects such as major meme coins on stacks that have already created BRC20 tokens, now if they want to create Runes tokens as well, instead of that liquidity being fragmented, through Alex and the X-Link bridge, they can go from the BRC20 to runes. And I think that that seamless operation of one-click bridging between these different L1 protocols, between L1 and L2, really make this very exciting and allows us to create a whole that is greater than the sum of the parts. And so in creating that ease of use and building out that ecosystem is what our focus will be on in the coming weeks and months.
Got it. That's I think that's exactly what like very nice summary of I think what we all have in mind here on the panel. So that's really great. And yeah, I guess Dylan, I mean you guys have built very successful stable swap on stacks, are now moving also into the runes space. Do you see that as yeah, is that a complementary thing as it were to each other, or and how do you sort of see that further develop, I suppose, as we maybe head towards the next halving?
Yeah, sure. I think the big pie in the sky is to make it easy for liquidity in the Bitcoin ecosystem to flow, right? That's sort of where the name comes from. But as it relates to layer 1 and layer 2, like one of many reasons why we built the AMM functionality on stacks is the ability to have read access to Bitcoin state, right? And so for us, providing a better user experience, first of all, we're happy to have great wallets like Lether and Xverse that make our job a lot easier. But we can also provide these experiences where you're performing a Bitcoin swap, for a Bitcoin for a stable coin. It's a Bitcoin transaction, through transaction bundling, through atomic swaps, and through the AMM. Or if you're adding Bitcoin liquidity to a stable swap pool with different flavors of Bitcoin, like SBTC, XBTC, ABTC, right? You're sending a Bitcoin transaction. And if you're claiming your rewards, you can claim your rewards in Bitcoin, right? So, this is definitely some of the stuff that we're excited about, building deep liquidity around different flavors of stablecoins, different flavors of Bitcoin. And yeah, I think Jacob mentioned one thing about how you can have, a 10x improvement experience on layer 1, right? And I think we didn't really have, I'll push back on that a little bit, just because we didn't really have tokens defined on Bitcoin a year ago, right? Or a little bit over a year ago. People thought all this stuff was impossible. So I think that in itself, Liquidium is a great example that it's a 10x improvement because we didn't have anything like this before. But I totally agree that the next 10x improvement is using the stuff that all four of us are building.
No, that's very exciting. So as we kind of look at this halving, I think also what everyone is really dying to know or really interested in knowing is sort of where are we and where are all of the applications that we're working on by the time of the next halving, right? So maybe we should do a bit of prediction time in some way. Right. I mean, last halving was sort of in the depths of COVID. Now we are here. So much more activity, so many exciting things happening. So yeah, I'm not sure who wants to volunteer for that one first, where Hermetica, Alex, Bitflow are at the next halving. I see Jacob looking very eagerly for this one.
I can take it. I mean, it's really challenging to look into 4 years into the future, because it's like there's so much happening in just 4 weeks, that everything is changing so rapidly and improving, and it's really exciting. But I'll give it a shot. We are about to release our Bitcoin-backed interest-bearing stablecoin, USDH. Very excited about it. And if I look into the future in 4 years, I see USDH as a major component of the Bitcoin DeFi ecosystem. It's going to be half of a lot of transactions, be it in trading or in lending. And most importantly, I see USDH as a stablecoin that is completely outside of the banking system, and therefore extremely difficult to control and censor. And that is very deeply tied to the mission of Hermetica and dear to my heart, and I think it will be increasingly important. On top of that, we'll give the world access to a Bitcoin-backed interest-bearing stablecoin, so like an interest instrument that will allow people to earn a very significant interest that is 100% crypto native, that will allow them to protect themselves from the inflation that I think we'll see in the coming years to become very rampant and very significant. So that is what we're excited about in looking into the future.
Awesome. Maybe real quick, Dylan, in 40
Sure.
seconds before passing it to Hadan.
Yeah. I think Bitcoin is our best chance to have separation of money and state. I think the use case only grows stronger before the next halving. And I think it's extremely important that we continue to build out these protocols. You start with the best form of money, you build these protocols around it, like Bitflow, Hermetica, Zest, Alex, right? So that you can swap with Bitcoin, you can earn with Bitcoin, you can borrow against Bitcoin, you can borrow Bitcoin itself. Building all these primitives around it, I think, is going to allow us to not only flip, Ethereum DeFi, but I think Bitcoin DeFi is going to be the bedrock of the new financial system.
Awesome. And Hadan, any final words before we reconvene in 4 years at the next halving and look at Alex's state?
Sure. I think really the key to Bitcoin DeFi is use case, and use case. And for example, with runes, from being purely meme coins, as some might call them, already we're in talks with some projects about IDOs on Alex using runes that will allow them to become governance tokens and utility tokens. Looking ahead this year, we're doing work with yield-bearing stable coins, yield-bearing Bitcoin assets. I think these are really important unlocks, as have been mentioned, to lead to the growth and unlocking that Bitcoin liquidity. And I think the long-term use case for the infrastructure that we're building today is, as we see 360 trillion in global assets become tokenized, go on chain. And when they want to transact, they will come to the most secure layer, the most efficient layer, and that will be Bitcoin DeFi. And so that's really the future that we're building for, not to compete with Ethereum or Solana liquidity. We're here to compete with the traditional finance itself, and that's what we're all building towards.
There we go. So as traditional finance kicked off this bull, next bull, next halving, it will all look very different, and maybe we are in that position with many others that are building on Bitcoin. So with that was our Bitcoin DeFi chat. Make sure to follow Bitflow, Hermetica, Alex, and Zest Protocol, of course, as we then reconvene in 4 years and look what we have achieved for Bitcoin finance. And I'm handing it over back to Kyle to guide us to the next part of this exciting event.
Thank you so much, Tycho, and to our panelists for all of their thoughts and insights as we continue this very exciting day about building on Bitcoin. And that's what our next panel is about to talk about. We've now covered what's happening, what had happened, and what's to come when we look at building on Bitcoin. But now let's talk a little bit about getting back to work and building on Bitcoin and the upcoming hackathon. Dom, Phil, and our moderator, Adam, yours.
All right. Hello, everyone. Happy to be here. My name is Adam Hahn. I'm the head of community programs at the Stacks Foundation, and I am joined by two special guests, Phil and Dom, from the Easy A team. Phil and Dom, please take a second to say hi and introduce yourselves and give us a little background of what Easy A is.
Definitely. Thanks very much for having us on, Adam, and it's a pleasure to see everybody today. I'm Phil, co-founder of Easy A. Little background on Easy A: we are Duolingo for blockchain. We have been getting people pulling with that, showing them what they can do in the Bitcoin economy. A little bit of background on myself. First got into Bitcoin in 2013 through actually Bitcoin mining. Founded Easy A about 3.5 years ago. Yeah, grew up in the UK. Before that, my undergrad at Cambridge University, but Dom is also my brother. He did his undergrad in the States.
Cool. Thanks, Phil, for the intro. A bit about myself. Like Phil, got into Bitcoin relatively early, and ultimately after that, decided to go to university at the University of Pennsylvania. Wharton. Did an undergrad degree in finance out there, and then worked at Blackstone afterwards. Before getting hired by Travis Kalanick, the ex-Uber CEO and Uber founder, to go work at his Cloud Kitchens startup, which has now evolved into a pretty big company. But a couple of years ago, decided to join Phil and really found EZA with the goal of getting back to our blockchain roots and get people actually learning about some of the world-leading blockchains out there. And really getting them to build long-lasting projects in the different ecosystems that existed. So yeah, fast forward to today, really excited to be working with Stacks, getting tens of thousands of new builders onto Bitcoin, and really showing them the possibilities of what exists in the huge $1 trillion asset class.
Awesome. Thanks to you both. So let's talk a little bit about that. So EZA has this incredible app where we have nearly 100,000 builders who are learning about stacks in that app. And we also have a hackathon or a have-a-thon that's going to be taking place this weekend in Boston. Can one of you share a little bit more about, the structure that the app plays in preparation for the hackathon, and also what can people expect who are going to be participating at this upcoming hackathon? What are the things that they can look forward to?
Definitely, I can take the app and I'll hand it on for the hackathon. So the app really, you can think of it basically really as being like Duolingo for blockchain. In terms of our stacks crash course, the 60 days of stack allows anyone to go from knowing very little about how building on Bitcoin actually works, all the way through to learning clarity, which is of course the smart contract language that powers smart contracts on stacks, and then also building their own Bitcoin DeFi DApp. So going all the way from zero, all the way up to deploying their very first smart contract and preparing them for the hackathon. I'll hand over to Dom to chat about hack.
Cool, thanks, Bill. So ultimately, the goal is after the builders and developers have all completed the Stacks challenges, they show up to our hackathons. And this weekend, we're actually hosting a hackathon at Harvard, together with world-class universities all across the East Coast. So we're expecting, really great students, recent grads, and also more experienced devs who've graduated from Harvard, MIT, and a ton of great universities all across the East Coast to attend in person and ultimately show us what they built after learning about the Stacks ecosystem through our in-app Stacks challenges over the last month and a half. So really excited to see what they build. At our last hackathon, actually in London, there were hundreds of devs and ultimately around 50 projects that got deployed at the end of the hackathon. And many of those are still building, getting accepted into some really great accelerators in the ecosystem. So hoping for similar results at this one, and excited to see who ultimately walks away with the grand prizes.
Awesome. So we have just about a minute or so left. I guess my last question is, what should people do who are interested in a hackathon or in this hackathon, but maybe they haven't signed up yet? Where should they go to get started? Where should they go to learn more?
Yeah, so start off with the EZA app, start learning about stacks. Even if you can't come, one of the best ways to actually start learning. You can do it on the go, whether you're just on your way to work or in the car. You can get out the app and start learning. And then second of all, make sure that you do check out our Twitter, of course, and there's the Stacks Harvathon link as well, which you can check out in order to register.
So we have this upcoming hackathon this weekend, and then also, we've been working with EZA, as Phil said and Dom said last fall, but we also have another hackathon coming up later next month. So for those who are going to be participating or attending the Consensus Conference, be sure to keep an eye out for the hackathon that's going to be taking place at Consensus. The EZA team will be there, as well as the Stacks ecosystem folks will be there as well. So we'd love to see you there. And if anybody has any questions, you can find Phil and Don. Where can we find you on Twitter, or where can people find you to get in touch with you and to engage with you guys?
Yeah, we'll see everybody at Harvard or in Consensus, and of course online. Our Twitter handle for EZA is @EZA_app, and my Twitter is Phil, and Dom's is DomQuark.
Thanks, everyone.
Awesome. Thanks, guys. Looking forward to this weekend.
Thank you, Adam, Dom, Phil, and the entire EZA staff. And thank you to every single one of our speakers today for sharing their thoughts and insights and predictions for where things may go around the Bitcoin ecosystem. Thank you to each and every one of you for tuning in today at the Bitcoin building on Bitcoin virtual edition for and around the halving. This halving and season of building on Bitcoin really is different, as we've discussed all day, from the evolving L2 landscape to the expansive modularity of Bitcoin's technical stack, and even the potential of the physical infrastructure to come, thanks to the innovations developed around Bitcoin over the last 15 years. But also looking ahead at interoperability, how Bitcoin and artificial intelligence may intersect, the potential of Bitcoin DeFi in the coming years, rollups, the upcoming Nakamoto upgrade, Bob, Near, and so many other ecosystems and layers that are contributing to the success of the Bitcoin ecosystem. It has been my pleasure as your host today, Kyle Ellicott, to walk you through this next season of building on Bitcoin. Everything discussed today was for educational purposes only. Make sure to do your own research and not financial advice. And that said, two very exciting shout outs before we come to wrap. We are coming back live. Builders Conference will kick off in Nashville. Stay tuned for more information around that. Bitcoinbuilders.io to get more. Sign up for a speaker, get your ticket early. Also, find your Mojo. If you haven't seen already, Mojo, a brand new orange block with a lot of swag and even more love for Bitcoin than all of you and us today here at Building on Bitcoin. Mojo is cute, fierce, and determined, and very, very orange. And it represents a beacon for building on Bitcoin and all Bitcoin layers across the world. Check out more around Bitcoin and the celebration of the Bitcoin halving at bitcoinismore.org/mojo. Again, everyone, I'm your host. Thank you very much for tuning in. Thank you to all of our speakers, to all of our sponsors, partners, and those behind the house making today special. Take care, and until next time, we'll see you soon. Building on Bitcoin, the halving edition. Take care.